our creative landscape. Coming soon on the NDTV network.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on
Hello and welcome. You're watching NDTV Profit and this is Ask Profit. I'm Mahima Vachajani and with me is Puneet Jhaveri. And before we move on to the queries that you have for us on the show today, let's take a quick look as to how the markets are doing. Well, let's try to pull up the Nifty 50 and see as to how the overall sentiment is. Right now, the Nifty 50 is completely in the red, down by about 0.2%. The Bank Nifty also in tandem with where the Nifty 50 is. Let's try to pull that up and see. The Bank Nifty, in fact, seeing further pressure as compared to where the benchmarks are. It's down by about 0.4%. The Nifty 50, let's try to pull the heat map up. I think something that's really topping the chart today is Titan for Nifty 50 and largely on account of the business update coming in. Of course, they also did their con call with regards to Beyond and gave a lot of insights as to what their plans are with regards to this counter. But the other space that's doing well is also IT. So Wipro is other counter which is doing fairly well, up 2%. Then there's Sun Pharma, which is up also 2%, and some IT names, HCL Tech, Infosys, Tech Mahindra, all up by about 1% each. Something like a Hindalco is also up by about 1%. But something that's not doing well on the flip side is Sipla. You have Tata Motors PV, which is down 2% as well. Maruti Suzuki down 1.3%. Max Health, HDFC Bank. HDFC Bank continues to be under pressure, down by about 1% today as well. Let's try to pull up the advanced decline ratio and see as to how that is faring, and then also the sectoral heat map to see as to what sectors are doing in trade. There you go. There is 1255 odd advances versus that of 1176 odd decline. So slightly in the favors of the bulls, and the chart throughout the trading session till now has been in that crisscross range. So, it's a difficult day of trade, but broader markets doing slightly better, at least the mid-cap 150 is what we are seeing right now, Puneet. And that's reflected in the advanced decline ratio chart as well.
Most certainly, and the broader market has actually been one of the key strengths for the market in this point of time, while there have been a lot of casualties over the last few days. When we pull up, the BSE 500, that will be a good picture, because while we have seen something like Trend get hammered in trade yesterday because of the business update, you also had V-Mart, V2 Retail also taking the brunt of that pressure. Today, CSB Bank, post that quarterly update, was up. Now, second consecutive day where the stocks are under pressure. ZF Commercial is a surprising name there. That's also down 2.9%. But on the uptick, Kalyan Jewelers on the back of updates. Senco is also doing very well. We've also seen a very big move come on KPIT after a really long time. While quarter 3 updates and previews don't estimate too much growth, it's a positive session nonetheless for this counter. So overall, that's largely the rest. But Mahima, with the first query, what are you picking up?
Right, so the first query that we have is from Mr. Murli, who's writing us from Bengaluru, asking about TBO Tech. He's holding 200 shares, bought at the levels of 1626. And the current market price of the counter is 1578, so he's sitting on a loss of around 10,000 odd rupees. Wants to know as to what should be the next course of action. And of course, to answer these questions, we're joined by Avinash Gorakshakar, who's the founder and head research at Avinash Mentor, joining us now. Avinash, a very good morning to you, and thank you so much for taking out the time. Your view with regards to TBO Tech?
I think, good morning, Mahima. I think if you talk about TBO Tech, my sense is that, see, the business model is very robust. I think they've presented decent quarter 2 numbers. My sense is that, in these kind of stocks, you have to look at a compounding kind of, return, and not a very short-term kind of return. The stock has corrected from its high, but I think if you look at the overall margin outlook and the business performance in quarter 2, I think the major revenue for this company comes in the second half of the financial year. So we are hopeful that quarter 3 will be much better as compared to quarter 2, and on a YOY basis as well as on a sequential basis. So I think, one should continue to hold. You have to give a time frame of at least 8 to 12 months here. Hopefully, I think the performance for quarter 3 should be better. Rather than looking at the short term, I think if the investor can give 12 to 15 months, he can not only recover his loss but make a decent risk reward here.
That's with regards to where TBO Tech stands. The next question that we have is on Pyramal Finance. It's not every day that we get a question for this particular counter. And Shrikant from Hyderabad is holding 10 shares bought at the levels of 1081. Wants to know as to what should be the next course of action for him. Avinash, what's the view like?
I think, he's made a very decent amount of profit. And I think considering the kind of tailwinds we are seeing in the NBFC space, I would not be surprised that the second half of this financial year, Mahima, should be very strong for Pyramal Finance. My sense is that, since he doesn't have any immediate emergency, he should continue to hold. I think he should expect a decent price post, the March 26 number. So I think structurally it remains to be a good hold. I don't think he should book out at these levels.
Okay, all right. The next question that we have is on Chambal Fertilizers. Govind Kumar from Hyderabad is writing in. He is bought at the levels of 570 and he wants to continue to hold this for the next 2 odd years. Wants to know if that's the right thing to do. Avinash, will Chambal Fertilizers be your pick in that space?
Yeah, I think all the fertilizer stocks are going to be in buzz, considering that the budget is likely to present some concessions and benefits to the agri sector. I would say that he's purchased the share at a slightly higher level, but considering the fact that this year we had a good monsoon plus rural demand has been pretty good, I think the next 12 to 15 months should be reasonably good. But in these kind of companies, I think one thing is very clear, that in case the monsoon fails or there's a weather kind of problem, then the stock will underperform. So I think as of now he can hold on. I think he could expect some positive news flows in the budget, and that could be a near-term kind of trigger for the stock.
All right, so that's with regards to where Chambal Fertilizer stands. The next question that we have is from the jewelry space, and every jewelry stock today is buzzing on the back of course, a lot of business update coming in. You have Titan, Kalyan, Senco, all of these counters buzzing in trade. But the next query that we have is from Shivani, who's writing us from Mumbai, asking about PC Jewelers. She's got 1500 odd shares and she's purchased at the price of 11 per piece. Wants to know if she should continue to hold this and what could be the next target for her. Avinash, the stock is currently trading at that 10.5 rupees. Her buying price is at 11 rupees. Do you think it can cross her buying price in the next 1 odd year?
Yeah, I think the overall tailwinds in the gold jewelry space is encouraging, Mahima. But I think, if you look at Titan, Kalyan, Senco, and then you compare PC Jeweler, I think one clear thing is that the management profile, in terms of corporate governance, in terms of, the balance sheet quality has not been great. Of course, PC Jewelers has now settled all their old dues with the banks. But I think this is one of those shares where you need to be a little careful. So I think, any rise, say to 11, 11.5, I think in the near term could possibly should be an exit. I think it's better to put your money in some quality names, where the institutional investors, the ultra HNI investors have got a high degree of comfort. So PC Jewelers would be a sell on rise.
Got the view, Avinash, and welcome to the show. But let's go across to the first caller for today. This is coming in from Mumbai, and Udit has a stock query for us. Udit, very good morning. Welcome to Ask Profit. What's your query?
Mahima and gents, good morning.
Good morning, Udit. Go ahead.
Okay, my query is on Dhanuka Agritech, Punit. I have 50 shares, 1,500 a piece, sitting at a loss. I know this company has got sound fundamentals.
Okay.
I just wanted to know from Mr. Avinash as to how long does he think, based on the valuation of the company, I should be able to cover off my losses in this, and can I add up at the present level?
Udit, firstly, when did you buy into this counter? And
24. I think when this shares was around 1,519 and it was at its peak at that point of time, I bought it and then I averaged it out when it was going down.
Fair point, Udit. Avinash, on Dhanuka Agritech, would you suggest Udit to continue holding on, and if also, is it a good time to average down on this counter?
Yeah, I think, if the investor can hold on for a slightly longer period, because typically, agrochemical companies, Puneet, the first half is supposed to be a much more remunerative quarter. Of course, the second quarter also revenues do come in, but April to September is the peak period. And after that, sales start tapering. But this time, I think one good part is that the monsoons have been very good. Rural demand has been great. And I think Dhanuka Agri has got a very large SQ kind of product kind of base. So to that extent, it's a well-established player, very strong geographical reach, has got a lot of patent for its products. So I would say that, if the investor can hold on for the next, say, 12 to 15 months, only then he can make money. And I think he should average out, because unfortunately he's purchased the stock at the peak level. And today, the stock is 1100 odd. So unless he averages, I don't think, the risk reward can get better. Only if he does that and holds for the next 12 to 15 months, he could get a better decent reward.
Okay, all right. So that's with regards to where Dhanuka Agritech is concerned. Next question that we have is from Arvind, who's asking about Balu Forge and wants a long-term outlook on this. Arvind, a very good morning to you, and how can we help you today? Hi Arvind, can you hear me? Okay, I think we seem to have lost the caller, but we do have his query, and he wants to know if this is the right time to make an entry into Balu Forge. Avinash, the stock is locked in lower circuit today, but according to you, do you think it makes sense to make an entry right now in Balu Forge?
See, I think first of all, Balu Forge is a engine component manufacturer. They make crankshafts, for the passenger car and the utility vehicle sector. So I think, the product is well established. A lot of marquee investors like, Ashish Kachole have also invested in the company. But I think today the stock is down, considering that some reports have come in that there has been some tax raid on the company, and that is why the stock is going down. My sense is, if the investor has a slightly medium to long-term kind of, time frame, then I think he should look at it as an opportunity. This is a well-established company, but I think unless we get some more clarity on the tax rates, we'll definitely like to know that. But overall, I think if the investor has got a high degree of risk appetite, he can definitely buy in. But please remember that in the near term, the stock may underperform.
The view, Avinash, but let's go across to our next query, and this is coming in on Paras Defense. Our viewer, Sush Devani, is asking this question, holding at 673 rupees per share. And currently holding almost 660 shares. So sitting at a profit of almost 8,000 rupees, not mentioned the time frame. So let me go across to Avinash yet again. Avinash, on the fundamentals, this company has done well for investors over the last few years. Your view on Paras Defense?
But I think Paras Defense, Punit, the investor can hold on. See, because it operates in a very niche space. and has a very healthy order book. And I think in terms of the positioning, I think it is one of those niche players. So my sense is that, at least over the next, say, 12 to 15 months, hopefully the budget is coming in February. There could be some announcements on the defense side. So I think, the investor has made a marginal profit, but if he can hold on for the next 8 to 12 months, I think he could definitely make a better, risk reward. So continue to hold.
Okay, so that's with regards to where Paras Defense stands. But viewers, time to slip into a very short break. We'll be right back answering all your queries on the other side of the show.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome back to Ask Profit right here on NDTV Profit. We are also being joined by Ajit Mishra, the SVP Research at Reliance Broking at this point of the show. Ajit, before I come to you, let me go across to our next caller very quickly for the next query. This is coming from Chennai, and Venkatesh has a stock query for us. Venkatesh, very good morning and welcome to Ask Profit. What's your query?
It's a very good morning to you, Pete, and your team. This is regarding the query of Mahindra and Mahindra Finance. Okay. I am holding 300 numbers at the rate of 349.
Okay, all right.
Okay. And, I've been seeing that for the past 2-3 days, stock prices are going down.
Yeah.
Is it the right place to stay on, or should I shift the, money to Bajaj Finance, which I am holding some stocks out?
Okay, and so Venkatesh, largely I think the impact on the share price is led by the quarterly update for quarter 3 on Mahindra and Mahindra Finance. But apart from, I think you said you already have Bajaj Finance, right? And you want to add more positions if the recommendation is to exit. Is that correct?
Correct.
Got it. Then let me.
Can I hold on with the same thing, or should I add more on Mahindra Finance?
And you can hold on to this counter for some more time, so I can get you the long-term view on this, Venkatesh. Okay, you can hold on.
I'm a long-term holder. I would like to hold on for about maybe a year or so.
Okay, a year or so. Got it. Avinash, let me come to you on M&M Finance then. Firstly, because Venkatesh has bought it at 349. Stock's done well for investors, but of course it's at the higher point of the purchase price. Would you recommend him to continue to hold on to M&M Finance or switch to Bajaj Finance, which he already has? Your view on both stocks?
No, I think my guess is that, M&M Finance does a lot of tractor financing, commercial vehicle financing, and both these segments have been doing very well. In fact, tractor sales have been touching new highs. Most importantly, the parent M&M is doing exceedingly well. So to that extent, my sense is that you should expect a decent performance in the second half. Hopefully, volumes grow in both the tractor and the commercial vehicle segment. That will benefit M&M Finance. And plus, on the asset quality, a lot of homework has been done by the company. So I think you need to give in some more time. Maybe the next 6 months are going to be better than the first half for M&M Finance, and hopefully FY27 should also be a lot better. So I think with agri demand picking up, agriculture production going up, you could definitely see M&M Finance doing better. So I would suggest him that he should hold on. He should not worry about the volatility on a daily basis.
Okay, all right. So that's with regards to where M&M Finance is concerned. The next question that we have is with regards to where Camlin Fine is concerned, and this is from Satyan, who's writing us from Trichur. He wants to know, and this is a slightly long query. What he's asking is that Camlin Fine Chem, what he's saying is that he's advised to shift from chemicals and allied to something like Aarti Industries or Natco or something like alkylamines, and he wants to know if he can get a perspective whether this is the right thing to do or not. Today, in fact, there was an INCRED note which has hiked the target price for Camlin Fine Chem, and they've tagged, the target price that they've given is 480 for this counter. So, Avinash, I'll come to you on this one. A very specific query. Do you think that's the right thing to do?
No, I think, my guess is Camlin Fine can definitely be held on. But one particular observation about this company is that it's got a very volatile track record. And I think chemical space is one thing where currently I would say that, we would prefer to observe the Q3 numbers, because second half is typically a stronger period for most of the chemical companies. Camlin Fine is a specialty chemical company, has a good growth trajectory. But I think once you get the Q3, I think a fresh review can be considered. But till that time, I think, they have a decent order book. The growth trajectory looks decent. So I think he should hold on. Wait for the Q3 numbers and then we can take a fresh review. So I think no fresh buying suggested, but continue to hold the position.
Okay, all right. So that's in regards to where Camlin Fine Chem is concerned. But moving on and taking a look at the F&O space, we have Sharad joining us to break that down for us. Sharad?
Well, it's a very range-bound day of trade coming in. The options data is that's what's suggesting. Sensex also, you might be seeing a sea of red in the back over here, especially from Trent and Maruti HDFC Bank. That's where the selling is happening. But if you take the jewelry, pharma and IT space, there is a strong buzz in the mid-cap space. The Titan, Tech Mahindra, HCL Tech, all of them doing well in trade. But of course, Titan is the stock which we are focusing on. Stock is up 4%. BankX also, we can say largely there is a kind of a diversion, but a very, very small range of trade is happening. Largely, the market is looking at Q3 updates and a lot of broking picks. That's where the variations or the range movements are happening. Let's pull up the BankX to understand where the important momentums are happening. Of course, the PCR ratios of Sensex are even Stevens for both call and put, especially 85,000, 8,500. That's the level where the congestion is there. BankX, we are seeing some downtick coming in IndusInd Bank, Federal Bank, Axis Bank, and also the larger banks. If you can just pull out to see how overall the market setup is looking like in the banking space, and over there also there is divergence. Moving on to the stocks, important stocks where the long build-up is happening is of course the jewelry space. That's trade. Looking at short covering, largely we see the tech stocks are there on the back of a lot of broking upgrades also which are there, and these stocks are in focus. Long unwinding for NBCC Counter and Chola Financial, and lastly short build-up is happening in Sipla and Indian Hotels as well, both of them reacting on the brokerage news. So this is the important developments in the F&O space.
Thanks so much for that, Sharad. But let's go across to our next caller. This is coming in from Gujarat, and Bharat has a stock query for us. Bharat, very good morning. Welcome to Ask Profit. What's your query?
Good morning to you all.
Good morning, Bharat. Go ahead.
I have 1,000 shares of Bombay Dying purchased at 152 per share. Should I hold on, add or exit?
And Bharat, did you buy into this counter with a long-term or a short-term view?
Yeah, long-term view.
Long-term view, got it. Let me go across to Avinash then. Avinash, on Bombay Dying, any quick view? Bharat is bought at 152, stocks trading at 126.
No, I think, Puneet, the real trigger for Bombay Dying is not from their core business, but from the real estate piece, which they hold. So I think for a very long time, the markets are expecting that real estate would actually trigger a big opportunity for Bombay Dying. So I think, if the investor can hang on for a slightly longer period, we feel that yes, the company does hold a very large real estate piece in Mumbai. And if that can be monetized in a big way, that could definitely be the next re-rating trigger for the company. So I think, the core business continues to grow at a steady pace, but that is not where the market is looking at. So I think you can hold on for the next 12 to 15 months. Hopefully, if something happens there, I think you could see a good re-rating happening here.
Okay, all right. So that's it regards to where Bombay Dying is concerned. The next one that we have is on Sonata Software. Now the viewer is saying that he's been holding 250 shares at the levels of 452 since the past 2 years, and the stock has not moved much for him. Should he sell this and buy something else? Ajit, what would you recommend on the charts?
So Mahima, yes, he's right that since the early 2024, the stock has been witnessing corrective trend, and of late, though the price action is more of muted from the last couple of months, but there's hardly any participation during this recent recovery in the IT pack. So in my opinion, he can consider switching to stocks like Persistent from the large cap basket, HCL Tech or Tech Mahindra from Sonata Software at current levels.
Got the view, Ajit. Ajit, coming back to you with another query on VA Tech Vabag. Now, Harjit actually from Mohali is writing to us. He's holding the stock and he's currently sitting on a loss. He's not mentioned. He's mentioned he's looking for a entry point for the stock. Is this it, Ajit? Because the stock has been in a correction phase.
So Puneet, yes, we are seeing correction. And in fact, it's a fresh break that we are seeing this week. Means the stock is already down roughly around 9%. Volumes are slightly on the higher side. So this indicates maybe further pressure. So the next support could be close to around 1120 area, and then the major around 1000 mark. So as of now, it's in a void, but yeah, he can start accumulating the moment we touch level close to around 1120 and accumulating the staggered manner till 1000 levels.
Got the view, Ajit. But viewers, it's time for our first round of the rapid fire of this edition of Ask Profit. Ajit as well as Avinash, keep your answer on buy, sell and hold so that we can take as many queries as possible. The first one's coming in on Heritage Foods. Our viewer Lalita has bought it at 485 in October, asking if she can wait for another 3 months. Ajit?
Hold with stop at 440.
Okay, the next one is on Cummins India. DJ Rao from Hyderabad has bought it and wants a short-term view on this one. Ajit, your view on the charts?
Exit.
A view on TCS is what Mangaldas is asking. What would you recommend, Ajit?
Buy.
Okay, Dixon Tech is the next one. Ramesh from Bengaluru has bought 4 shares at the levels of 11,975. Wants to know as to what should be the next course of action for him. Avinash, your view?
Yeah, I think continue to hold.
IRCTC bought at 804 by Suresh. He's asking for a long-term view. Avinash, your view?
Yeah, I think continue to hold.
Keynes Tech is the next one. Jaya Krishnan from Kerala wants to know if she can continue to hold, considering that she bought at the levels of 5790. Ajit, on the charts?
Use rebound to exit.
HCC or NCC is what Suresh is asking from Visakhapatnam. Ajit, any stock you would recommend right now to enter?
Comparatively, NCC is better.
Okay, 200 shares of Trent bought at the levels of 6,500. Should we buy more or exit? Jayesh is asking this question. Avinash, your view?
Yeah, I think continue to hold, average at the level.
Bank of Maharashtra bought at 57 rupees. Avinash, should she continue to hold for the next 1 year?
Yeah, I think continue to hold.
Tata Technologies is the next one. Deepak from Dubai wants to know if he can average at the rate of 1058. Should he continue to hold or exit? Avinash, this question is directed towards you.
Yeah, continue to hold and you can average.
VA Tech Vabag, a fundamental view. Avinash, we've taken the tech one. Our viewers bought it at 1563. Should he continue to hold? He's a retired banker.
Yeah, I think if the investment time frame is about 12 to 15 months, continue to hold and average at the current.
Okay, Rakesh has bought Bajaj Finance. He's already sitting on a loss of 54,000. Should he hold or sell? Your view on this, Ajit?
Hold with stop at 940.
All right, so that brings us to the end of first rapid fire round of Ask Profit. But viewers, we'll slip into a very short break, but we'll be right back answering your queries on the other side.
All
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the world.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who's just tuning in, you can either call us or send us a WhatsApp on the numbers that are flashing on your screen up there. Moving on to the next question that we have. This is from Jassi, who's writing us from Vijayawada and asking about Ellenberry Industrial Gases. He's bought it since the IPO. Wants to know if this is a good time to add more for the next 3 years. Avinash, your view on this?
Yeah, I think they are definitely market leaders in their business segment. I think if the investor can definitely hold on for the next couple of years, I think definitely one could expect a decent upside. So it's a well-established player, a long legacy player in this business. So continue to hold, and I think even if you want to buy it, I think keeping a time frame of 2 years, it definitely can give a good risk reward.
Got the view, Avinash. The next one, Ajit, this is for you, and it's a very interesting one coming in from Umesh. He's asking 4 stocks that you could recommend in the large and mid caps for the medium term. Your view?
So yes, Reliance is one such name. So basically what we are seeing, Puneet, now that after almost 1.5 years of consolidation in the index, we are again back to the record highs. And some of the heavyweights wherein we were seeing almost aligned move, means they were witnessing consolidation during this period, and they have also reclaimed their record highs or trading closer to that mark is something that you should be focusing on. So Reliance Industries, Kotak Bank, M&M and PFC, these are some of the names which one can look to accumulate even at current levels. And as a disclosure, we have recommended this to our client also.
All right, so that's the view with regards to where PFC stands. The next question is from, this is on Asian Paints, and the viewer has bought 200 shares at the levels of 29402 years back and is continuing to hold this. Should he continue to hold this from a long-term perspective? Avinash, now is the time where everybody is waiting for a turnaround for Asian Paints, and of course the quarter gone by has seen volume growth. This quarter also you would expect growth coming in on the back of low base as well. Would you recommend him to continue to hold?
Yeah, I think, see, considering the level of competition, but I think macro tailwinds have been quite positive. Crude prices are soft. Rural demand is expected to be good. My sense is that despite the fact that he's purchased at a slightly higher level, if he can hang on for the next, say, another year or so, I think definitely, prospects look definitely much better than what they were earlier. Hopefully, if the raw material prices are kept under control and volumes grow by 5-6%, then I think Asian Paints should definitely bounce back. So continue to hold.
The next one that's coming in is on Reliance Industries, and this is from Rishikesh from Pune. It's a stock that's been in focus over the last few days. Avinash, what do you make of the current move? Is it a good time to add given the correction that we've seen in the last 2 to 3 days?
Yeah, Puneet, looking at Reliance, I think normally one makes money in Reliance when, obviously the stock doesn't perform. And I think 1500 to 1480 is a good level to accumulate. Even at the current levels, if the investor can wait for maybe the 12-15 months, I sense that Q3 should be reasonably good. GRMs are definitely at good levels. So the Q3 performance for the oil and gas business should be pretty good. And plus, my sense is that next year, hopefully after March, the markets are expecting some value unlocking from the retail kind of unit. So that itself will also give a pretty good, decent return. But I think you need to take a slightly longer term view. In the short term, the stock may remain a little bit, volatile.
Okay, all right. So that's with regards to where Reliance stands. Next question that we have is from Siva, who is writing us from Toronto. He wants to know if it makes sense to make a fresh entry right now in Kalyan Jewelers or not. Ajit, would you recommend that, seeing the charts?
So yes, Mahima, means after this correction from the record highs, roughly around 750 to 450, and now this phase of consolidation seems like that the stock is making decisive attempt to reclaim the major averages. Today we are seeing that the stock is up roughly around 5% with strong volumes. So probably we can see a level close to around 580, 600 in the coming days. So we'll stop at 490 on the closing basis. Since the highly volatile counter, one can look to accumulate at current levels with 580, 600 as the position targets.
Got that view, Ajit. The next one that's coming in is on Sharda Energy. Now, our viewer, Sabu from Kochi, is asking a 2 to 3 month view on the counter. Ajit, what would you recommend? He's bought it at 546.
Sharda Corp, right?
Yes, Sharda Energy actually, Ajit. It's trading at 509 right now. It's up almost 1.2%. And he's bought it at 546, and 100 shares is what he's holding and asking for a 2 to 3 month view.
Sorry, Puneet, I'm unable to find this symbol for Sharda Energy.
Okay, all right. It's spelled SARDA. I think, do you have the symbol?
Yeah, the ticker is SARDAEN. If you can try to pull up the charts and see as to how the counter is done.
Avinash, do you track this counter? Any view?
No, I think definitely, from the metal space, this is a very interesting bet. And most importantly, they've purchased an integrated power unit also. So I think, maybe my sense is that at these levels, most of the negativity is in the price. I think the investor should at least give 3 to 6 months. Hopefully, I think the December quarter is going to be quite good, Puneet. And to that, I think perspective, I think he should continue to hold. He could definitely expect, a decent kind of price upside in the next 6 to 12 months.
Ajit, were you able to pull the charts up for this counter? Any technical view?
Yes, so basically the long-term performance definitely looks promising, and now after almost this vertical rise, it's been almost 3-4 months now, the stock has been consolidating around the record highs. So it seems like a time-wise correction so far, but for any fresh momentum, we need a close above 540. So as of now, he can continue to stay put with 490 as an immediate stop.
Okay, all right. We've got our next caller then. Praneeth is calling us from Hyderabad. Praneeth, hi, a very good morning to you. How can we help you today?
Yeah, good morning. I'm willing to take a fresh position actually in Praj Industries for Tyrrell for 2 years. So which one will be better for me for 2 to 3 years?
Okay. Okay, got your question, Praneeth. I'll take this up with Ajit. Ajit, where are the charts looking more attractive right now from a slightly long-term perspective? Is it Tyrrell or Praj Industries?
So Tyrrell is still like, we are seeing bit of a recovery rebound, but Praj Industries, we have already seen noticeable damage from the record highs. Roughly around 70% is something that the stock has already retraced. We are trading at a very critical juncture where we have the major averages placed on the long-term charts. So I believe that the possibility of consolidation, because the stock also showed strong buying interest, of late with price action also. So my opinion, possibly you can start accumulating at current levels, and 290 should be the lower base for this, and for the complete position 270 should be a complete stop loss for the complete position. In case of rebound, the first hurdle could be close to around 360 and then probably around 400 plus zone.
Ajit, another one that's coming in on Laurus Labs. Now, Maddie is asking us a question if it's a good time to enter the stock. So he's asking for a fresh entry on Laurus Labs. Would you recommend the trade?
So Laurus Lab is trading at the record highs. Beneath a steady performer means there was hardly any participation on the downside while the market was struggling and the other counters from the pharma space was not performing. So definitely it looks promising, and in fact we are seeing fresh traction in the pharma space altogether. So with that as a support, 1100 is something that he can maintain as a stop loss and consider going long at current levels. Since we are at the record highs, the upside is open. So from the risk to reward point of view, 1190, 1200 should be his immediate targets.
Got the view, Ajit. Now the next question that's coming in is on ICICI Pro AMC. Now Gautam writing into us from USA is a regular viewer, so thanks so much for tuning in, Gautam, yet again today. Avinash on ICICI Pro AMC, he's got 6 shares. I know it's a recent listing, but what he's asking is if he should buy more right now for the next 12 to 18 months at least. Would you recommend this particular transaction, and should Gautam add into it right now?
Yeah, I think my guess is that he should wait for the Q3 numbers. Although numbers are going to be good, typically what we see, Puneet, is once the numbers are out, there is a little bit of selling which comes in. So my sense is that yes, the numbers for Q3 are going to be very solid. It's one of the large players in the mutual fund industry. Definitely numbers will be better, but I think probably you could get some opportunity once the Q3 numbers are announced. Some profit booking happens, because longer term, if he wants to make value, then I think he needs to get in at a slightly lower level, which can give him a better alpha over the next couple of years.
Got that view, Avinash. But we have another query now coming in from Hyderabad, and Rajesh has a stock query for us. Rajesh, very good morning. Welcome to Ask Profit. What's your query?
Hi, very good morning. Good morning to everyone over there. I'm Rajesh from Hyderabad. My question is with regards to Ashok Leyland. I bought it at 140 rupees, 250 shares. Currently, I'm standing at a profit. My question is to know the long-term view on this. Can I accumulate more at this point?
And Rajesh, any other auto ancillary or auto company that you hold in your portfolio apart from Ashok Leyland?
This is the only.
This is the only one. Okay, Rajesh, you've definitely gotten at a decent price, or almost sitting at a decent profit, because you caught it at the up move. So congratulations for that. Avinash, on Ashok Leyland, my question largely because, while of course on the long term, do you think that the move has been quite stark in the last few months? So do you think that it will continue, given that the government Capex hasn't yet picked up for the CV cycle to have that macro factor yet?
No, I think my guess is, Puneet, the second half for Ashok Leyland, overall for the commercial vehicle sector looks to be quite strong. And I think, Ashok Leyland also has some exposure on the defense side. So I think he should continue to hold. My sense is the second half of FY26 should be significantly better than the first half. And hopefully, with the GST cuts, with the rate cuts happening, I think the tailwinds in the commercial vehicle sector are slowly improving. So I think, it's better to hold. He could expect a decent risk reward over the next, say, 6 to 12 months, even from the current levels.
Okay, all right. So that's with regards to where Ashok Leyland stands. Now, viewers, the next show generally that we do is Know Your Company. And, today there is a Gujarat-based power and distribution player that's forayed into battery energy storage space, down 35% from 2025 highs, and transmission industry orders are also drying up, and that's something which is a concern for the industry as a whole. Now, Sharad, who generally anchors the show, has put out a tweet. So it's for you to guess as to what this company is exactly from this tweet. Let us know what you think the next what would be this company, and we'll be discussing this company in detail with regards to what its financials look like, where are the return ratios heading towards, how much of a return the company has given, and what is the outlook looking like. And of course, we'll speak to the management as well to understand as to what the outlook of the company is looking like. So that's with regards to where the next shows lies. But We've got our next question, which is, okay, before I take that question, my director is telling me to take a very quick break, but we'll be right back answering all your queries on the other side, so do stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape.
Welcome back to Ask Profit right here on NDTV Profit. If you haven't, do start sending in your queries on WhatsApp. You can also call us, and both numbers flashing on the top of your screen. The next query is very interesting, coming from Vanita Bala. She's from Kuwait. So thank you so much, Vanita, for sending across your query and asking, if it's a good buy at the current levels for Sirma or Dixon. That's a query. And Avinash, let me come to you. Firstly, any quick view that you have on Dixon Tech? Because recently, Avinash, we've seen a massive sell-off, lows being hit on this counter. Largely, what started with Keynes has now been one of the biggest impact on this counter as well. Your quick view, firstly on Dixon as well, and Sirma, if it's on your buy radar right now.
No, I think, in most these companies, my sense is that valuations are fair to expensive. And I think, the markets are now looking at these kind of companies operating in this space with little caution. What happened with Keynes Technology was definitely an issue related to corporate governance, which the management later on clarified. My sense is, Puneet, in these kind of companies, it's better to take a pause. December quarter will be important. Markets will like to know what's the kind of growth outlook the management shares. Because typically, at these levels, if there's any small negative surprise, also the stock could get beaten down badly. So my sense is that, rather than buying immediately now, wait for the quarter 3 numbers. Some more clarity would come in once the results are out, the management commentary comes post the conference call, and that would be a good time to actually accumulate the stocks if the growth trajectory continues to remain solid. So I think not advisable to buy at these levels, both stocks as of now.
Okay, all right. The next question that we have is from Ashok, who's writing us, from Sydney, and he's asking about Valor Estate, which was previously known as DB Realty. He's holding 1700 shares, bought at the levels of 178. From a 3 to 6 months point of view, he wants an advice. Ajit, how are the charts faring?
This stock looks sideways to me. In fact, if you see that the entire basket in the realty space has not done much, even during this recent market rebound. But we are seeing early sign of recovery in some of these names like Godrej Property, Oberoi Realty, and others. So as of now, the preference should be given to the outperformers within the sectors and avoid any fresh position at current levels.
Got the view, Ajit. We have our next caller now coming in, for a stock related query as well. And this is from Jaipur. Raj has a stock query for us. Raj, good morning and welcome to Ask Profit. What's your query?
Yeah, good morning. My query is regarding the Mrs. Bector Food. I purchased 540 shares almost a year back and currently incurring loss of 20,000. So may I request you to have the technical or the fundamental viewpoint on this share?
Got it. And Raj, firstly, when you bought, can you hold on to this counter, because since you said you are sitting on a loss, can you hold it on for some more time so then I can get you the long-term query, long-term view as well on the stock?
Yeah, it's a long-term perspective. Currently sitting at 14% loss.
Got it. Avinash, any quick view on Mrs. Bector? Do you think that it has any chance of revival given GST rate cut benefits on the FMCG space? Any view?
No, I think he can continue to hold. See, the investor seems to have purchased the share at a slightly higher level. But if you see the business model, the positioning of this company and the kind of product category it operates, I think these kind of products definitely enjoy a decent premium. There is a strong brand recall for this product. So I think, you need to give it little more time. My sense is over the next, say, 12 to 15 months, hopefully the FMCG market will improve, volume growth will kick in. And you're going to see a lot of consumption increasing in these kind of product categories. So I would suggest him that he can even average the stock, but keep a time frame of at least 12 to 18 months. Only then he could get a decent risk reward, from the current level.
Okay, all right. So that's regards where Mrs. Bectors is concerned. The next question that we have is from Reenu, who is writing us from Bengaluru, asking about Bank of Baroda. If this is a good counter and does it make sense to make an entry right now? Ajit, would you recommend that?
So yes, Mahima, in fact, if you see the entire PSU pack, interestingly, they have been maintaining their outperformance in this recent surge, while some of the private banking wages are sitting on the sidelines or witnessing correction. So Bank of Baroda is currently trading at the record highs. So in my opinion, she should maintain a staggered approach to accumulate the stock, not to buy completely at one go. So around current level, let's say she can buy 50-60%. And in case if there's any dip around 300, she can add more. For the entire position, the stop should be at 280, the recent base. And since the stock is at the record highs, she can keep on trailing stop losses on rise.
Got the view, Ajit. And we got in Siddharth Chaturvedi actually sent us a message asking if the next company on KYC is Voltam. Siddharth, it's not, but I appreciate you trying to guess the company, and do send in if you have another recommendation as well. The next query that's coming in is on Ashapura Mine. Now, it's an interesting one because KPS Rao from Bengaluru is actually sitting at a 6x profit at this, because he's bought it almost 4 years ago at 120 rupees. So firstly, Mr. Rao, congratulations on the gains. I wish you would have called us and told us what you saw in the company at that time. He's asking that if it's a good time to book some profits given the gains. Avinash, do you track this counter and any view for what Mr. Rao should do?
No, I think clearly Ashapura Mine looks to be a very strong investment call for the investor. I think they make a product called bentonite. And I think, now since the investor has made almost 6x returns, Puneet, I think it makes sense that, some profit booking is advisable, despite the fact that, the company's overall performance is expected to be good. I think in these kind of little illiquid stocks, it makes sense to take out your capital. So I think book at least say 25-30% of your profits, and I think the rest of the quantity can be held on. The company continues to do well, and our sense is that FY26 should be another record year for the company.
Okay, all right. It's time for our second rapid fire round. Avinash and Ajit, you both know the drill. Try to keep your answers as short as possible. The first question that we have is from Aparna, who's writing us from Singapore, asking about PVR Inox. She's holding 55 shares. What are the levels of 1138? From a long-term view, can she continue to hold? Avinash, your view?
Yeah, continue to hold.
Privy Specialty, is it a good time to enter the stock, Avinash?
Yeah, I think one can definitely accumulate at the current level, but keep a time frame of 12-15 months.
Zentek is the next one. 13 shares bought at the levels of 1560. Hold or sell? Your view on this, Ajit?
Exit.
La Opala bought at 256 by Kishore. Ajit, would you recommend him to hold for the next 6 months?
Hold with stop at 190.
ITC is the next one. Shahid wants to know if he can accumulate at these levels. His average price is 384. 30 shares is what he has. Avinash, your view on this?
Yeah, I think you can average.
Cummins India, long-term view, Avinash?
I think Cummins can definitely be held on. If you've got the share already, continue to hold.
Okay, Bharti Airtel, is this the right time to make an entry into this counter? Shivakumar from Bengaluru wants to know. Ajit, your view on the charts?
Buy on dips around 2050.
Excelsoft Technologies, Avinash, your view?
I think continue to hold for long term.
Suzlon Energy, from a 3 to 4 months perspective, is this the right time to make an entry? Ajit, your view?
Yes, with stop at 50.
Tata Steel, Hind Copper, or BEL or Cupid. Ajit, any view, any stock that you would recommend right now for a swing trade?
Tata Steel for sure.
Okay, SJVN, is this a good time to buy from long-term perspective? And Avinash, your view?
No, I think if you have, hold it, but no fresh buy.
Grow or Lenska at Avinash, I know it's a recent listing, but any view that he can enter right now for the long term?
I think Grow would be a better bet.
Okay, LG Electronics, should I enter right now from a long-term perspective? Avinash, your view?
Yeah, I think if you have a 12 to 18 month time frame, you can definitely buy at current price.
JSW Infra bought at 278. Ajit, a 1 to 2 month view if you can?
Hold with stop at 270.
Okay, Urban Company holding at the levels of 155. Should I average, sell or hold? Avinash, your view?
So I think avoid. If you have not purchased it, avoid.
Satvik Green, Avinash, any view?
Continue to hold. I think because it's a large solar player, so continue to hold. Good long-term prospects.
Okay, Eternal bought at the levels of 300. 450 is the quantity. From a 1 month perspective, can the viewer continue to hold? Ajit, your view?
Hold and use recovery to reduce position.
Banco India, Ajit, if you track this counter, our viewers bought at 800. Should he continue to hold?
Hold.
Okay, Biocon is the next one. 250 shares purchased at the levels of 350. Venkatramani wants to know from a 15 months perspective, can she continue to hold? Ajit, your view on the charts?
Yeah, and she can buy more with 370 as a stop.
All right, so that brings us to the end of this round of rapid fire segment. Ajit and Avinash, thank you so much for taking us through those queries and of course giving your expert insights. With that, we're completely out of time on this edition of Ask Profit. But if we have missed your query, you have another chance at 2 p.m. because 2 p.m. is the afternoon edition of Ask Profit. So do tune in and ask all your queries. But completely out of time in this edition. Do stay tuned. KYC on the other side.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sharma and I am your automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently, they've won the GUVNL project as well. Now let's give you the company's name. You know, what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which we are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here, and any kind of execution of B2G risk. That's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the Director and CEO of Rajesh Power. He will be answering all of our queries as well, which we'll be putting it up. But Apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. Let's understand more about this company going ahead. And apart from this EPC solutions player, the company is established in 1971, specializes in power transmission and the distribution segment as well. And largely we see there is a good momentum coming in the stock. The stock made its debut in December 2024, and since then the stock has tripled. But last 1 year or so, the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space, and also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that. Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark in some time? So order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the power distribution segment, and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Power. If you could just show the important projects, yes, going ahead. One is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well, and large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Bari's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is, of course, the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is the shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I'd like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There is always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent. That's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say, almost September 2024 onwards, or just before that, the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, and that's the way where the concern is coming in. And because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you can expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move. But the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I've given a neutral rating when it comes to the return ratios. But I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. September also, the share was around 73%. But my concern starts coming is, even if there's a very, very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and almost you could say virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this, the shareholding pattern I have given a thumbs down. A street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that, still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the 7th one is the valuations, and the company itself is having different peers, because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there, and institutional selling also seen in the counters. So valuations front, because of that, I've given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline, that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown, that's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratios, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction, and outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is of course Utsav Panchal. He's the director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very, very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space, as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour, and the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems, and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized, nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to, the new underground, the new type of conductor, which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But the competition is still there, because in Q2 you had mentioned about it. So till now the competitive pressure is coming in the distribution space for you?
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company-specific to you. But Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming, and what would be your budget expectations?
So what I would like to, have give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is, the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment. Just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as, the government has set up some very huge projects of substation, transmission lines and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, so that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned. So give me, what are the key top 2 metrics to track, and what are that 40% growth, and why you're stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1. Up to September 26. So we are seeing a very, very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in. And, investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is, so operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very, very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large size projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right, let's just revise the numbers which we have given in our KYC segment. And of course, Utsav, stay tuned. I have one last question for you. But overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you. As an industry, spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very, very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have associate company called HKRP Innovations comes into play, where we are providing IoT based smart monitoring systems and solutions to the utilities.
All right. Can you just give in some more details about this HRKP, because everybody's talking about it, and you know, the future outlay, when the incremental benefits will start coming in from this arm, you know, could you give us a timeline?
So basically in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, you know, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters, including substations, transformers, and everything. So we have hardware as well as software solution, and the growth outlook of HKRP is also very promising in the sense the government focus on modernizing the grid. So that is where we come in, and in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in, but they are still bullish on the budget expectations for the power industries, and net they're looking at the rating parameters, removing the financials. The outlook definitely seems like, you know, the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there, but nevertheless company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company, for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man.
Sustained pressure on markets, Nifty below 26,100, Bank Nifty aligns with benchmarks and broader market weakness continues. Silver and copper keep their sparkle in 2026. Sixth year of supply deficits powers the white metal. Copper extends gains after soaring past $13,000 for the first time earlier this week. Sipla in the soup as the company faces regulatory overhang as US FDA issues Form 483 flagging contamination aspects, aseptic lapses and potential data integrity concerns at its Greece facility. Stock cracks more than 5% in trade today. Titan sparkles after reporting a robust business update in Q3 led by strong festive demand and sustained consumer traction across key categories. Company outlines ambitions to lead in both lab-grown and natural diamonds in the con call. Infoedge in focus as white-collar hiring rose 13% in December 2025, driven by strong non-IT demand as insurance, hospitality and seasoned hiring surged, while banking saw contraction and non-metros emerged as fresher hubs. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take it straight to markets at noon time. Well, it's been a weekish to a directionless day in the market. Just look at this choppy line graph of Nifty 50 and it's just 40 points of uptick and downtick that we have seen throughout the trading session in the first half of the session today. But the good news is that at least it's holding above the 26,000 levels and way above that comfortably even at the lowest point of the trading session. Let's also take a look at what's really happening in the internals. The broader markets have also been weak. Probably the festive season is continuing in terms of the lull that the market is seeing in terms of the traction coming in, and after the Venezuelan event, that has really cast some uncertainties into the overall market. When we take a look at some of the components, well, in sectoral indices today, IT is the one which has rebounded. It's shining in trade. Defense, which was doing well yesterday, that is on the flat line, and also Pharma, PSU banks are the ones which are really perking up in trade. In terms of the contribution coming in on Nifty 50, it's ICICI Bank and Titan. Those are the ones which are really giving as much contribution to the Nifty 50 as it is being dragged down by some of the big boys like HDFC Bank as well as Bharti Airtel and Kotak Mahindra Bank as the draggers for the day. So take a look at these particular snapshots in the market, and to get more view on what's really lying ahead for us in this uncertain week of trade, Aditya Shah, who's the founder of Hercules Advisors, joins us now. Aditya, always a pleasure to welcome you on NDTV Profit. Of course, the market is now facing more factors which have come up as uncertainty. While crude, probably projections of that coming down may be a good news, but overall geopolitical tension globally is not a very good news for the markets. How do you see it?
So good afternoon. I'm positive on the market. We've always been positive on the market. Venezuelan crisis or the Indo-US trade deal, all of these are short-term concerns for the market. For a longer period of time, the market will continue to do well. So from my perspective, nothing to worry about. Domestic-facing economy stocks like the chemical stocks or the banking sector, which has reported solid set of numbers, or the capital goods sector, chemical sector, these are all places to concentrate on. IT is a contra pick as of now. As the US-India trade deal continues to move forward, IT will also come back. So from my perspective, short-term ups and downs are always there, but longer term, the market will continue to do exceptionally well.
So Aditya, as we really enter into the earnings season, that's going to be one of the most important factors for the market going forward in the month of January, and then taking it forward for the year, setting the stage for this year. How are you expecting this particular earnings to really pan out, and which would be the most important factors as per your analysis?
So we've already seen that the loan growth, the systemic loan growth is at about 10 to 15%, which in my opinion is really very healthy for the entire system to grow with. In my perspective, the Nifty should grow at about 5 to 10%, somewhere close to 5 to 10% earnings growth will be watched out for. Commentary with respect to what is happening in the US and how businesses are performing in which have exposure to the United States will be a key thing to watch out for. I expect the small and the mid caps on a selective basis to continue to do exceptionally well. Stocks where valuations are extremely high, for example, Trent, which reported a solid 18% growth, but the valuations were extremely aggressive. There we could continue to see some bit of time correction. But from my perspective, there would be a steady earnings growth, 5 to 10% for Nifty 50 companies, and nearly about 10 to 15% for about small and the mid cap companies. So overall steady, nothing exceptional, nothing bad. Steady is what I would say.
All right, steady is not a bad word currently while so much uncertainty is taking place. How do you see the global factors really impacting India, Aditya? Because, FII outflows, FPI outflows had been a big concern. And if the US economy is really looking like it's probably going for a slowdown, as has been projected by some of the economists, and on the other hand, the Venezuelan oil coming into the market will put pressure on the crude oil prices. Some of these important factors, how are they going to really impact the market going forward?
So in my opinion, I have a contra view on the Venezuelan crisis. I think it's really positive for the market because good quality oil over a period of next 3 to 5 years will be available, which will keep the crude oil prices in check. For an economy like India, which is crude import dependent, this is really very important and positive for us as an economy. That's the first point. Second point is a lot also market in 2026. A lot also depends on how the India-US trade deal moves, not from an earnings perspective, but from a market sentiment perspective. If the deal is cracked very quickly, so from my perspective, the market will do exceptionally well. If the deal takes a lot of time, I don't think the market will do anything and it will be sideways. So from my perspective, the year will depend a lot on the geopolitical arena, what happens there. Basis that the stock prices will boom. But I said, from a stock picker's perspective, you need to be really very stock specific. There are a lot of stocks that are undergoing massive corrections. Those are the real opportunities to buy. So steady kind of a year as a base. Upside to it will be the Indo-US trading. If it happens, I think the upside of the market will then get opened up.
So as you rightly said, many geopolitical uncertainties and also our US tariff trade deal is something which the market is really waiting for, and we do not have any visibility on that. Given that, what is the investment strategy that you would suggest at this point, and any preferences of any sectors or stock picks?
So from my perspective, banks have continued to do exceptionally well. The loan growth that we have seen for many banks, they've been very good. For example, HDFC Bank reported about 10 to 11% of loan growth. Kotak Mahindra Bank reported about 14 to 15% of loan growth. So at the top will be the private sector banks, followed by SBI, which is also continue to do exceptionally well. Thereon, you can then look at the asset management companies. They will also do exceptionally well as financialization of the savings continues to move on. Then you can look at the consumer sector, where we've seen stocks like ITC continue to have a correction on the back of rumors of additional tax getting imposed on cigarettes. Then you can look at the cap goods companies like Larsen, companies like Ahluwalia Contracts. They are continuing to do exceptionally well as the government continues to invest in the infrastructure side of the market. IT continues to be my contra pick. It has bottomed out. It will do well if the trade deal picks up. If it does not, if the trade deal does not pick up, I don't see any meaningful correction as well, because a lot of these stocks have undergone a time correction. So from my perspective, sectoral, sector by sector basis, you need to take a call, and from there on, you need to move.
All right, Aditya, always a pleasure to get your expert take on the market momentum and the perspective coming in. Thank you so much for joining us and giving your perspective and strategy on the market. Moving on then, let's take it straight to the top story of the day. Let's put the spotlight on some of the key commentaries really coming in from the US President Donald Trump. And the US, remember, is set to receive 30 to 50 million barrels of high quality Venezuelan oil, now sold at market price. Now, Trump says that the fund will be controlled to benefit both the nations, with Energy Secretary Chris Wright really tasked to execute it immediately. Now, the oil will be shipped and also delivered straight to the US docks, marking also the major energy move with geopolitical undertones. Not just that, remember, External Affairs Minister of India S. Jaishankar expressed deep concerns over the unfolding developments in Venezuela, a nation India shares strong ties with, he said, emphasizing a people-first approach. He urged all parties to find common ground that serves the interests of the Venezuelans. Against this backdrop, let's take it straight across to Peter Maguire, the CEO of Trading.com Australia, to decode the roadmap for the oil prices and other commodities. Peter, welcome to NDTV Profit. What an interesting time to really get your perspective. My first question, how do you see this geopolitical tension that has really started the 2026 year with in Venezuela, that impacting the crude oil price? Is there going to be a supply glut?
Well, good afternoon, Nisha, and thank you for the invite. I'll tell you what, it's been extraordinary when we're looking back over the last week, what has transpired. Yes. And it seems to be structural weakness as far as price, and that glut, as you highlighted, I think it will come very much into the field of things over the first quarter. So as we roll this forward, one would think that we'll build on those big, drawdown as far as price. What we saw was a washout over 20% off for the year. And I think that that's going to continue as far as softness for energy prices, certainly leading into first quarter and second quarter.
All right, so you're saying first quarter and second quarter. Many of the economists across the world, Peter, have really brought down their projections for crude oil prices from over $60 per barrel to 58 or so on an average for the next year. Do you have any particular number?
Yes, I do, Nisha. I think that I'm keeping a very close eye on those high $52, $53 for WTI. I feel as though Brent will, I want to see it break 56. It's currently right on $60 as we speak. And that structural softness that I'm feeling that we could be under $50 by end of year. But it's a very long year, as we know. And I think there's going to be a year of much geopolitical concern that can always change the landscape as far as energy prices at short notice.
That's right, Peter. But, one cannot also, Venezuelan event probably has overshadowed what we dealt with in the last few years. That was the Russia-Ukraine war. And how are you seeing that really impacting the crude oil prices as well as the geopolitical tension in this particular year?
Well, it's been a protracted war, as we know, Nisha, and we're slowly getting, we understand, closer to some form of resolution between both parties, and certainly President Trump's involved in that as well, with President Putin and Zelensky. So there's the first part of it. If this was to materialise and there was to be a complete and utter ceasefire, I think that would strip a number of dollars as far as any form of war premium out of the crude market. It could be a couple of dollars, maybe 2 or 3, that would come and be taken straight out of that price point. So that's what we're sitting with at the moment. It's very much a work in progress. And I think for the long-term horizon, one would hope and think that there would be some form of resolution by either end of first quarter or certainly somewhere between that and the second quarter.
All right. And apart from that, any other factors that are on top of your mind when it comes to the crude oil price outlook besides these two geopolitical tensions, Peter?
I want to keep a close eye on US dollar. I want to see what happens with the other commodities, of course, being industrial metals and the overall theme of, tariffs and how that's all going to, how it's still very much a work in progress, to see all of those moving parts come to some realization. This is the point forward. And so I feel as though it's very early days from a tariff perspective. There could be hiccups and bumps along the road. So again, we have to work through that and just to get to a point of this is the final positioning, and then, cheaper prices rolling forward from there into 26.
That's right, Peter. In fact, well pointed out, the uncertainty regarding the tariff war globally is also an uncertain factor along with the geopolitical tension, which really defines the matters and the price movements for many of the commodities. But what about copper hitting record levels? What's your view on that?
Well, it hit 13,300 approximately overnight on the London Metal Exchange. I also noticed that COMEX, Nisha, was at $6 a pound. Now, it's up over 20% since late November. Now, that is quite incredible, up 20% in 6 weeks. So I'm forecasting probably up to 14,000 by end of month, and the velocity that we've seen over the last maybe the last week or two has really started to gain even further traction and horsepower. So as far as a price point, yeah, maybe 14,500 to 15,000 over that first 2 quarters. And it's very hard to forecast out from there, but also keep a very close eye on some of those other industrial metals, Nisha, because it's their time to shine.
Other industrial metals also very important, but what really shone really in the year 2025 towards the end, Peter, was clearly silver. Silver has turned into the new gold, it seems. What's your projection for silver trade and the price movement?
If we go back, today's Wednesday, we go back to Monday and it was at $71. Now it's at $81. Now it's had a huge, so that's up nearly 15% in 2 days. Now, our all-time high is $84. I'm tipping that it'll get to $92 to $95 by end of month. and the overall momentum leading forward from there, through $100 sometime in end of first quarter. Let's just wait and see the momentum. But I don't think it's going to be just a straight, upward tick. There will be valleys and peaks, and you'll see big price moves, but that's the market for you. And this is not unusual to see big pullbacks of 6 and 8% in a day, and then acceleration over a couple of days to the upside. So, yeah, they're dynamic markets to trade, Nisha.
That's right, Peter. In fact, all that glitters is silver, in the last few weeks that we have seen. But thank you so much with all your perspective on the various commodities and the price movements. We'll revisit all of that when there are more certainties coming up and new factors that emerge. Thank you so much, Peter, and have a great 2026.
Thank you, Nisha.
Thank you. All right, moving on then, let's take it to the skies because Indigo is set to become the first Indian airline to really induct the Airbus A321 XLR. Now, this marks, remember, a major milestone in its international expansion plans, and the aircraft is expected to land in India after 3 p.m. Danish Anand, our colleague who has been tracking the developments very, very closely, joins in with all the details. Tell us, Danish.
Well, that's correct. Indigo has become India's first airline to induct an Airbus A321 XLR. Well, this is a narrow-body aircraft, but this comes with an elongated travel range, as well as it is a little bit much more wider when it comes to the length, so it can accommodate more passengers. But this is special for Indigo because we know that Indigo's international plans are very big, and if they induct such more aircraft in the next few more years, then Indigo will be able to rapidly expand its international operations. And since this aircraft can fly up to 9,000 nautical miles, so if we look at India's geography, then Indigo can operate this particular aircraft not only to one particular section in Europe, but Indigo can also start flying to deep inside the African continent, as well as Indigo can further fly deeper into more Southeast Asian destinations. So from that perspective, from Indigo's international perspective, this is a big step that has been taken by the airline, and sources are also telling us that by the end of this financial year, Indigo is expected to induct another A321 XLR. And as we speak right now, the aircraft is already on its way to India. It has just departed from Saudi Arabia some time back, and it is expected to land in India in the next few hours. And this will give Indigo a much relief as far as its international expansions are concerned, because last month NDTV Profit was the only channel which reported that Indigo's plans on international expansion is on track. And after this aircraft is inducted, we will soon get to hear announcement by Indigo that they will be deploying this particular aircraft on Delhi to Athens and Mumbai to Athens route. So all in all, if we see, it's a big day for Indigo, not only for the airline but also for India, as this is the first A321 XLR that is expected to join Indigo's fleet very, very soon.
Thank you so much, Danish, for getting us all those details. And that's right, for Interglobe Aviation, this is a very important moment of show of confidence, and also reinforcing that confidence after the recent crisis. So all plans are in order and on track. Let's focus on another company. We are talking about Sipla, which is 4.5% down in trade and is in focus as its partner, Pharma Greece, got a Form 483 at its Rodopi unit with 9 observations. So that's an important US FDA observation that has been really coming in, and that has put pressure on this particular counter. How will this really impact the company's operations and also the performance? Varsha is here to break it down for us. Varsha, tell us.
Yeah, well, first of all, it's definitely a negative news, and that's reflecting in the stock price as well. Now, why I say this, because if you see, the Form 483 has been issued to its partner, that is Pharma, and the 9 observations were noted, which includes your microbiological contamination, your poor aseptic practices, and the data integrity concern. Having a data integrity concern is definitely a very, I would say a negative thing for any company. And the observation number 4 also indicates data integrity issues. Now, how this is going to impact Sipla? One is the Pharma is a partner for Sipla for one of its drug, that is lanreotide, which treats hormonal disorders and certain types of cancer. If Pharma faces problems, Sipla's lanreotide drug will actually face manufacturing issues and will impact the sales of this drug. Now why? Because if you see, this drug is Sipla's largest or rather biggest US drug, contributes majority of revenue when it comes to US. So overall, yes, a big negative coming for Sipla, and that's reflecting in the stock price as well.
That's right, Varsha. Thanks so much for getting us all those details on that pressure point building on Sipla. Moving on then, robust jewelry business driven by surge in gold prices aids to Titan's Q3. In fact, the company saw a 38% rise in the domestic business, even as emerging business grew 14% for the company, and that's now reflective on the stock price as well. Mahima is here to share the update and also what the brokerages are saying about Titan going forward. Tell us, Mahima.
Right, Nisha. So as you rightly mentioned, robust jewelry growth is what has augured, which has in fact triggered the stock price as well in trade today. And largely the bar growth was flat, but on the back of rising gold prices, we've seen a good growth coming in the top line. Domestic business saw 38% growth. Jewelry business, that includes Tanishq, Mia as well as Beyond, grew around 41%. Carat Lane grew around 42%. Even in terms of watches, it grew around 13%. iCare at 16%, and emerging business, though a very small part of the business, also grew around 14%. In terms of where the commentary stands for each of these segments, jewelry said that the growth was backed by substantial average selling prices increasing. Gold coins nearly doubled as compared to Q3 FY25. Gold plain as a category grew strongly in late 30s. Studded also saw a healthy double-digit growth in mid-20s. So that means margins could now see some easing, and like-for-like growth was seen in low 30s. In terms of watch, premiumization trend continues in terms of strong double-digit growth, and smart watches, however, seen a decline. iCare growth was largely driven by both international as well as in-house brands, and emerging business, different categories, fragrances grew by 22%, women's bag around 111%, but Taneira is where the pressure is because it declined by around 6%. Now for as far as the brokerages stand, Morgan Stanley has maintained overweight with a target price of 4062. They're saying Q3 was a beat, 40% jewelry revenue growth versus their estimate of 21%. Citi has maintained neutral with a target price of 4125. Q3 update was robust growth in jewelry. Studded mix, however, has declined, and they're watching out for margin trajectory going forward. So this is the overall view of how Q3 business update is looking like for Titan.
Thank you so much, Mahima, for getting us all those details. Titan, the star stock for the day today, giving you 193 rupees of gains in a trading session. Meanwhile, remember, the company says that the objective is to lead in both lab-grown as well as natural diamonds, that they plan to add its next store in NCR, and emphasizes that its expansion strategy isn't really limited to metro cities. Let's listen in to the management.
Our objective is to be a leader in both segments and be in the pole position of both. So it is a very measured play. We opened the first store. The second store will open in NCR, and we hope to open a bunch of stores largely around Bombay and Delhi.
All right, so those were the important commentary coming in from Titan's management from the con call. With that, completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the level, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Hello and welcome to NDTV Profit. This is Hiral Dadia bringing you our all new offering, which is trending stocks. And with me is Sharad Dubey standing right at the NDTV Profit market pit with all the action that's happening so far. Sharad, over to you.
Well, looking at the market pit here, the day is very choppy, but we are near the day's low level when it comes to the Nifty index. Look, it has been in a range, but now it's falling and it's in the day's low level. That's where the key concern comes in. However, on a positional basis, Nifty Bank still looks decent, but there is kind of a choppiness in that as well. Let's pull up the Nifty Bank. Not so much fall coming in, and they're trying to arrest, in the day's trade as well. So it'll be very much important to look at the key levels also. Speaking of the key levels, there are important triggers for the market currently, which you should be factoring. The first is the Nifty index has fallen below the 10-day EMA levels, especially for the intraday traders. This is a very important level. What's the next level? That's more important. The 20-day EMA level is something where the support can come in for Nifty, and that is at 26,080. Focus on that number. Also, let's look at what are the other key factors for the markets remaining choppy. This is that Nifty Bank setup that is positionally remaining strong as well. It's holding up its 10-day EMA levels. Nifty PCR that has jumped in from 0.7 to 0.9, slight, you could say a bullish segment coming in, but very slight. Sectoral buying coming in the pharma and the jewelry segments. We saw good rally coming in, very strong updates from Titan and even Senco Gold, Kalyan Jewelers. Apart from this sectoral rally, we are seeing the global risk-on sentiment still prevailing. That means just a technical pause. Overall trend remains positive. Apart from this, the stock are moving on Q3 updates and the broking upgrades. And lastly, I'd like to also point out that most of the sentiment is suggesting a very narrow range of trade when it comes to the options segment. There is but a strong, you could say short covering happening in the certain IT counters as well. Back to you, Hiral.
Thank you so much for that. Interesting day of trade. Markets at the day's low and IT stocks are rallying, and this is a rally ahead of the Q3 numbers that will start trickling in next week from Monday onwards with TCS reporting. So that's the first stock, first sector that is on NDTV Profit's trending stocks watch list today. Moving on, you have Tata Tech, where JP Morgan has actually upgraded the stock to a neutral. KPIT Tech, they've maintained an overweight. Both these counters seeing a good move in trade today. Tata Motors PV, now it's a weak Q3 business update, and that is what is impacting the counter. So that's going to be a stock that we will be discussing on the show as well. Elecon, again, that's surging ahead of Q3 numbers. So watch out for what Elecon Engineering reports in trade. A strong move coming in on that one. Sipla, a Form 483 has been issued to key partner, and that's the reason why there is some bit of pressure coming in when it comes with regards to Sipla. It is one of the top losers as well. Bliss GVS Pharma, now it's hit a 4-year intraday high in trade. It is one of Somit Sarkar's dealing room checks as well, where a lot of buzz happening with regards to stake sale or acquisitions in the M&A space on the Bliss GVS Pharma. Jewelry stocks are surging in trade on the back of the robust business updates that we've seen from names like Titan, Kalyan Jewelers. You talk about any jeweler, PN Gadgil are buzzing in trade. We're talking about HDFC Bank, third consecutive session of fall after reporting the business updates, and we'll talk about that one as well. Keynes and Dixon as well, the analysts are eyeing a weak quarter in terms of Q3, and there is pressure building in on both these counters. You have IEX, likely relief that could be coming in terms of the market coupling case. The hearing is next on the 9th, and there is some action happening on an IEX in trade as well. DMart gaining ahead of Q3 numbers. Apart from that, you have Camlin Fine, Infoedge, Precision Wires, Meesho, all of these that we will be talking about in terms of the watch list. But first up, Sharad, let's look at the rapid fire.
Well, yes, Hiral, Gaurav Sharma is joining us from Globe Capital. Very good afternoon to you, Gaurav. First query is on the IT stocks. We have seen significant upgrades coming in from the broking houses as well. Even the mid-cap IT space is also buzzing. What would be your key picks over here in a fast way?
Hi, good afternoon, Sharad. So the key picks are the three. They have been always our favorites. That is Emphasis, Coforge, and Persistent.
And Gaurav, Tata Tech, there has been a JP Morgan's upgrade on that.
Little to talk about it. It has been an underperformer. I'll still take some more time to actually stick around with it. On technical front, 700, 720 is an important resistance zone. Once it surpasses that, then a decent up move can be expected.
And Gaurav, your views on KPIT Tech?
Again, not too encouraging. Still having multiple resistances around 1225, 1250. A struggling stock. Better to avoid.
All right. And Elcon Engineering, what's your view on that?
Elcon can be held. I think if a view is of 2 to 3 months, someone can hold Elcon.
All right. Any shorts developing for HDFC Bank?
Not at all at the moment. 940 is a very strong support. I'll first wait to see it holding around those levels.
All right. Precision Wires, volumes, that has picked up. What's your view on that?
Precision Wires. Not tracking the same very keenly. So I think still some more downside remains.
All right. What about Meesho? There is significantly correction already there. And now the lock-in also comes out.
Yes, some more decline is quite possible. 160 is on the cards.
All right. And IEX, yesterday there was a significant up move in that counter as well. What's your view now?
Looking positive, waiting for a break above 155. Thereafter, 165, 170 is pretty much possible. Take a stop at 145.
All right. That's the entire view coming in from Gaurav. Thank you very much for joining with us. Over to you, Hiral.
That's an interesting rapid fire that we've had. We've almost managed to get views on multiple stocks that are buzzing in trade. But moving on, it's that time where we're talking about something which is really buzzing. You're talking about the jewelry counters which are up and about in trade with robust business updates coming in as well. In fact, before we go across to Mahima, let me actually head across to Varsha to talk to us about one of the stocks which is in focus. You have Sipla, where its partner, which is Pharma Greece, got a Form 483 at its Rodopi unit with 9 observations. How will this actually impact the company's operations? Varsha is here with the details.
Yeah, well, first of all, it's definitely a negative news, and that's reflecting in the stock price as well. Now, why I say this, because if you see, the Form 483 has been issued to its partner, that is Pharma, and the 9 observations were noted, which includes your microbiological contamination, your poor aseptic practices, and the data integrity concern. Having a data integrity concern is definitely a very, I would say a negative thing for any company. And the observation number 4 also indicates data integrity issues. Now, how this is going to impact Sipla? One is the Pharma is a partner for Sipla for one of its drug, that is lanreotide, which treats hormonal disorders and certain types of cancer. If Pharma faces problems, Sipla's lanreotide drug will actually face manufacturing issues and will impact the sales of this drug. Now, why? Because if you see, this drug is Sipla's largest, or rather biggest US drug, so contributes majority of revenue when it comes to US. So overall, yes, a big negative coming for Sipla, and that's reflecting in the stock price as well.
Okay, so thank you, Varsha, for that. Let me get in Gaurang Shah, Senior Vice President at Geojit Investments as well. Gaurang, welcome to the show. Always a pleasure to speak to you as well. And I think this is the first time we are talking on trending stocks, which is a new offering that NDTV Profit has got. My question coming to you is your view when it comes to a Sipla. On the back of the Form 483 that has been issued, what would you advise investors to do with the 4% fall? And in addition to that, the entire Pharma pack is a buzz.
Thank you, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit. To you, a small disclosure, all recommendations that I'll be sharing this afternoon on your show, Hiral, are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we give advice to our clients on similar lines. They might have their investment interest. So we've been positive on Sipla for a very long period of time. And honestly, as Varsha was listing down the concerns, I think this is not the first time, first of all, Hiral, that Form 483 has been issued by US FDA on an Indian pharmaceutical manufacturing company. It has been there in the past also. The more important factor would be to look at how quick the resolution is of the issues that the Form 483 has highlighted. My sense is that maybe because of this short to medium term, there might be a little bit of concern. But given the track record and the performance and the credibility of the management, I don't think it's going to be very long before they can come out with the resolution. And remember one thing, Hiral, if you are in the business of life-saving drugs, manufacturing life-saving drugs, and if you want to compete at international level, you need to have your, backyard in place. You can't afford to have any shortfalls coming in.
That's with regards to where Sipla goes. Another stock that is in focus today is Infoedge, seeing some strong moves, and this is on the back of the jobs peak December 2025 data, which is indicating a 13% growth led by hiring in non-IT sectors, while hospitality has seen a growth of 29% led by Mumbai and NCR. That's where where all the parties and holidays are actually happening, and who are the people who are actually making this happen. Puneet is here. Puneet, what do you have for us with regards to Infosys? It has cooled off slightly right now, but strong moves coming in there.
Well, there are multiple key growth drivers, and as you rightly said, the headline number of 13% growth did signify a growth, but across sectors there have been actually a very strong performance in non-IT space as well. So hiring is up 13% in the month of December. That's the headline number. Insurance sector has actually grown by 34%, while there's been a 57% growth in the overall hiring for freshers. And that's probably one of the key reasons why the stock's reacting positively. Apart from that, hospitality also, as you rightly said, up 29%. Banking has witnessed a 7% growth, and while IT and banking are the leading indicators of growth, the growth in high single digits is still something that the street will take with both hands. 15% growth driven by the oil and gas space. And finally, non-metro cities like Kochi and Jaipur are starting to be hiring hubs essentially in the non-metro. So probably this could be a trend that we have to continue to monitor. But first signs of fresher hiring is probably one of the key reasons of the positive outlook on the stock today.
Thanks a lot, Puneet, for that. But Gaurang, I would like to get your views on Infoedge. What are your views on it, fundamentally?
So Sharad, again a disclosure, we have a fundamental buy call on Infoedge. Targets are approximately somewhere close to about 1600 from a long-term point of view on the fundamental side. And my sense is that, as economy recovers, as we move towards globalization, as we move towards becoming a large manufacturing hub, I think services and facilities and platforms which are provided by companies like Infoedge would be in spotlight for all the good reasons.
All right, so that's the view coming in for Infoedge. But one sector, it is sparkling all throughout the day. Good Q3 updates are also coming in. No doubt, that's jewelry segment. And Mahima is here to give us the entire details about it. Mahima, this entire space is, sparkling.
Absolutely, sparkling in how, right? You have something like a Senco Gold, which is really zooming in trade. I'll start with the business update coming in on Senco first. With regards to where the growth is concerned for revenue, it's come in at 51% versus that of 6.5% in Q1 and 28% in Q2. So big one coming in, and they've revised their guidance also, and that is one of the reasons as to why the stock is zooming. Overall, there was same-store sales growth at 39%, diamond jewelry growth at 36%, and gold prices, of course, have grown 65% YOY basis, but management is now confident of achieving 25% plus growth versus that of 18 to 20% earlier. The next one is Titan, again the top nifty gainer, largely on the back of the overall growth that has come in. Jewelry growth at 41%, Carat Lane at 42%, overall domestic growth at 32%. Overall jewelry growth, of course, is backed by the substantial average selling price increases. Buyer growth, however, is still flat, so that's still a concern. And overall, studded also saw double-digit growth, but margins is something that we'll have to watch out for, and like-for-like growth was in low 30s. And lastly, Kalyan Jewelers, here again revenue growth at 42%, same-store sales growth at 27%. International business is really picking up for them at 36% of growth, and Candor at 147%. They've launched 21 Kalyan stores this particular quarter, and overall, so I mean, of course, but the question really here is, Sharad, that going forward, volume growth, whether that comes into picture or not, because right now it's all value growth.
So basically value versus volume, that's the key concern coming in. But Mahima, the Senco's management is also there. We have asked a lot of questions to them. What would be your view on that?
I think going forward for Senco, we'll have to watch out for, because first 2 quarters were completely muted for them. This quarter they've really picked up, so that 25% plus growth that they've guided for, whether they'll be able to achieve by the end of FY26 or not, we'll have to wait and watch out for that.
All right, so it seems like there might be a top coming in for the jewelry stocks. Thanks a lot, Mahima, for that. But the action is definitely there in this space, and we can say the sectorally, a lot of movements are happening. Gaurang, I would like to get you on this jewelry space. Titan, of course, valuations at times, the questions are always there. But do you think this jewelry stocks, this juggernaut will roll on for the next quarter as well?
Well, Sharad, my sense is that firstly, I think all these stocks are driving you on the upside is purely because of the way gold, silver and platinum prices are moving across the globe, including India. And the outlook for 2026 for all these 3 special metals remains extremely strong and robust. I would restrict my comments to a company called Titan Company, which is the largest player in this segment, and it also has a well-diversified business. It is not only in gems and jewelry, it has got wristwatches, it has got personal care products, it has got perfumes, it has got accessories, it has got eye care. They acquired a company, I believe, some time back called D Damas in Dubai. Before that, they acquired a premium high-end platinum manufacturing company. And of course, the performance has been called Carat Lane, of course, I forgot to name it. So the contribution comes in from all the different verticals to the balance sheet as far as top line is concerned. And along with that, I think the bottom line is also very, very strong. They recently acquired, I think, a lab-grown diamond manufacturing company. I don't recollect.
I mean, yeah, that's the space. That's the space, Gaurang, which has been buzzing as well, lab-grown. But whether it works or not is anyone's question. In fact, To add more color to what's happening with the industry, we have Suvankar Sen, MD and CEO of Senco Gold and Diamonds, joining in. Suvankar, welcome to the show, and always a pleasure to speak to you on NDTV Profit as well. In fact, an interesting day of trade. The kind of growth that we've seen in terms of the business update, it's just something that no one could take their eyes off, right? Help us understand what has led to this growth. Is it value versus volume? And if it is only value and not volume, is that a concern?
It is not value versus volume. If you look at the Q1, Q2 and Q3, the Q2, because that was the quarter in which the gold prices just started moving up and the consumers were in a wait and watch situation. They were trying to understand whether this growth was sustainable or not. But by the time Q3 set in and it was the quarter for festivities, the Diwali, Dhanteras, the wedding season was at its peak. So I think that, the gold prices continued to move up. I think consumers became very bullish and they had to whatever postponement of their decisions that they had done, I think by Q3, they were all there. They had to buy what they had to buy. And I think all of that put together, what we did from our side as a company is that trying to understand the pulse of the consumer at these high gold prices, what is the weight range that will be selling well and what the consumers will be able to afford to buy. That was very, very critical to fulfill those demands and needs. And also the good part was that while we have seen a 51% overall growth, the diamond jewelry sales also has been at about 39% growth, which is, I think, a very, very encouraging situation where we see that at these high gold level prices, consumers are also open to for gifting or for self purchases, buying 14 karat. 9 karat was one of the lower purity introductions that we did, and 18 karat with studded as well. So I think all in all, it's been a good festive quarter. And I think the jewelry industry, along with the value, is seeing this kind of growth. Yes, but to keep in mind the volume, we have seen about a 7-8% degrowth in terms of volume. And YTD 9 months, if we look at it, that we are seeing about a 12% degrowth. But in a year in which 60% is where the value has gone up, obviously, for you and me, we are all consumers. It'll take some time for us to adjust and spend that much money. We have old gold exchange. We have all these facilities, but still consumers will take some time to, buy that equal volume of products that they were buying previously.
All right. Hi, Subankar. This is Sharad here. Of course, we speak a lot about gold, but now the industry is talking about lab-grown diamonds as well. I suppose there is an arm for that also for your company. What are the growth and expansion plans looking like for the lab-grown diamond segment?
So see, if I take our strategy, our studded ratio currently is at about 12.5%. Over the coming 3-4 years, we want to take our stud ratio from 12.5% to 15%. That is something that we need to keep in mind, whether it be natural diamonds, lab-grown diamonds, gemstones, all kinds of products. So this is one thing. And with the gold prices going up, it is very important that we keep on focusing on this segment because consumers will go for designs, will go for utility at a lower carat. Second is lab-grown diamond. We have seen that, the big players are also getting into it. And that means that this market is going to evolve and it'll get more organized. We had, thought of the similar decision 1 year ago. And what we are seeing is that consumers are actually gradually, the awareness levels are going up, the curiosity, the demand. People are saying that, if I have to fulfill certain desires, lab-grown diamond will able to fulfill those desires in terms of size of diamond or in terms of the design and the look that they want to get. So over a period of time, I'm quite confident. We have got 8 stores. Every year, we'll want to open about 5-6 more stores of lab-grown diamonds. But the natural diamonds, the gold, those will also continue to remain. Overall, the industry will become highly diversified. And just the way for clothes, we have something for formal wear, something for casual wear, something for young, something for the, saris, ethnic. I think the jewelry is going to get segmented in that way as we move ahead.
So, Suvankar, that's interesting. So when you're talking about the strategic shift that's happening towards probably lightweight, budget-friendly jewelry as well, and this is in response to the record gold prices, does that have any impact when it comes to the margin side of the business? Because we're still talking about a 7+% kind of a margin guidance for a Senco Gold. Do you see that normalizing somewhere else now?
Normalizing somewhere else will happen when we will see that this kind of the stud ratio change happens at a very strong fundamental level. If we see that the consumer preferences are moving more and more from the plain gold kind of jewelry to the studded in a very strong, sustainable manner. I would be very positive on seeing that this margin change from a 7% would move up higher. But till that time, right now, it is actually a very volatile time. It is a changing time. And in that changing time, we need to keep on trying everything. But as you rightly said, that currently with this scenario, the 7% plus is something that I will keep guiding everyone and not unnecessarily take it up too much high for now. But 2 years later, the situation could be different.
Okay, so situation could be different. So, Ankar, my last question coming to you is, if you have to look at 2026 as a year, your target when it comes to gold prices, what are you envisioning? And 2, what are those 2 or 3 key monitorables that investors should watch out for from a Senco Gold?
The gold prices, what we would hope for, it is dependent on multiple factors. See, we all are opening the news, everything is up there, and everyone is talking of $5,000 per troy ounce and such targets. Now, macroeconomically, if we look at it, what happened in the last week with the US, Venezuela, and such situations create a lot of uncertainties in a global scenario. It could work in 2 ways. One is that, the trust on dollar will keep on going down. Countries will want to diversify out of it. And that is where gold and silver will have a big role to play. The EV story continues to stay strong, for which silver is seeing what kind of movement we are all seeing. So, and, the other countries will also get the encouragement of doing such aggressive actions, which again will help the gold to move up. So in this scenario, I would be strongly, still bullish on gold and expecting a 15-20% increase. But again, to the investors, we need to be cautious. There could be certain months of corrections, and those 10-15% corrections are always something market expects. So we need to be aware of those situations and accordingly plan ourselves. So this is one. And the second question that investors should look out for Senco is that, are we being able to open stores? Like we have our plans of 18 to 20 stores for the coming financial year also. And our effort and endeavor will be that we will open more and more franchisees. Okay. Own stores, company-owned stores will obviously be there, but franchisees is something that we also want to open. So are we being able to open all those stores in the coming year or not is something they should look out for. Expansion in a sustainable manner. Second is that the stud ratio that we have always been working on with these current gold prices, are we being able to diversify out of just the gold and increasing our stud ratio, which will help us to open up the doors for higher profitability. And thirdly, I think that not just for us but for the industry overall is how are we managing our inventory. How are we ensuring the cash flows?
So, Ankar, we've got the 3 points, absolutely, but completely running out of time. We will expand on this in our next conversation as well. But thank you, Gaurang. Thank you, Suvankar, for joining us on the show.
Thank you.
Always, a happy discussion that we have on all of these topics. But that's all that we have on this edition of Trending Stocks. Lots more lined up on the other side. Please stay tuned. We have lined up lunchtime trades with Shreyansi Singh. Big stories of the day up next.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. What is it that Warren truly did to impact my life? My top learnings from the deadly duo in word.
Choppy day of trade on the Lal Street. Nifty trades below 26,100. Sensex down over 200 points. Unlike yesterday, Bank Nifty mirrors benchmark weakness. Broader market pressure persists. Meanwhile, Sipla cracks more than 5% as company faces regulatory overhang. US FDA flags contamination, aseptic lapses and potential data integrity concerns at its Greece facility. And it's Titan that is sparkling bright after reporting a robust business update in the third quarter led by strong festive demand and sustained consumer traction across key categories. Company outlines ambitions to lead in both lab-grown and natural diamonds in the con call. Infoedge in the spotlight as December white-collar hiring rose 13% led by non-IT demand. The stock trades higher as hiring momentum improves outlook. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a power-packed news update from the world of commodities, markets, and lots more, all while you grab lunch. But let's kickstart the show by taking a very quick look When it comes to the entire markets as well, so you do have Nifty, of course, that is under pressure, Sensex as well. The similar picture is something that you're seeing coming in on a sectoral basis is actually realty, auto, oil and gas, and as well as energy that are leading losses exactly in that order that I mentioned. Other than that, there's IT that's quite resilient at this point in time, 1.5% uptick coming in for IT, the top sectoral gainer as well. Pharma defense doing okay for themselves as well, holding on to a tinge of green at this point in time. Let's quickly take a look at the top losers though from within the Nifty pack. So there's a bunch of counters that you have. Sipla, of course, is down at this point, 4% up downtick coming in for Sipla, Tata Motors, PV, Max Healthcare, Maruti Suzuki as well as Power Grid are some of the other counters that are under pressure, along with HDFC Bank, that's the heavyweight that is also under pressure. In terms of the top gainers as well, you're looking at Titan that is doing quite well, sparkling after that robust third quarter numbers as well. So 4.5% uptick coming in as far as Titan's concerned. Geo Financial Services, HCL Tech, Wipro, Infosys and ICICI Bank, some of your top gainers as well. But let's also move on. Take a look at India's real estate market, because that is something that you should be looking at. And you do have India's real estate market also remaining resilient through 2025. So that's something that you have in terms of the background there, with fundamentals also holding steady despite a moderation in supply additions. You do have new launches that continue to tilt towards higher ticket segments, even as unsold inventory also rose due to supply consistently outpacing absorption. Before we go across to Ghulam Zia, Senior Executive Director at Knight Frank, to get you a little bit of an insight when it comes to realty, let's go across to Anushi to try and understand this a little better. Anushi.
Shansi, so Knight Frank has put out the first sentence very out clearly that markets have remained resilient in 2025. This is despite, the overall talk about escalation in terms of prices, about supply, or the cycle of the market that we are in, that we are looking the statement coming from. Now, they say that the composition of new launches have remained concentrated in these higher ticket sizes. In fact, this is where the overall contribution has also increased over the couple of years, and demand has remained resilient over here. But it's the supply additions which have moderated, with annual and half-yearly launches declining by 3% and 4% respectively. Even if you look at unsold inventory levels, while that remains on the healthier side considering they follow the quarter to sell metric, it has continued to see a subsequent rise since 2020 as new supply has outpaced absorption that is happening. So this is one key monitorable that we have to continue to see to understand the overall health of the real estate market as well. But coming to the launches and sales, in 2025, both of these metrics are about a 3% and a 1% of a downtick. Even if you look at all the real estate companies, they have seen a slowdown in terms of where the launches have been concerned, and the sales volume has also depleted. However, sales growth, if you look at that in the 2 to 5 crore of bracket, it's seen about a 20% of a growth. So you continue to see demand upwards in all of these high ticket prices. While in terms of residential price movement, NCR and Pune have seen noticeable declines in terms of where the price volumes are concerned, and this is due to higher price escalation also seen. Coming to the Indian office market here, 20% is the kind of growth that we've seen, and this is driven by GCC. So what are the key drivers that this office market will have is also interesting to look at. But this is the overall take that we have for real estate.
No, absolutely. Thank you so much, Anushi, for helping us out with that. So there you go. That's the update coming in on that front. New launches continuing to tilt towards higher ticket segments, even as unsold inventory also rises due to supply consistently outpacing absorption. In fact, let's also delve a little bit deeper when it comes to this one. We do have Ghulam Zia, Senior Executive Director at Knight Frank, in conversation with Anushi. Let's go across and listen into a slice of that conversation as well.
Your important report has come up for 2026. 2025, we saw, the residential segment, the realizations were on the higher side. But will this momentum continue, and will the H2 be better than H1?
First of all, thank you so much for calling me on this platform, and very warm wishes to NDTV, its staff, and all your viewers on a very happy new year. I'm talking about the real estate, and your question is, will the way forward be as good as what we have seen? First of all, let me just put the backdrop. Year 2025, much against a lot of those noises created that real estate has already started falling, at least 2025 did not really come close to the expectations of those naysayers. 2025, barely 1% drop, which is hardly anything. So from our perspective, 2025 has maintained the position that 2024 had. So it's quite a flat or a plateaued market as far as the year 2025 was concerned. Your question, 2026, the next half yearly, well, a lot can happen. Because if we believe that real estate is a cyclical industry with a typical cycle period of about 10 to 12 odd years, last 4-5 years of a marathon run where the property, the whole market, whether it is prices, absorption, everything was moving up. Now it's already 4 odd years. So is it the time when it has peaked out and the last year's plateau, is that a signal to say that we have reached the 12 o'clock position on the clock? Well, the time will tell. But from where we see it, the stabilization, what we have achieved in 2025, so possibly 2026 would also continue, or there would be some amount of reduction in business, minute one. Because again, if you look at the clock, from 12 to 1 o'clock is not a sharp fall, but a stabilization with a nominal reduction in the business is what we may expect in time to come.
Yes, and launches and sales, despite being at record levels last year, there is a slight degrowth coming in as well. What is leading to it? Is it the accelerated prices, or is the supply outpacing the demand?
And the macro picture, while we're talking about sales numbers, about 3.5 lakh, 350 odd thousand units sold in the top 8 cities, the launches have actually shrunk much faster, like lesser launches have happened. The reduction in sales, if it was 1%, reduction in launches was 3%. So net, what we're talking about is that the typical terms that people use, inventory, overhang, etc. The inventory that is left in the market would not take more than 2 years to be completely absorbed. So industry health-wise, it is nowhere to worry. So the point then you're making is it the price points? Yes, of course. The price points have actually gone pretty high in quite a few markets. Like, for example, if I talk about NCR, in last 1 year, we have seen a growth of almost 19% in the prices of NCR average. On the other side, Hyderabad and Bengaluru were the second and third in position with 12 and 13 odd percent. Mumbai at 7.5, 8 odd percent. So except for these 4-5 markets, the other markets have actually behaved pretty much in line with the inflationary trend. 7-8 odd percent of a growth is very close to the inflations. But these 2-3 markets are really actually going completely unaffordable, whether it is NCR or Bengaluru, etc. So those price points are a lot to worry about.
All right, but what would be the key pricing trends in the ticket sizes in the key regions if you're talking about? If you could just give us more details, Ghulam.
So the trend, if I have to really try to foresee in future, the outlook seems to be pretty stable. The price rise in last 2 to 3 odd years has been spectacular. So if a stability or affordability is a question in a developer's mind, the price rise would not be as severe as what we saw in last year for sure. So what we are forecasting, or where we see it from, we would want to see the prices remaining stable. So if we have seen, say, about 15 to 20% of rise in a few of these markets, I would want to believe that at least in these markets, the price rise would come down to single digits, which will be in line with the inflationary trends. So overall, the growth in the coming year in prices will not be as spectacular as it was in last 2 odd years.
All right, and there you go. That's Sharad in conversation with Knight Frank's Ghulam Zia, and that's a reality check, if you will. But this, of course, viewers, as you know, is a show where we get you updates from the world of commodities as well. So let's take a look at some of the things that are happening on that front. You do have the US that is set to receive 30 to 50 million barrels of high-quality Venezuelan oil sold at market price. Oil largely looking away from Venezuela at this point in time, and copper also sparkling brighter than ever, well above those $13,000 a ton levels as well. Silver sparkling bright is also the story that we have even in 2026. Let's take a look at all of these and the factors that we have powering these sort of moves that we've seen coming in. And we do have Ajay Kedia, Director, Kedia Advisory, joining us this afternoon. Thank you so much for taking time out, Mr. Kedia, and a very good afternoon to you.
It's a very good afternoon, and golden afternoon, we should say, because 2025 was a golden year for commodity, and still we expect 2026 is going to be a fabulous for commodity.
Well, absolutely. And, I'm actually quite confused if you should be calling it silver afternoon right now, given that, you're seeing those kind of moves also continuing for silver, even in 2026. And, if that's the first thing that I wanted to lead with, actually, because, when you take a look at silver, if you sort of saw the script, if you tried to write this script a year ago, you wouldn't frankly be able to, you would sort of laugh it off, given the kind of levels that we've seen. $80 an ounce is something that we couldn't have imagined back in COVID days when you were looking at like $20, somewhere around $20 to $30, that range-bound year that we had coming in. What do you make of the key tailwinds when it comes to silver?
Yeah, surely, because see, if we majorly, what is the difference that has made 5 years fabulous for silver? Last year we have seen 180% gain. See, first side is total supply. Total supply was around 1,000 million ounce since 2015. That has never changed. And the Capex was totally from the mining side was not been up to mark. Because of that, supply deficit was continuously there. From the demand side, there was a totally change because industrial demand has came from 450 million ounce to almost 665. Jewelry demand was consistently to be normal, but we have seen the investment demand, which was hardly around 20-25 million ounce in 2015-2016, has rapidly gained to the level of 200 million ounce. So that has created a structural deficit, and that is why we have seen prices move towards to the level of 80 and still counting, because metal is under particularly more squeeze over there. Maybe a level like 100 would be there, but gain like 180 and consistent linear gains never we have seen in last 15-20 years. So there might be a correction of 20-25%. That could be a good level to re-enter, but frankly industrial demand and investment demand is totally holding silver from current level.
All right, and thank you so much for helping us with that outlook when it comes to silver. And that, of course, is something that is top of mind. But I'm actually quite tempted to try and get a sense of what you think when it comes to energy prices as well. Because, there's oil, there's a bunch of things that you're looking at. And that geopolitical risk premium, I'm not sure if we've seen that really baked in the pie. What do you think about that?
See, Venezuela is one of the biggest crude reserve we know very well, and we were also expecting the conflict between US and Venezuela will carry some risk premium and prices might go to the level of 65, 66. But on the contra, we have seen prices is now on the verge of reaching 60 level for Brent, because we have continuous oversupply. Right now, Russian supply, OPEC plus supplies continue to be there in the market, and on the demand side also we have never seen major changes. That is why prices seems to be trading with a slightly lower side. But don't expect a free fall like situation in crude oil. We expect for 2026 first quarter could be oversupplied to the support of $57 for Brent. But from the second quarter onwards, we can see the demand would improve, supply side would be slightly leveling up. So the range could be $57 to $70 for 2026.
Right, and that's the take coming in as far as oil prices are also concerned. But Mr. Kedia, it's actually copper's day. If you look at it, the kind of levels that you've seen for copper maybe a week ago is something that, a lot of brokerages were not really penciling in. You do have bullish targets coming in from Citi as well. When it comes to copper prices, 14,000 is something that they're seeing in the horizon. What do you also think about some of these key tailwinds that we've seen as far as copper is also concerned?
Yeah, I think the holistically base metal rally should be there in 2026. We have seen copper prices moved more than 60% in 2025, and then zinc, aluminium, and in fact, lead was the slowest metal up till now we have seen. But in last couple of days, prices has gained by more than 20 rupees on domestic side. Nickel has gone to 19 months high after the Indonesia had changes their strategy. So overall, I think the rally would be continue for base metal, but for copper, I think a level like 14,500, 15,000 is in front of us, as structural supply deficit is supporting the prices. From the demand side, we have EV, solar, everything has been supported. There is a report going on in the market that silver can be replaced by copper only, and that is why we have seen copper prices is chasing the silver rally. We can use silver copper ratio, which is extremely on very high side, that suggests either silver should correct or copper should run up this. So I'm more bullish on copper for 2026. Maybe on LME we can test the level of 15,000, and followed by aluminium, zinc, and other metal also will follow the same because of rate cuts going on. Inflation are in normal case. So overall, I think the base metal prices should get good support.
Well, absolutely, and Mr. Kedia, the last question that I actually had for you in terms of copper, it's quite interesting what you're saying when it comes to copper because, Citi interestingly actually sees copper prices peaking later this month. So what you have in mind when it comes to the tailwinds, I'm quite curious about. Of course, this is known as the devil's metal, and we've seen that rally also come in, and that's quite interesting also. But in terms of the key tailwinds, are you looking at tariffs? Are you looking at that entire timeline in terms of June 2026 being key for copper? Is that something that is also driving this bullishness when it comes to copper?
So I think furious rally has been seen in last couple of months. Three things one has to keep in mind. One is the supply side, because right now the things have been very cautious according to supply. Second would be the tariff concerns. And third would be the China, because lunar year holiday has been there. Sales books are picking up. That is why we have seen consumption in all metals has shoot up. But once we are out of this lunar year holiday, might be from March and April, we can see some kind of profit booking. But overall, I think the demand from EVs and industrial demand is going to peak. So we don't expect any crash-like situation in copper because of fundamentals. Maybe price can little bit consolidate and have a time correction. Support could be around, let's say, 11,800 to 12,000 as of now, but higher side would be kept around 14,500 to 15,000.
All right, then we hope that your afternoon is as sparkly as copper and silver, Mr. Kedia. But before I let you go, I quickly wanted to try and get a one-word answer from you in terms of copper and silver. Which of these two metals are you more bullish on right now?
Looking to the ratio and looking to the performance, what we have seen and fundamental, I would be more bullish on copper rather than silver. No doubt, silver perpetually we are expecting $100 plus.
Right.
But with the rally of 180, I think some sign of consolidation is required for silver. But copper, I am more bullish.
All right, and thank you so much for chiming in with that outlook. It's quite the bullish outlook when it comes to silver as well. Thank you so much for joining us this afternoon as well. But let's also move on. So there you go. That's the entire update when it comes to the world of commodities. But let's move on. And Dr. Lal PathLabs is the one to talk about marked its foray into premium preventive healthcare with the launch of Sivaka, a high-end wellness center in Gurugram. You do have Rishabh who spoke to Shankar Banerjee and Ved Goyal, also from Dr. Lal PathLabs at the location itself. Let's go across and listen into a slice of that conversation.
We're at the new center. We're seeing the launch of a new premium wellness brand to come out of the Dr. Lal PathLabs house. Talk to us about the rationale and also talk to us about the sort of short-term and long-term vision you have with regards to this.
So, Lal PathLabs has always been a pioneer in terms of diagnostic testing. However, this is a venture which is moving from the illness space to the wellness space. Okay. What we see is, a lot of people are getting diagnosed with really life-threatening diseases early on in their lives. And for us, it is important to see not only you look how you are fit on the outside, but you need to get yourself tested on the inside, which really gives you a true sense of what your health is all about. So this is our kind of flagship store that we have started to really get into on the wellness side and predictive testing.
Interesting. Illness to wellness, Mr. Goyal. Talk to us about, what sort of a role you're seeing premiumization in this particular space, right? Your CFO, I'll talk to you about pricing bit as well.
So pricing, in this space, which is wellness and very different concept. It is not only testing. It is a 360-degree, your preventive check. And in that, premiumization, people who are ready to pay, who wants good services, who wants everything under one roof, and who don't want to visit some of these places like hospital where there is a chances of, where they don't like. So this is the place where they can spend. And on the pricing side, I think we are the best among the industry who can provide good services at affordable rates. And that's the idea where we have opened this center.
Interesting. Let's take a walk.
Add to that point, the concept is really not about premiumization. Mm-hmm. It's more about saying what is right and what is personalized to the individual. Okay. If you see the way the base packages are designed, mm-hmm. They are at an age and gender level, and then basis risk factors, it gets curated to become more individualized. So So, so the pricing is more related to the number of tests that get done. And actually, if you see from a list price perspective, they are discounted. So it's really not, the concept is really not premiumization, but we know that, there's certain type of people who will come who need the right kind of service. So that's the atmosphere we were trying to create here.
Got it. Beautiful. Moving on to the larger industry questions, sir, and let me know which one of you will take this one. What is driving growth today? Is it volumes or is it pricing? Which one is doing better for you as a growth lever at Dr. Lal PathLabs?
So at Dr. Lal PathLabs, I've been saying this for quite some time now. We haven't really taken a price increase. Okay. So what's driving our growth today is driven by patient volume and test volume, and a bit of what we call as a test mix improvement. So there's a mix improvement benefit that we are seeing. So for about 3 years now, we haven't really taken a price increase. So if you see from that point of view, it's primarily volume driven.
Yeah, I think the intent is to drive business through volume only. Price, as far as we are able to absorb the inflation, so we don't want to increase the prices. And such a scale and size, we are able to absorb the inflation, and that's why Shanko is mentioning that we are able to absorb that, and that's why we have not increased the prices for last 3 years. Yeah.
Got it. Talking about pricing, sir, this is one space where there's a lot of competition and there's a lot of undercutting that also happens. There's very aggressive discounting. Talk to us about the pressures there. You're saying there's no price hike that you've taken in effect, but competition remains. So how do you plan to tackle those two?
See, I think pricing is not the only criteria. To be honest, I mean, it is one of them. But, the services, the, accessibility and the, menu which we provide, probably that is not, and pricing, what you probably talking is, which is routine. People who are online, who are providing just, e-commerce kind of services where they have limited test menu. We have a full bouquet where we provide more than 5,000 tests, very, very high-end tests. And those are not very, very, available in the market, and they are not able to do those tests. But having said that, we are not getting into this price war ever. We believe in quality, we believe in services, and that's where we always provide quality and services at affordable price. We are not very off from the price which they are providing, but we are very competitive on that.
Interesting commentary, very interesting point of view, gentlemen. Also talk to us, you have a target of about 600 to 800 new collection centers that are coming up, and the focus is largely on smaller towns. Talk to us about the sort of revenue per patient that you're seeing in those regions versus your core markets such as Delhi NCR.
So, firstly, if you look at our markets today, Delhi NCR contribution is actually 1/3 of our revenues only, right? It's a core market, it's the legacy market, it's where we have kind of, evolved from. But 2/3 of our business is actually outside of Delhi NCR today. So if you look at, the pricing or price per patient or realization per patient is slightly higher in Delhi NCR versus the rest of the country. But that has actually become maybe more or less standard for us. What we see is that between, a tier 2, tier 3 market or a tier 1 market, our pricing for the patient is quite similar.
All right, and that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in. Small Cap Bazaar takes all of the action forward. Stay tuned.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. It'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Sandhar Sharma, and I am your automate.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. But before that, let's go across and see what's on the show today. Firstly, we'll be speaking with the management of Sandhar Tech. Now, recently, MK had initiated coverage on this counter with a buy rating and a target price of 825, which suggests a return potential of nearly 43% from the current levels. So what's the way forward is something that we want to know from the management of Sandhar Tech. Apart from that, all the small caps jewelry stocks like TBZ, RBZ, Radhika Jewel have been buzzing in trade, and this is after the fact that all the larger peers like Titan, Kalyan and Senco have reported a strong growth in the third quarter of FY26. So a rub-off effect coming in for the small cap jewelry counters as well. That stock is up nearly 6%, but in the last 6 months, the stock has also fallen nearly 50%. Incred came out with a note where they are seeing a return potential of more than 200% on Camlin Fine, and will be also touching upon Silver Touch Tech. In fact, that counter is up nearly 110% in the last 1 month. So what's the reason behind this and what could be the way forward is something that we'll be discussing with our fundamental analyst and our in-house analyst as well. But if you look at the markets, the Nifty, that's down for the third consecutive session. In fact, from the record high level that we had seen a couple of days back, the Nifty, that is the benchmark index, has fallen by nearly 300 odd points. And today in trade, it's the Nifty IT index that's in green, up around 500 odd points, but the Nifty Bank index, that's losing some steam, down around 350 odd points in trade. But Mahima, when it comes to the small cap segment, what's been buzzing?
I think a lot of jewelry stocks, as you mentioned, right? So Amit, in the small cap space, you have counters like Shanti Gold International, which is up 12%, TBZ, which is up 11%. There is Radhika Jewel Tech, which is also seeing gains in terms of where the trade stands. You have Silver Touch, which is up 9%. But some other counters which are doing fairly well includes counters like IFB Agro, which is up 9%, Medicam and Bio, SG Finserv, Camlin Finechem, as well as Rajatan Global. All of these counters doing very well in trade today. On the flip side, you have counters like Systematics Corp, which is down 3%, Signpost, Kamdhenu, United Polyfab. All of these counters down by about 3% each. And some other names also include NDR Auto as well as Mindtech, which are down 2% each. So that's with regards to where some of these small cap names are concerned. But with that, you know, as promised, we're joined by the management of Sandhar Tech. We have Jayant Davar, who's the chairman and MD and Chief Executive Officer of Sandhar Technologies, joining us now. Mr. Davar, thank you so much, of course, first of all, for taking out the time and speaking with us at NDTV Profit. My first question to you is with regards to where, your overall financials are concerned. In terms of the overall growth, I mean, if you take a look at the past 3 years, in terms of compounded sales growth, you've grown at 19%. Profit growth has also been at that 35%. But just want to understand that, now that your Capex is at its peak, you have a lot of, positive momentum coming in the PV space, considering the GST rate cuts come in. How are you penciling growth to be beyond FY26, let's say for FY27 and 28?
Thank you for having me. Well, the good news is that like you mentioned, our Capex cycle is over. So we've invested substantial amount of capital expenditure in the last few years. And the idea is to build a runway for the next few years. And we believe that the growth that you mentioned, we do have a highway for that kind of growth to be compounding itself over the next few years comfortably. So if you're asking for growth, whatever growth you've seen, I would say that that growth would continue, in fact, maybe exceed that number in the coming years.
Give us some idea of what has been your current utilization levels, and on the expanded capacity, what could this number look like, say, 2 years down the line?
Well, I cannot give you an exact forward consensus in that sense, but all I can say is that I see no reason that the growth that you've seen in the past few years, which is around 19-20%, will continue to have that growth, maybe get some even higher aspects to it, irrespective of the movement of the auto industry. So what I'm saying is that we've done some acquisitions in the past. They are well on their way to consolidation and stabilization. And it gives us a visualization of a 20% kind of growth for the next few years.
Right. If you look at your EBITDA margins, it has been quite volatile. In the second quarter, it was around 9% odd. Before that, it was around 7.5% to 8% odd. And last year, the number stood at around 10%. So say 1 year down the line, where should this number stabilize at? Any guidance on that front, if you could share?
Well, see, the potential of our company to be able to emit EBITDA is close to 12%. However, we are a company which is very diversified. And from time to time, whenever there are growth pains that happen, for example, in this particular year, we did an acquisition of the die-casting business of Sundaram Clayton in Hosur. And obviously, that has brought in the revenue of close to 400 odd crores. But in terms of EBITDA margins, those are very, very small. We are currently at about 3.5-4%. It will stabilize when we move to our own facility, which we expect to do at the end of this quarter or beginning of the next quarter. And then things will stabilize. So overall, I do believe that on a gradual basis, the EBITDA margin should go towards what our ideal potential of 12% is. You will see improvement in the quarter results now and in the subsequent quarter, where the margins that you had shown in your chart here are definitely going to improve. But I would say that on an averaged out basis, a good margin of 10.5% to 11% is definitely achievable in the coming years.
Mr. Dawar, you talked about acquisition, you talked about Capex being at its peak now. Considering all of these factors, and you said that you'll be growing at that 19 to 20% mark, do you think that your ROC going forward is going to improve, let's say, from a two-year horizon point of time, let's say by the end of FY28, mid-teens is something that you'll be looking at?
Well, to be honest with you, if you were to remove some of the new capital expenditure, if you were to remove Sundaram Clayton, or you were to remove some of the setbacks we've had in some of our foreign companies, our margins even today are close to 15-odd%. We do believe that, sorry, I said margin, I meant return on capital employed. We are targeting that we should take this number of 15% to be post-tax in the next couple of years. That's what we are targeting. So obviously, there is a huge room for growth, and we are slowly but steadily moving to that number.
So as you were speaking about your foreign units, I believe that the restructuring of the overseas unit is already underway. By when do you see the EBITDA break-even to come in here?
We are very, very confident that in this quarter itself, we should be able to eliminate all the losses, or the margins will be positive enough. So you will see break-even in this coming quarter, or in the quarter that we are sitting in.
Dawar, with regards to your JVs, you've shut down 2 JVs, but 5 of your JVs are still profitable, but contributing in a small way. But considering your growth going forward, do you think that all of these JVs will start contributing in a big way? Because if they do, your top line is going to grow even further beyond that 20% mark. Is that possible?
So one, the revenue on the top line of these JVs doesn't come into the company because they're separate companies per se. Yes, the bottom lines do come into the organization. We do believe that there is potential because most of these joint ventures are in areas of new technologies. And as more and more adaptation and adoption of these technologies happen in the Indian sphere, we should be able to benefit more from them. But the fact that all of them are stable, all of them are profitable, all of them are growing, is a matter of great relief for us.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for Sandhar Tech. Well, let's also welcome in the fundamental guest, CA Tapan Doshi, research analyst at catapan.in. Tapan, you heard the management. They are quite confident of turning around their overseas subsidiary. The growth going forward looks quite robust given the fact that the company is done with most of the capital expenditure. How are you looking at this counter at the current valuations?
Good afternoon, Sumit. Yes, even I am positive. If you see, yes, management is quite hopeful, and even you see the automobiles data and all that, it is quite good. So auto ancillary companies will be benefited. Again, I hear from here also there is a margin expansion plan going on. Again, EV parts growth is already there, and it will, for a long term, it will be there. Again, if you see their ROC is improving over the time. I think the management targets, of course, they are targeting high, but there will be a higher utilization of their capacity also. So I'm quite positive, and looking at the current scenario in automobile sector, I think this stock may go up from here also. So yes, I'm looking at the current valuation. Yes, someone, if they want to get in and buy on dips, they can also do that.
Well, with that, let's slip into a short break and we'll cover more small cap stocks on the other side.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town?
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. It's time to take a look at the F&O space, and we have Sharad standing by to help us understand as to what the F&O space is queuing right now. Sharad, yet another day of range-bound trade.
Exactly, that's the real point. It's a choppy trade, and options data is also suggesting that same movement happening. But bits and pieces, sectors, Q3 updates and brokerage takes is what's driving the markets. Look at Titan, all the jewelry stocks are doing well. It's a top gainer in the Sensex index as well. Apart from that, IT positioning is also, we are seeing some basket buying happening across the counters. But amongst the losers, there are higher numbers are there. HDFC Bank for third straight session, we are seeing selling pressure. Apart from this, Power Grid, M&M, Tata Steel and Maruti also, we are seeing significant selling happening. Apart from this, looking at the overall Sensex contracts also, it's likely even Stevens in both the spaces for both call as well as put options. Also, looking at how BankX is performing, it is slightly better placed than Sensex, but remember Sensex did dip to its below its 10-day EMA levels as well, and BankX also some kind of divergence. SBI, we are seeing profit booking happening. IndusInd Bank, it's down 2% as well. Apart from this, the other banks also in focus, how they have actually moved. These are the important contracts, but stock specific move is something which we are looking at today. Strong long build up happening, especially in the jewelry stocks. You can just pull that up. And now, but the stocks have moved. The tech ones, Hitachi Energy has also made it to the list. Interesting names. Short covering, let's fire those stocks as well. KPIT Tech and Avenue Supermart moves in. Good volumes also coming in. It's up almost 5%. Long unwinding candidates, they are, let's just pull up the long unwinding candidates as well, where we get the perception of NBCC and Torrent Power coming in. And lastly, short build up. These stocks include Sipla on a broker upgrade and Maruti. That's also seeing big cuts as well. So these are the stock specific and sector specific moves in the F&O space today.
Thank you, Sharad, for that F&O snapshot. But as you're with us, could you also take us through what's been buzzing when it comes to Silver Touch Technologies. The stock is up nearly 110% in the last 1 month. I believe they had won some order recently.
Interesting name of the company in the small cap space, and apparently it's not silver touch. It seems like there's a golden touch has come to this counter. Stock is up in the upper circuit of 10% today, and it has hit its all-time high levels. And the numbers, if you look at it, that has jumped up 110% in just 1 month. Curiosity takes us to what the company is all about. Company is a leading end-to-end IT solutions provider, has a strong footprint in e-governance, enterprise technology, and digital transformation, and also providing emerging technologies as well. Apart from this, there are recent news flows also which has aided the rally of the stock. This includes the Indian Navy order which has come in. They are the digital transformation partner for that, and also this mandate is for the iPad SVT initiative, and the company will be putting up with these digital transformations for this segment. Now, important board meet also coming up on bonus and stock split, and that board meeting will be held on January 16. More liquidity might be coming in this counter, and company's outlook going ahead is very bullish when it comes to the e-governance segment.
Right, thank you Sharad for that detailed link on Silver Touch. Tapan, have you tracked this counter after this 110% move? What's your take when it comes to Silver Touch Technologies? If anyone is at all invested in this counter, should they exit, or there could be more upside from the current levels given the fact that they have recently won an order from Indian Navy?
Yeah, it looks like it's like a golden touch because the stock has gone up a lot. Again, if you see the valuation now, it's almost 75 P. Now, for any IT company, this is too high when the IT companies are not performing as such. Yes, they have a e-governance deals now, which is helping that again from Indian Navy also. And also from here, the management is targeting a very good digital growth. Again, the AI related and the cloud related demand is there, which is helping this company. But as no, if you see the 5 years CAGR growth is around 17 to 20%. So at this point, it's very difficult to justify this valuation. But I think if someone is holding, keep a stop loss 15% down, and you can ride in. Otherwise, new entry is not possible. They have to wait for an entry at a much lower level.
All right, so that's with regards to where Silver Touch is concerned. But shifting focus and moving on, Camlin Fine Sciences is in focus after InCred maintained its ad rating and raised the target price, citing a strong upcycle in global vanillin prices. Varsha is here with more details, who tracks this very closely. Varsha, what is the demand-supply dynamics and earning visibility looking like?
Well, first of all, 236% upside is what InCred is talking about, and the big trigger over here is the tight vanillin market, wherein if you see the global vanillin supply structurally has been tight when it comes to US and Europe, and the Chinese supply has been largely eliminated due to anti-dumping duties, and this has led to surge in prices. And why Camlin is in focus? Because if you see their vanillin plant is now stabilized and the initial issues have been solved, and the commercial sales are now back on track. Now, if you see the vanillin price upcycle, so the price has gone above $32 per kg, and the European prices have also inched up, and the higher prices means higher profits, direct benefit to Camlin. Now, onto the demand-supply gap, if I were to talk about, the US and Europe demand, if you see, stand at around 14,000 tons per annum, and the local capacity is significantly lower than what is being demanded. And the Solvay's, which is the other company, their plant is also starting slowly, not enough to fill the gap, and hence you're seeing the rise in prices, and Camlin being the direct beneficiary for that. And Camlin is not just a commodity business now, because they also sell high value blends, not just raw vanillin, which means rather higher margin for this company. And lastly, if you see the Vinpai acquisition give access to clean label specialty products for Camlin, and which also opens new markets like dairy, cheese, nutraceuticals, and which makes Camlin a solution company. So these are all the triggers, which has led InCred to hike the target price with 236% of upside.
Varsha, thank you so much for bringing those details to us. Tapan, your quick view on this one. Do you also think that 236% upside is justified?
No, I don't think so, because if you see last few quarters, these companies making losses. Again, yes, there are good news coming in, but no, as such, no, still the company has not performed at that level. And management is targeting, a lot of utilization from here. But I see still a lot of headwinds also. So still, unless a few quarters are good, I'll not get into this stock. So my take on this stock still will be avoid.
The other, stack of stocks that are in focus are the jewelry stocks. So you have your big names that have come out with their business update, Titan, Kalyan, Senco, etc. And that is having a ripple effect in these small names. You have something like a Tribhuvan Das, which is of course in the business of retail, sales of ornaments made in gold, diamond, silver. They've not come out with their business updates yet, but first half for Tribhuvan Das, revenue growth was at 12.7%, EBITDA growth at 45%, and PAT growth at 63%. The other one is RBZ, where of course they're engaged in manufacturing, trading and job work of jewelry, in the gold and silver space. For them, the first half revenue was up 11%, EBITDA at 47% growth, and PAT at 50%. And last one is Radhika Jewel Tech, which manufactures, trades gold, diamond and platinum jewelry. In terms of the large trends that we've seen coming in from all of these big jewelry names is that first, of course, gold prices year on year have seen a growth of 65%. So on the back of that, a lot of revenue growth uptick is coming in. So largely, it's your value growth rather than a volume growth. Robust jewelry growth over 40% is seen in all of these three companies that came out with their business update today. Same-store sales growth is also coming in strong for a lot of these names. Studded mix has started to pick up a tad bit, but we'll have to wait and watch out for the earnings to see as to how that reflects in the margins. And international business is also picking up for something like a Kalyan Jewelers and Titan. Lastly, buyer growth is flat and volume growth is also flat. So all of these factors considered, we'll have to wait and watch out for as to how the earnings fine print suggests. But Tapan, I'll quickly come to you on these jewelry names. Any of these names that you are finding attractive in the small cap space?
The biggest positive for all these three companies which you mentioned, of course, they are small companies, and they are already beaten up, almost more than 35 to 40% down from their top. And if you see their sales and all that, it's modest, profitability also modest. The thing is, the valuation is going on their side currently, and at this level, that is what you can see the bounce back, a good bounce back. When big companies are performing such a level, very good updates. I think strictly expecting that for these companies also the result may be better. So yes, for all these three companies, if anyone is holding this company, please hold it. I think better times are coming, at least 1 or 2 quarters, because I think overall the jewelry sector is showing a good uptick from here.
Thank you, Tapan. Thank you for joining us and giving us the perspectives on the stocks that were discussed on this show today. Well, a lot of small cap stocks that we have covered today. But that's with that, it's an end on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, A contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
You're watching NDTV Profit. I'm Mahima Vachajani and with me is Puneet Jhaveri, and this is the afternoon edition of Ask Profit, a show that gets all your stock related queries answered. For viewers who are tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen up there. But before we move on to your queries, a quick look as to how the markets are doing. The Nifty 50 trading below the 26,100 levels now, down 0.6% at almost at its day's low point. It's been a range-bound trade, but also a very topsy-turvy trade is what we've seen. The Bank Nifty also in the red, down by about 0.3%. With regards to where the contribution to the Nifty 50 is concerned, let's try to pull up that and see as to what are the counters that are actually contributing well to the Nifty of ICICI Bank, Titan, TCS, HCL Tech, on the green side. And on the flip side, you have counters like HDFC Bank, which continues to weigh down on the Nifty. Maruti, Bharti Airtel and SBI are some other names with regards to where the contribution is concerned. But let's try to pull up the sectoral heat map to see as to how sectors are faring in trade right now. You have counters like the Nifty IT, which is doing fairly well after seeing a lot of pressure in the past couple of days, up 1.7%. Nifty Pharma also in the green, up 0.5%. But on the flip side, Nifty Auto facing pressure, seeing profit booking down 1.3%. Nifty Realty, Nifty Oil and Gas, Nifty PSU Bank, all of these counters continue to be under pressure. So that's with regards to where the sectoral heat map is concerned. But quickly, the advance decline ratio, because that at the start of the day today was almost even Stevens, but right now you're seeing declines more than advances, and that chart has flipped. More towards the bearish side is what we're seeing on the broader end of spectrum, and that's reflected in the mid cap 150 and the small cap 250 as well.
Well, most certainly. And what a zigzag kind of a day we in the broader markets, and all the outperformers of the last 2 days are under pressure. So Maruti Suzuki hit a high a couple of days ago, down today almost 4%, and it's almost puzzling as to why that could be. But the BSE 500, before we start the show and take all your stock related queries for the afternoon edition of Arts Profit, Tata Elxsi is one of the biggest gainers. So is KPIT Tech, and it's back on it's on the back of a note from JP Morgan, and we'll discuss that with our experts as well. While on the losing side, Maruti, as I mentioned, M&M Finance and CSB Bank are on the back of the quarterly updates a couple of days ago are down. But let me welcome in Mr. G. Chokalingam, the founder and MD of Economics Research on the fundamentals, while Aditya Agarwala will help us on the technicals, the head of research and investment at Invest for EDU. Gentlemen, thanks so much for joining in for Ask Profit, the afternoon edition. Let me start off with the first query, and it's on Rainbow Children Medicare. This query is coming in from Sriram Raghuram, who's from Chennai, and he's bought it at 535. So he's certainly done well for himself on this particular trade. Gains of almost 15,000 rupees as we speak. He's asking that, a long-term view on the stock. So let me go to Mr. Chokalingam for this. Good afternoon, Mr. Chokalingam. Your view on Rainbow Children Medicare, he's almost in gains of almost 100%. Should he continue to hold?
This healthcare industry, particularly hospital segment, has got a lot of long-term good prospects. More than 50% of the FDI within healthcare has been directed towards hospital sector. So the industry has got a good tailwind. And as far as the company is concerned, yes, it has done quite very well in the last 2-3 years. Valuation is slightly stretched at a P of around 50 on a trailing basis. So I would give a long-term hold call. With the investment horizon minimum 1 year, one can hold for another 1 to 2 years.
All right, so that's with regards to where Rainbow Children Hospital and of course the entire space is concerned. The next question that we have is from Nagesh, who's writing us from Bengaluru. He's holding 372 IEX shares, as buying price is 244. Wants to know if he can hold or exit at the current levels. Aditya, very good afternoon to you. I'll come to you on this one. What are the charts indicating for IEX?
Afternoon, Mahima. Thanks for having the show. It's more of an up move that you're witnessing for the past 2 trading sessions on the back of good volumes. So my sense is there is some more upside in the stock for sure. Might not go to his buying levels, but at least can come to levels of 170 to about 185. That is the gap area for the stock. And I would recommend continue to hold at least till that area of 175, 185 and revisit the stock around those areas and see how the chart structure is placed around those areas. And then maybe you can take a call of whether to exit at a minor loss or continue to hold. But at current levels, I would recommend you can hold with a stop loss at 140 on the downside and look for a target of 175, 185 on the upside.
All right, okay, so that's with regards to where IEX stands. Next question that we have is is from Mohit, who's writing us from Kerala, asking about Federal Bank. He wants to buy Federal Bank for the next 1 year. Wants to know if this is the right price or should he wait to reach the 250 levels or even below that. Aditya, what would your recommendation be?
can wait it out. In fact, Mahima, I would recommend buying in a staggered manner because he's looking at a 1-year time horizon or more. Can buy some at current levels and on declines to levels of 240, 245, can add on to the further positions and then hold on to it for at least a year and look for a target of 300 on the upside. On the downside, can place a stop loss below 220. So try and buy it out all the way down till 240 in a staggered manner. Look for a target of 300 on the upside, place a stop loss just below 220.
Got the view, Aditya, but let's go across to our first caller for today. It's coming in from Bengaluru. Karthik has a stock query for us. Karthik, very good afternoon. Welcome to Ask Profit. What's your query?
Hi, good afternoon. I have a query on Anantraj. So I have around 40 shares plotting at the price of 581. And I'm looking for a long-term view. And is it a good time to add more, or can I just hold on to what I'm having?
Got it, Karthik. And did you buy it from a longer-term perspective when you bought into this counter, or was it a short-term trade?
See, when I bought it, it was for a short-term trade. But now I want to look for a long-term, maybe 1.5 years to 2 years.
Got it. Yeah. Fair, Karthik. Mr. Chokalingam, on Anantraj, the stock's been in a sideways momentum for some months now. Post 2024 and the correction that happened. Should Karthik continue to hold on to Anantraj? He's bought her at 587.
I would give a research recommendation of hold only for medium to long term. Stock has already corrected a lot. Of course, even after severe correction, it is still trading at a slightly stretched valuation. But then last 2-3 year performance has been good, and there has been a lot of expansion initiatives, and data center segment would definitely help the company in the medium to long term. So therefore, I would give a hold recommendation.
Okay, all right. So that's with regards to where Anantraj is concerned. The next question that we have is from Kunal, who's writing us from Chennai, and he's asking for an advice for the best bet that he can make in the IT space right now from a short-term perspective. Are there any of these IT counters that you're liking on the charts today, the top sectoral gainer for the day?
Quite a bit of them, Mahima. In fact, the first one on my radar is Persistent Systems continues to make higher highs, higher lows. As we speak, I guess stock is making is at day highs. So I would suggest can take an exposure in Persistent Systems from a medium to short-term time horizon. Look at a target of 6,700 on the upside. That's an immediate short-term target. Longer-term target can be 6,800 on the upside. So 6,700, 6,800 on the upside. Plus at 6350 on the downside. From the large cap space, can look at an HCL Technology. That is also something which is looking quite interesting to me. On the upside, can test levels of 1850 with a support on the downside at 1550. So HCL Technologies and Persistent Systems, these are the top two bets in the IT space. And I would suggest buying stocks from the IT space and continue to hold at least for a year or so. You will see decent gains here.
And probably the first day where we've seen such a strong move on them. Probably on the back of a note, but still, yet again, the positive move on IT is definitely a key one because the momentum was largely lost in the first few days of the year, but definitely one to keep on your radar. The next query is coming from Sudhakar from Bengaluru. It's a very interesting one. He's bought into Ather Energy, the EV scooter maker, at 321, which is largely very close to the IPO price. He's sitting on a profits of almost 100% on this bet. He has 30 shares, asking if it's a good time to hold or sell this counter. Mr. Chokalingam, your view on the EV scooter space, because there's clearly preference for Ather over Ola Electric. Should Sudhakar book some profits or continue to hold for the medium term on Ather Energy?
I would give a sell call. Definitely, Ather has done far better than Ola. But however, the stock has rallied a lot. And two, ultimately, I believe that it is going to be very difficult to compete with traditional players like TVS, Bajaj, Hero, Asia, because these four top traditional players, they are making thousands of crores of profit from their traditional business. So they are in a better position to infuse more money and compete effectively. So therefore, considering also the rally in the price, I would give a sell call on Ather Energy.
Chokalingam, just one follow-up, because a lot of analysts, a lot of investors in PMSs also are taking a big bet on Ather. So and largely that's on the margin play, because right now they are in EBITDA losses, and effectively in the next 3 years is the expectation that it will be much in at least low single digits. Do you not think that as a play over the next couple of years until it reaches that stage, it could be a bet, or your traditional preference continues to be TVS, Bajaj, Hero, largely on the back of the cash levels and the margins that they currently do from the ICE business?
It is absolutely possible that I may be wrong. I admit that. But coming from economics perspective, which has helped me to sustain in this field for 3 decades, that tells me that, it is going to be very tough to compete with, some of these traditional players are making even 10,000 crore of profit. So we already seen certain businesses, how, the dominant players have built the new businesses by making profit in the existing traditional businesses. So therefore, it is fairly possible that I may be absolutely wrong. I admit that. But I have a strong view that it is going to be a tough journey for next 2-3 years. Yes, short term, it may do well, but long term, I have this view.
Okay, all right. So that's with regards to where Ather Energy stands. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning. Good afternoon to you. How can we help you today?
Very good afternoon. I've got Moschip Technologies, 50 shares at the rate of 267. I just want to know about the company in a long-term perspective.
Okay. Mohan, just want to understand as to what was the thinking behind buying Moschip?
This is a semiconductor company. They are doing a lot of chips and things. So in view of that, at a long-term view, it may be good. So it's a small cap company. So just I've invested on.
Okay. Mr. Oaklingham, I'll come to you directly for this one. Any view on Moschip?
It's highly stretched, but one can hold it. One can give a chance for another 1 or 2 quarters to see whether they are able to make any success in Moschip, because on an annual basis, last 3-4 years, they have grown quite impressively. So I would give a hold for the short to medium term. Then after a couple of quarters, I would review the call.
And, it's we're still getting used to the afternoon edition of Ask Profit, of course. So that's definitely one.
That's where the good morning comes in.
That's where the good morning comes in. But largely on, in terms of the amount of queries that we've gotten on a lot of these stocks like Moschip, on Cupid over the last few days has been quite stark and quite important as well from retail investor standpoint, that you take our experts' advice on these stocks. So do continue sending them and give us a call also if you want to speak directly to us. Next one's on Bajaj Hindustan Sugar. Now, our viewer, NKS from Mumbai, he's also a regular viewer, so thanks so much for that, NKS. He's bought it at 45 rupees per share, stock's trading at 18. So he's sitting at a massive loss of 13,000 rupees, holding 500 shares. Asking a quick view, Aditya, your view on Bajaj Hindustan, is it possible that NKS can recover and come back to his buying price on this one?
Doesn't look like immediately, honestly, because stock has been constantly making lower lows, lower highs. Immediate support on the downside is somewhere around 16.5 bucks. Might consolidate around these zones, but coming back to his buying price is something which is, I'm a little skeptical whether it will come anytime soon. Instead, I would suggest if you're getting an opportunity to exit, book losses here, and maybe put that money in some other sector which is right now looking attractive, can recover his losses as well, because here most likely the money will get stuck for a prolonged period of time.
Okay. The next question that we have is from Satyan, and Mr. Oaklingham, this is directed towards you. He wants to ask this question to you. He wants a view on Sterling Tools. He's already sitting on a loss of 20% is what he's saying on this particular counter. It's a very small company, 967 crore in terms of market cap, basically into manufacturing of fasteners and MCUs. Do you have a view on this one?
Yeah, in fact, we used to cover it and we closed it, the day the company announced, quarterly results wherein the EV component business took a big beating. So that time we closed it. Of course, the stock also corrected from 2-year high of over 700 rupees to current level. I would give a whole recommendation now because the company again got tied up with a few foreign technology providers and getting into more new products in the EV space, and existing business also reasonably doing well, standalone business. So therefore, I would give a whole recommendation on the stock.
अगला सवाल जो है वो तेलंगाना से आ रहा है. नागेश जी हमारे साथ जुड़ रहे एक सवाल के लिए. नागेश, वेरी गुड आफ्टरनून. आपका क्या है सवाल?
ये सर IOCL का अभी कम में है सर, अभी नया लेने वाले को अभी लेने का है, ले सकता है सर.
अच्छा, ठीक है नागेश. और ये आप थोड़े टाइम के लिए होल्ड कर सकते हैं नागेश, या ये शॉर्ट टर्म बेट है?
लॉन्ग टर्म के लिए सर.
लॉन्ग टर्म के लिए. Mr. Chokalingam, IOCL पे आपका क्या व्यू रहेगा in terms of stock pick, and request you to give the answer in Hindi so that Nagesh can also get through. Your view on IOCL?
होल्ड कर सकते हैं, सिंगल डिजिट पे में ट्रेड हो रहा है अभी.
नहीं, he's asking Mr. Chokalingam अगर वो इस भाव पे घुस सकते हैं बाय करने के लिए.
बाय करने के लिए इंतजार कर सकते हैं. रीजन इज ऑयल प्राइस बहुत नीचे आ गया, नियरली 25% नीचे आ गया 52 की हाई से. सो बाइंग का दिसंबर क्वार्टरली रिजल्ट तक वेट कर सकते हैं, इंतजार कर सकते हैं, बट अदरवाइज मीडियम टू लॉन्ग टर्म होल्ड कर सकते हैं IOC.
Okay, so that's with regards to where IOC stands. The next question that we have is from Prasad, who's writing us from Hyderabad. Vari Energies is the counter, and he's holding 291 shares, priced at 2894, and he's sitting on a loss of over 79,000 rupees. Wants to know whether he can hold or average at this point of time. In fact, we did have a conversation with the management as well today. You'll be able to catch that conversation on our YouTube channels, but recently, one of their subsidiaries have finished the fundraise of around 1,000 crores. But Aditya, I'll come to you on this one, because considering he's already sitting on a lot of loss, do you think it makes sense for him to continue to hold from a slightly long-term perspective?
Can continue to hold, I would suggest, but keep a tight stop loss close to about 25.50 on the downside, because we've seen this space getting a lot crowded, and stocks usually are not performing to its potential. The kind of euphoria that we'd seen in this entire space once is now getting beaten down. So maybe can continue to hold, do not average, continue to hold closer to about 25.50 should be your stop loss. If that is breached on the downside, maybe you can review the stock once again, and if required, exit and shift to some other sector. That would be a better suggestion.
Got the view, Aditya. We have a next query coming in from Sampath, and he's asking if it's a good time to buy into Kaynes Technology. It's another stock that we've had on a radar over the last few weeks. Mr. Chokalingam, your view on Kaynes Technologies, as well as I'm sure we've spoken to you about the EMS space, but is it something that you would recommend based on the cash flow concerns that have happened over the last few years and are now getting highlighted a lot as well? What would you recommend?
More than those highlights, my worry comes from a different perspective. Of course, after the fall also, it is trading at P of over 60 times on trailing basis. But apart from this, the major worry comes from the fact that yesterday we all have seen in media, the government has cleared 46 new proposals in ECMS space, electronic component manufacturing space, and through PLI scheme. And the PLI outlay is estimated to be more than 45,000 crore. I think this is a massive structural change in the ECM industry, and which means the competition is going to be extremely high, intense. And let us not forget the fact that even L&T has proposed to get into this. So therefore, at best, I would give a hold recommendation. I would not, venture to give a buy recommendation at this juncture.
Okay. All right. So that's with regards to where Kaynes Tech stands. We've got our next caller. Vinod is calling us from Maharashtra. Vinod, hi. A very good afternoon to you. How can we help you today?
Hi. Good afternoon. Over last 2 years, I have accumulated 70 shares of Titan at an average cost of 3,400.
Okay.
And based on its value growth, today I see substantial rise.
Right.
Though the volume growth is muted. So is it good time to book profit, though I can hold for a longer period if we expect a good return?
Right. Vinod, I got your question, and your point is valid, and you've done your research well, I must say that. Mr. Chokalingam, what he's saying is not wrong, right? A lot of these jewelry companies are seeing growth on the back of value growth that is coming in from the gold rally that we've seen, but volume growth is still a question mark. Do you think that considering today's rally for Titan, it makes sense for him to book partial profits, or should he continue to hold?
I agree with you. Apart from volume, the value growth has helped. And already there are reports of fall in the demand for jewelry in this country because of very high prices for gold-based jewelries. And I would give a sell call. I would look for opportunities from totally new kind of stock in Nifty like Apollo Hospital. So I believe that stock has got a promising, consistent, steady growth then for the next 1 to 3 years.
Got your view, Mr. Chokalingam, but we have our next query, and it's again on retail favorite stock, Vodafone Idea. Continues to have so many queries here from us, and this is from Sridhar from Karimnagar, asking a view. Aditya, I'm pretty sure you lost count of the number of times we've asked you on Vodafone Idea, but your view on the counter yet again today.
It's a very tricky one to answer, honestly, because stock hasn't been doing much for itself. There are occasional pops here and there, can test levels of 16.5, 18 on the upside, but again, it's a long shot. You don't really know when it's going to come there. If he can continue to hold, maybe he can do so with a stop loss at 10 rupees on the downside and look for a target of 16 to 18. That is where he can look to exit. The fact that some things are positive for the stock right now can see a pop at least till 15 to about 16 odd levels.
Okay. All right. So that's the technical view with regards to where Vodafone Idea stands. But Aditya and Mr. Chokalingam, it's time for our rapid fire segment. What we try to do is we'll try to throw as many questions as possible. Try to keep your answers as short as possible to buy, sell and hold. The first question that we have is from Teja, who wants to know for ITC Hotels if he can hold this counter for the next 5 years in his portfolio. Mr. Chokalingam, I know you like Taj GVK, but ITC Hotels, what's the view like?
Yeah, stock also corrected a lot, so one can hold for a very long term.
Bank of Maharashtra, IDFC First or South India Bank? Mr. Chokalingam, your pick for the next 5 years.
Obviously, Bank of Maharashtra, the fundamental speaks for itself compared to other two stocks.
Okay, BPCL is the next one. Neha from Bengaluru is holding 140 shares at an average price of 302. From a 2 months perspective, should she continue to hold? Aditya, your view?
Continue to hold, look for a target of 400 on the upside.
Godavari Power and Ispat, Aditya, if you're tracking this counter, our viewer Raj has bought it at 199. Your view?
Can continue to hold, maybe look for a target of 290 on the upside.
Okay, United Breweries on the charts. How is it faring? Aditya, your view?
Quick one on United Breweries, doesn't look all that great to me. If you're looking for a fresh entry, avoid. If you already have the stock, place a stop loss somewhere around 1480 on the downside.
Aavas Finance bought at 1860. Aditya, should he continue to hold? He's been holding for the last 18 months.
Not really. Stock has just been into a narrow consolidation phase. I would recommend exit from the stock and look at other financial NBFCs which are doing better.
Okay, NMDC is the next one. Prabha wants to know if she can continue to hold. She's bought 930 shares. Mr. Chokalingam, your view?
I would give sell call on this stock now.
Hind Copper bought at 407 by Mayank. Should he hold or sell, Mr. Chokalingam?
Around 370, 375, sorry, 575, it's a sell call.
Okay, LIC Housing Finance already sitting on profits of 34%. Venkat wants to know if he can shift to HDFC Bank from a long-term perspective. Is that the right thing to do, Mr. Chokalingam?
I don't think so. One can better bank on banks like Bank of India rather than LIC Housing.
Hindustan Foods, Mr. Chokalingam, and do you cover the stock? Kumar's, it has 40% of his holding in this one share.
Yeah, I am a little concerned about the valuation of Hindustan Food.
Maruti, Apollo Hospitals, between the two, Aditya, where are the charts looking more attractive?
At this point of time, Apollo Hospital is slightly better as compared to risk to reward favorable. Can test levels of 8,000 on the upside, support on the downside 73.50.
Nalco, Aditya bought at 317 by Aman. Should he sell out or hold?
Can book partial profits, sitting slightly at overbought levels. Not a bad idea to book our profits after such a big rally.
Okay, Vamsi has bought Swiggy at the levels of 380 for the next 3 months. Can she continue to hold? Aditya, your view on the chart?
Can continue to hold, though there is no immediate upside in the stock. Moment comes to 400 odd levels, look to exit.
Alright, so that brings us to the end of this rapid fire round of Fast Profit. Mr. Chokalingam and Aditya, thank you so much for answering those queries for us. But with that, as I said, we're completely out of time on this edition of Fast Profit. Do stay tuned. India Market Close on the other side.
New year. New power panel. India market open. now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on
Good afternoon and thanks so much for joining in. You're watching NDTV Profit and this is India Market Close. My name is Alex Matthew and you'll soon see them, my co-anchors. I've got Sharad Dubey as well as Hiral Daria with me and we'll take you through the last hour of trade. And it's looking quite interesting because it's more or less what we saw in trade yesterday and a couple of the same culprits are at play today as well. 0.33% for the benchmark Nifty 50 lower. But today you have the Nifty Bank that's trading in the red, down about 0.4%. But you have the Nifty IT that's bucking the trend and it's up in the green. Let's showcase that if we can and talk about the Nifty IT. It's up 1.7%. A few of the stocks we're going to be focusing on. We're going to actually take that magnifying glass and look at it very closely for you. But let's take the Nifty heat map up for you, and there are more losers than gainers on the screen, and there you go, a lot of losers on the screen. Titan is the stock of the day, at least from the large cap space, up about 4% or thereabouts, and you see a number of those IT companies up and about in that top line. Techem, Wipro, Infi, HCL Tech, a number of them doing particularly well. You also have on the bottom of the screen Sipla. And this is another major talking point, 4.3%. This is on account of a partner that they have that has had a few negative observations, and that's having a bearing on their stock price and on sentiment right now. Maruti Suzuki down in the dumps, down about 3% or thereabouts. Tata Motors PV also reacting a little bit negatively for a second day in a row. Remember, it was Jaguar Land Rover first, and then it was a standalone business next. But really, it is a repeat of what you saw yesterday. HDFC Bank proving to be a laggard and contributing quite a bit on the downside. The question is, does that picture hold in the broader markets, and what are the stocks that you should watch out for? Hiral, what are you picking up?
Thanks, Alex, for that. A very similar picture to yesterday, as you're saying, in terms of the benchmarks. If you see the mid-cap 150, 0.3% higher is where that index is trading at. And if you pull up the small cap 250 as well, you'll see the kind of returns that are coming in, because a lot of individual stocks that are actually buzzing in trade. The small cap actually from the day's lowest levels has seen a good recovery, pretty much on the borderline right now. Apart from that, if you see...
All right. Yes, we are seeing that in the mid-cap indices. Hiral was just mentioning the Nifty Small Cap 250 index, and interestingly, we'll see that there is a strong case point happening. There's a value buying happening, and the advanced decline ratio, that is also improving. But let's give you the entire factors to watch, which are very much important today in the day's trade. As a trader, as a positional trader, what are the important levels to watch out for? And interestingly, let's pull out the Nifty index and let's see the key numbers. That has fallen below the 10-day EMA mark. 20-day EMA levels is something which is the next level, which will be important for Nifty. If you could just show that important level, and that it is 26,080. Now that from that level onwards, if it bounces back up, that means we can see a decent short covering in the closing session. Also, apart from this, moving on, the other key sectors to watch out for would definitely be Nifty Bank. That has the falling has intensified. The support is at 10-day EMA levels. That's at 59,700. Sectoral buying coming in both Pharma and the jewelry pack, but largely the stocks moves are happening. But remember, the global risk-on sentiment is still remaining there. It's just a small pause, but the setup is really strong. Q3 updates and operational updates, that is where the entire movement is happening, especially from brokerages. But the options data, I checked just now, it's a very narrow range movement happening. VIX has again gone down below the 10 after the 2 sessions. So of course, it's not a great day for the option players, and even the European markets have opened on a mixed note as well. So a very narrow range of activities expected, but the magic is in the small cap index. Why? Because right now we saw a recovery happening, and every time in the closing session, the strength is coming in the small cap indices, and January 2nd and January 5th, we saw a strong up move coming in. So we might be seeing much more value buying in the small cap indices as well. Over to you, Alex.
Right. Thank you so much, Sharad, for that. In fact, interesting moves. We have Mr. G. Chokalingam, founder and MD at Economics Research, also joining in. Mr. Chokalingam, an interesting day of trade with the kind of moves that are coming in terms of today's session. A day which is very similar to yesterday, where the pressure, if you go to see, has continued when you talk about an HDFC Bank. Third consecutive sessions of decline that have come in. Let's see what that counter is doing right now as well, if any recovery on that front. But apart from that, you have names like Sipla, Maruti, Max Health that have been trading under pressure. How are you looking at HDFC Bank versus if you have to compare this to an ICICI Bank as well?
Yeah. So ICICI Bank also, the credit growth is not, extraordinary if you see in the recent quarters. HDFC Bank, yes, there is a concern that since CD ratio is very high, there may be a conscious decision to slow down the credit growth. That is why the stock is under pressure. But I believe that ultimately in 1 or 2 quarters, HDFC Bank should be able to resolve this issue and come back to the strong growth mode. So I would consider this correction as an opportunity for medium to long-term investors.
Would you purchase, Mr. Chokalingam, and good afternoon to you, Alex here. Would you purchase in a staggered manner, or would you utilize this? Is this a very attractive? Is this a table-thumping buy for you at this moment?
Yeah, there are 3 points I want to make. In the last 35 years, I never invested in the large cap. So personally, I buy only small caps. Of course, I recommend large cap for clients. I would recommend at this price to clients with a conservative approach. Definitely, I believe in 1 or 2 years it can play out.
Okay, so let me very quickly ask you then, if you were to, at this moment, it's an open-ended question, relatively speaking, Mr. Chokalingam, from the broader markets, give me 2 or 3 stocks that you are absolutely convinced are going to be in a fundamental upcycle, but the valuations still haven't caught up.
Yeah. So obviously in the short term, it is going to be only Sensex and Nifty where you can have a tremendous confidence. So, but then you added a rider valuation comfort. So that is an issue. So if you still, ask me in the large cap, I would go with Apollo Hospital, which is in the Nifty. And if you ask me in the small and mid cap space, I would recommend something like Bayer Crop, which is beaten down in relative valuation term compared to its own P in the past. I believe it is very, very attractive. And then OFSS, Oracle Financial Services Software, that also corrected nearly 35-40% from a 2-year high. A lot of cash, a lot of dividend, and it's a product company, not a service company. And it depends on US also only up to the extent of 1/4 of the total revenue. So these are the 2 MNC stocks I am highly comfortable on the basis of the valuation.
Joining us, Nilesh Jain, Head and AVPF, Technical and Derivatives at Equity Research at Centrum Broking. Good afternoon to you, Nilesh. Interestingly, Nifty has broken its 10-day EMA also. Kind of a very small intraday basis. There is a bearish sentiment coming up, and each day there is a very large company pulling down Nifty. But Nifty Bank technical setup still remains better. What's your view on both of them?
Very good afternoon to you. Absolutely. So you are rightly pointed out. So every day we are witnessing some of the other large caps are pulling the index down, specifically the Nifty index. Today as well, we have seen a kind of a short-term breakdown below 26,100. Now it appears like Nifty is heading towards 26,000 mark, and that seems to be likely to be tested going forward. Overall, Bank Nifty is still better place, although the close below 60,000 is not looking that great. But comparatively, I believe that we may see some bit of a rebound from here in the Bank Nifty specifically, which is likely to lead the pullback from here. As far as Nifty is concerned, 26,000 to 26,200, that's the immediate 200-point trading range. For the Bank Nifty, 59,600 to 60,200, that's the range for the Bank Nifty as well. Given the kind of a setup on India Weeks where we have seen further decline today, I believe going forward, there has to be some bit of a pullback in both Nifty and Bank Nifty.
Okay. All right, Nilesh, what are your technical picks?
Right, so I have a couple of recommendations. First of all, stocks that is looking promising is Solar Industries, where we have seen a fresh breakout coming in this counter. After multiple lower top and lower top formation, it has negated the bearish setup. Looks like it is heading towards 14,000 levels on the upside. So Solar Industries looks strong for a pullback move to continue on the upside towards 14,000. 13,200 should be the stop loss. Another stock that's looking positive is NMDC. So continuation of high top and high bottom formation in NMDC. Good price and volume breakout today. So we can expect a follow-up on the upside to continue towards 90 levels. Stop loss should be placed at 82.5.
All right. There are a few stocks that are reacting quite sharply to your quarterly updates, and I won't go towards Titan because we're going to actually delve a little deeper into Titan. I want to talk about Senco Gold because this is a stock that is doing particularly well. To a certain extent, it's also because of the kind of gulf that is there between the valuations of Senco Gold compared with some of the other jewelry companies. But the question that I want to ask is, Mr. Chokalingam, 50+% increase in revenue in the quarter gone by is what they've reported in their quarterly update. But they've also talked about the fact that gold prices are up 65%. I mean, that's for everybody to see. So therefore, the volumes have actually degrown. Would you still be supportive of something like a Senco Gold, or would you give it an avoid at this point?
Yeah, very tough question. You are absolutely right. The rise in the jewelry price is going to pull down the demand. But to some extent, to be fair, the stock price already reflects the correction from 52-week high. So therefore, I would give a hold, and also considering the fact that the P ratio is very reasonable, around 23, as compared to exorbitant valuation multiples for many other jewelry companies. So I would give hold. In case the stock continues to correct, then one can buy also.
Move today, 12.5%, is nothing to sneeze at. We spoke with the management, Suvankar Sen, who's the Managing Director and Chief Executive Officer of Senco Gold and Diamonds, and they said that they're planning to expand the lab-grown diamond segment as the big players in the industry are entering it as well, and it's starting to get more organized. Listen in.
Our studded ratio currently is at about 12.5%. Over the coming 3-4 years, we want to take our stud ratio from 12.5% to 15%. That is something that we need to keep in mind, whether it be natural diamonds, lab-grown diamonds, gemstones, all kinds of products. So this is one thing. And with the gold prices going up, it is very important that we keep on focusing on this segment, because consumers will go for design, will go for utility at a lower caratage. Second is lab-grown diamond. We have seen that, the big players are also getting into it, and that means that this market is going to evolve and it'll get more organized. We had, thought of the similar decision 1 year ago, and what we are seeing is that consumers are actually gradually, the awareness levels are going up, the curiosity, the demand. People are saying that, if I have to fulfill certain desires, lab-grown diamond will able to fulfill those desires in terms of size of diamond or in terms of the design and the look that they want to get. So over a period of time, I'm quite confident. We have got 8 stores. Every year, we'll want to open about 5-6 more stores of lab-grown diamonds. But the natural diamonds, the gold, those will also continue to remain. Overall, the industry will become highly diversified.
That's the word coming in from the management of Senco Gold. In fact, we have the general insurance data that has come in as well. You have ICICI Lombard General Insurance, which has seen a growth of around 16%. New India Assurance, around 17% is the kind of uptick that they've seen in the month of December. Private sector general insurers, overall, the growth is around 15%. In fact, New India is seeing a spike as we speak right now at the day's highest levels with gains of 0.9%. You're talking about a 16 to 17% growth. Gold digit, again, from the unlisted space, strong numbers coming in there. ICICI Lombard, 16% growth, but if you see in terms of where ICICI Lombard goes, no major reaction on that counter. It's mainly New India Assurance, which is actually reacting to these kind of numbers overall as we speak. Very quickly, Mr. Chokalingam, any view when it comes to the general insurance space on the back of the data that has come in? Overall, you're talking about somewhere in that range of 16 to 18%.
Yeah, ICICI Lombard looks good. Last 3 years, consistently it has grown its operating profit. So it proven to be a strong growth stock. So I prefer ICICI Lombard. Okay.
All right, it's that time of the show, and this is non-negotiable for us most of the time, actually. It's nearly 2:45, and it's time for Heard on the Street. This is where Somit Sarkar brings you all of the chatter from the dealing rooms. Somit, good afternoon to you. A few of the stocks that you spoke about yesterday were absolutely buzzing. What do you have on your list today?
Well, a lot of stocks that have been buzzing on street today as well. Firstly, it's Sun Pharma. That's what is there on the dealers' radar, and dealers are indicating that there's a buzz of a potential acquisition that is in works when it comes to Sun Pharma. So keep an eye out for that counter. For Glenmark Pharma, multiple dealing rooms have recommended buy calls to their clients based on technical charts. So keep an eye out for that as well. For Sattvic Green, there are buy flows on the large HNI desk. Some positive news flow is expected, is what dealers have indicated. For Hitachi Energy, that counter has been under pressure for the last 1 month, but right now what dealers are indicating is that the selling pressure is largely over and the stock could bounce from the current level some more. When it comes to PNB Housing, The stock was down in trade today, and this was largely because there was a buzz that the earnings could be on the weaker side. But what dealers have indicated is that despite this buzz, there are still buy flows that are coming in for PNB Housing Finance at lower levels. So keep an eye out for PNB Housing as well. For Bajaj Holding and Bajaj Finance, dealers have indicated a paired trade. They're expecting Bajaj Holding to outperform Bajaj Finance going forward, at least for the near term. And lastly, when it comes to Delivery and AB Capital, there are buy flows on FII desk on both the counters. Delivery volumes also could be on the higher side, is what the dealers have indicated for Delivery and for AB Capital.
Thanks a lot, Sumit, for that. A whole lot of stocks we'll be tracking. But before that, I'd like to get in Puneet. Tata Tech, Tata Elxsi and KPIT Tech are in focus as the tech sector is buzzing in trade on back of broking upgrades as well. What's your total view coming in the IT space, Puneet? Broking upgrades and the entire sector short covering also in certain counters.
Well, most certainly, and this could be the first upgrade on the ER&D space, which is very centric to auto. And both Tata stocks, Elxsi as well as Technologies, is doing well in trade. Both have gotten upgraded today by JP Morgan. Target price increased now to 710 for Tata Tech and 4,800 for Tata Elxsi, while they've maintained an overweight rating on KPIT Tech. Now, there are three key points that are important. The first one, that the auto ER&D is overall seeing an improvement in demand, and could be the first time where we're actually seeing a brokerage note call out the demand improvement, while management had highlighted in the last couple of quarters of being in improvement, wasn't yet visible in the financials. The second one, that the OEMs are starting to kick off new research and development in this particular space, and that benefits the IT players. And the investments are actually being driven not by the EV space, but by hybrids, autonomous as well as connected vehicles, and does benefit all of these players. Finally, the EV rally, which was expected to be a key story post the pandemic, hasn't yet picked up, and hence there was a lull in demand over the last couple of years. Hybrids coming back is a key positive because products and platforms are already ready for these companies. Finally, in terms of stock performance as well as valuation, it's been a tough year for all of these players in the last 1 year. The most impact has been seen in Tata Technologies, and that's visible and this should be negative returns. So it's minus 23%. All three stocks are down, minus 19 for KPIT and minus 11 for Tata Elxsi. In terms of valuations, it's not cheap by any means, and hence they've seen a time-wise correction. But any signs of improvement in demand will lead to a better year of 2026 for these companies, and JP Morgan holds that view, which is why all these stocks are buzzing in trade today.
Okay. All right. Thanks so much, Puneet, for that. And bear in mind that those stocks have seen negative returns over that time period. They're buzzing in trade today, though. Gains of between 5 and 10% for the three of those stocks, which is why they make it to the stock of the day. But Mr. Chokalingam, any positive view on any one of these? Far be it from them being, in the camp of stocks that have extremely high valuations but have missed the mark on fundamentals. These are actually beaten down stocks. So would you be positive on any of them?
Certainly not. I completely agree with you. Those who invested 3 years back still losing a lot of money. Both Tata Elxsi, Tata Technology, part of a great management, all of us know. But look at even Q2 numbers. You look at both the top line year-on-year growth and net profit year-on-year. Not at all impressive. I mean, it's stagnating or negative or very small single-digit growth. So I won't give this kind of valuation. KPIT is better, but valuation-wise, it is stretched. So within this IT space, I prefer Infosys in the Nifty Sensex basket. And in a small cap, I prefer Cyient. It is one of the cheapest IT stocks. And then, as I discussed earlier, I also prefer Oracle Financial Services company.
So that's with regards to where IT goes. It's interesting, DFT Nilesh, with the kind of moves that are coming in today's session with regards to IT, specifically, it's the broader names which are seeing a higher buzz, but the volumes are also pretty strong in the large cap names. Any momentum play that you would want to look at?
So a couple of stocks that are on our radar as well, but not from the large cap space. It's from mid cap and small cap IT names like Coforge and Persistent System. Specifically Coforge, where we have seen a very strong rebound today. It has reclaimed its long-term 200-day moving average. So we may see a follow-up on the upside towards 1750 to 1800 with a stop loss 1650. Coforge is a buy. And apart from that, counters like Persistence, Birlasoft, both the stocks have already seen a surge of over 4%. So better to wait for some bit of a decline in both the stocks, but the major structure looks strong.
Birlasoft, the stock is also at the day's highest levels, 5.5% up move coming in there as well. Stay with us. We'll quickly slip into a short break. Up next, we'll do an entire detailed discussion where it's a clash between Titan and Trend. You know, where should your bets be? We're not really doing a bull versus bear on Titan, but it's between two companies that will be compared. Please stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Close, and two companies in focus are Titan and Trent. Both of these companies from Tata Group have been witnessing a diverse growth trajectory. What's working for Trent and what's keeping Titan subdued? Mahima is here with the peer comparison. Mahima, two different companies, same group, but stories are different.
Yes, absolutely. Stories are different, and how, right? You have Titan on the one end with this shining in trade today and has been shining in 2025 as well. But Trent on the other side has been the top laggard on Nifty 50 in 2025. 2025, Titan saw an uptick of 20% in terms of where the stock performance is concerned, and Trent was down 41% in 2025, and in fact 45% since its inclusion in the Nifty 50 as well. And that happened in September 2024. But with regards to where Q3 update goes, Titan saw robust jewelry growth coming in of 41% in terms of where the jewelry growth stand, 42% for CaratLane, overall 38% in terms of the domestic growth as well. But for Trent, it was the lowest growth in 6 quarters, 17% of revenue growth, and that on a rebased numbers was at 15%. So, Q3 was completely, in different ways for both of these counters. In terms of where the other metrics are concerned, with regards to where the overall reason as to why the revenue growth has not been very good, with regards to where Titan goes, revenue growth largely was on account of gold rally, which we've seen. So there's value growth coming in, but buyer growth was flat, and because of which overall, we've seen that, the overall impact in terms of where the volume growth goes is completely flat. But we have to wait and watch out for, because studded mix has picked up. So overall, we'll have to see whether that translates to margin improvement or not. The next one, with regards to where Trent goes, aggressive store expansion is the reason as to why, it is hampering the growth of the company. And of course, Trent has grown at that 50%, above that 50% mark. So on a very high base also we're comparing Trent numbers to as compared to where it was last year. Next, with regards to where LGD's strategy goes, Titan has announced its new brand called Beyond. So they will be operating it completely separately in separate stores. But for Trent, it is a shop-in-shop format. In West Side stores is where they are selling LGD. But we have to see, with Titan entering into lab-grown diamonds, will that eat away the share of Trent completely in terms of where lab-grown strategy stands? In terms of store expansion, Titan right now is just ramping up and renovating its existing stores. On the other side, Trent is going big in terms of where store expansion stands. Aggressive store expansion in Tier 2, Tier 3 cities, which is also overall impacting their average revenue per square feet. Lastly, in terms of where ROCE goes, Titan at that 19% mark. But Trent, Trent is actually, in fact, better in terms of where ROCE stands. That's an upward of 31%. But overall, ROCE for both of them, if you see the trajectory, for Titan, it has been improving, but for Trent, it has been slightly coming down. So this is the overall view of how the two Tata companies stack up, and of course, one definitely shining in trade and one facing the heat.
Thank you very much, Mahima, for this detailed and a very wonderful analysis. Interesting graphics also being pointed out for both Titan and Trent.
Sharad, first, before you go to anybody else, I want to know whether you bought a real diamond or a lab-grown diamond for your fiancé.
For my
putting
wife,
on the spot.
No, for my wife, we have bought gold, but yes, LGD is something she uses for her everyday wear as well.
Yeah, but he is a firm believer of only gold. I've had this conversation with him multiple times, where he does not just deviate. It's only gold, gold and gold.
There is a resale value, and yes, it's appreciating right now.
You better not let your wife hear you say that.
Yeah, but before we go to the guests as well on Trent and Titan, I think we should be highlighting the Indian Gas Exchange IPO news that has just come in. That's what they've said, that they're planning an IPO by December 2026. And what is interesting, and the reason I'm picking this up, is because Indian Energy Exchange, which is IEX, they will be diluting nearly 22% stake in the gas exchange, on the back of which, if you see IEX also, which is at the day's highest levels, 4.5%, this will be value unlocking for an IEX on the back of the Indian Gas Exchange plan for IPO by December 2026. 22% stake in Indian Gas Exchange is what they're looking to dilute as well. I think it's going to be interesting to see what is the total that they hold there, but an interesting one to watch out for. Very quickly, Mr. Chokalingam, I mean, IEX on the back of not only the the market coupling case. What I want to add over here is when you talk about value unlocking by December 2026 in terms of the gas exchange IPO that could be coming in, what would you advise investors to do?
I would sell using this opportunity IEX, because both NSE and BSE started joint venture in energy exchange platform. So no longer IES is commanding a monopoly status. So I believe the growth momentum will take a beating for IEX. It may remain as a growth company, but the kind of growth it had in the past is difficult to replicate. So therefore, using this positive news flow, I would sell the stock.
Fair point. All right. And by the way, this morning the technical call was to sell on rise for IEX, and there is a rise at this moment. Let's talk about Titan versus trend though. You've got the fundamental analysis, you got the valuation picture and the return metrics. The question is on the charts for a Titan that's trading up about 3.8% and a trend that is rebounding just a tad bit. Nilesh, what is the call on the charts? Would you play the momentum or would you buy the stock that got beaten down?
Well, Alex, looking at the momentum in the Titan, this particular counter, I would like to go with Titan only because today we have seen a breakaway gap and good price and volume momentum can be seen today as well. And this particular counter has been in a secular uptrend. So looking at the overall structure, looks like it is heading towards 4,400 to 4,500 levels on the upside. So there is still potential for further upside move to continue. So, but better strategy would be to buy and decline, keep a stop loss below 4,100. If at all you get any dip towards 4,200, that can be a good entry point. For existing, positions, I would suggest to remain invested, keeping a trailing stop loss, and there is still some more room left on the upside. Whereas on the trend, there could be possibility of a dead cat bounce because the counter has gone into extremely oversold territory. Purely to play this pullback, one can keep a stop loss below 4,030, but I don't see any major trend reversal here.
For that, and also let's move on to the real estate segment. This has been, a big pain, the Nifty Realty Index in 2025 itself. But 2026, is there any kind of a hope coming in? And what are the key indicators looking like for the realty space as well? Getting us all the details is Anushi. Anushi.
Right, thanks for that, Sharad. So it's not been such a great year for real estate in 2025 with the index correcting over 10%. And this is on the back of the sales volume and the launches figure that we've seen. So despite, there being rate cuts, there being talks about there would be improvement in terms of where the housing affordability is concerned, the real estate has not performed so well. So let's understand what has happened overall in 2025. So what we are seeing is that despite of these price corrections and price increases that have taken place, markets more or less have remained resilient. That is what Knight Frank had to say. In fact, new launches, if we say, have been concentrated in higher ticket sizes. It's a lower ticket band wherein, we are looking at overall increase in terms of where the supply is concerned and wherein there has been a decrease in terms of where the demand is, with higher ticket segments now contributing to more. In fact, if you look at the supply side of the story as well, new supply has now outpaced absorption. Now, this is a key monitorable that we should be having, considering that if this is a continuing phenomenon that we'll see, what will this lead to the pricing trends is something that we should be focusing on. Coming to the year gone by, if we just look at the launches and the sales, both have seen a downtick of 3% and 1% subsequently, and this is on the back of a couple of price rises that we've seen in a couple of regions. Along with that, even if you see the ticket size growth or rather the sales growth, you'll see that most of this is concentrated in higher ticket sizes, 164% and 55% of growth respectively. And in terms of regions, if you look at the breakup over there, in terms of what's the case scenario in terms of growth, you'll see that NCR has seen about a 9% or rather a 19% of a correction in this 1 year itself. So sales volume has been impacted on the back of this. Bengaluru is another market wherein we've seen a similar phenomenon playing in. 12% is the kind of uptick that we're looking at. So is this sustainable is the major question going forward. So that's in terms of the residential prices that we are seeing. Inventory levels also, if we see from 2020 itself, has seen a couple of changes. It's seen an uptick as well, but it's Knight Frank pointed out that quarters to sale, this indicator has remained healthier. So that's on the positive we are seeing. Coming to the other part of the market in real estate is the office market. While residential, we are talking about price increases, there being unsold inventory levels being some of the concerns that can emerge in terms of how the cycle pans out. Office market has remained on the healthier side with about 20% of an uptick in terms of where the transactions are concerned and 9% of completions, and a majority of this is also seen by rise in GCCs, which has seen increasing contributions. So this is the overall perspective that we have for the Indian real estate market for 2025 and the outlook ahead that we should be watching out for.
Thanks a lot, Anushi, for that. And earlier today, we spoke with Ghulam Zia, Senior Executive Director at Knight Frank, on the outlook for the office space market. Let's listen in.
Office sector is going completely berserk. 20% growth year on year is something spectacular. Last year we did 75 odd million of gross transaction in the top 8 cities. This year that number is going to 86, 87 million. 20% growth on such a huge base. So while at that level we would want the base effect to come in and growth level to really shrink, but in stark contrast, at that higher base level itself, 20% of growth is something which nobody could imagine. So this year was spectacular, especially cities like Bengaluru. Bengaluru saw almost 60% growth over YOY number. Last year, 16.5, 17 odd million. This year, 27 odd million square feet of gross absorption.
All right, so that's a view on the real estate space and specifically commercial. And you got the perspective on the stocks as well. But we've got Shivangi Sarda, who's an analyst, equity derivatives and technical at Motilal Oswal, joining us to wind things down for India market close and indeed the market as well. Shivangi, quick view on where we're heading, because we've come off the low point of the day for the benchmark Nifty 50. And we might just head towards close to that 26,200 mark if the bulls are feeling a little bit of spirit at the end of the day. And what individual stocks do you like? I think you might just be on mute, Shivangi.
Very good afternoon. Thank you for having me. We've seen that profit taking has taken over the indices over the last couple of sessions, but then there has been a very smart recovery from the lower levels, which has kept the market afloat. Now, of course, we've seen that participation can be seen across the sectors, which is lifting the sentiments of the overall market, and we're recommending buy on decline to continue here, with a support of 26,000 levels for Nifty for an upside move towards 26,250 immediately, and then 26,350 marks. Talking about Bank Nifty, of course, resilience can be seen here. And we've seen that the dent was slightly lower here. But of course, global cues have kind of, made the indices to take a shift back. But then now we've seen that, the put call ratio has also improved. So call writers are somewhere unwinding their positions, and Bank Nifty looks quite positive for the next up move towards 60,500 marks, crossing its near all-time high levels, and with the support of 59,750 marks, which it had respected even today's session. So this is the take on the indices, but stock specific, we have been seeing that there has been a lot of good buying interest in the auto space stocks. So first up on my radar would be Bajaj Auto, which has consistently performed, from the last 6 months. It has been making higher top, higher bottom, trending upwards with any minor declines being bought into. Of course, we've seen that, from the last few weeks, there has been, a price volume surge here, which is adding to the momentum for this one. And of course, auto space stocks are doing quite well. They tend to perform quite well in this quarter, seasonality-wise as well. So this one's looking quite positive, and we're recommending a buy here with the next target of 10,150 levels with a support of 9,590.
All right. There's one stock that we spoke about from the large cap space, and that's Sipla. That is probably the worst performer on the benchmark Nifty 50 right now, 4% lower. And that's because a key partner that they have, which is Pharma, has gotten a number of negative observations from the US FDA. But because it's reacting so much, it's the perfect contender for bull versus bear. And we've got Varsha joining in to tell you about the positives and the negatives as they stand right now. And you can take the call based on this information. Varsha?
Well, thank you so much for that. Let me just start with a negative point since the stock is under pressure. If you see the manufacturing issues at partners facility is actually a negative sign. Now, why do I say that? Because the drug that is lanitrotide is the top contributor for Sipla, and hence the observation in facility could disrupt the manufacturing process of this drug and hence would affect Sipla. But onto the bull case, management is confident of achieving $1 billion US sale by FY27. Moving on, there are multiple upcoming US launches over the next 4 quarters which will actually help Sipla when it comes to the growth for FY26 and FY27. But the margins are likely to soften in H2 FY26. This is on the back of lower Revlimid, that is cancer drug, and of course the increased R&D. But they've also entered into obesity market, that is anti-diabetic portfolio with Yorpic via Eli Lilly tie-up. But this the revenue potential from this we'll be seeing in the medium term and not in the near term. That's one of the the bearish point that the Sipla has. But the high growth segment, that is biosimilar, Sipla has actually entered into biosimilar, which is the next leg of growth for the company. But the Revlimid contribution will be virtually nil from Q3 FY26, which will actually impact the earnings in the near term. Then also, if I were to talk about but Sipla is actually confident when it comes to launches, new launches, to offset the Revlimid decline, which is again a positive thing. But FY26 margin cut guidance, so they've cut the margin guidance for FY26 on the back of weak mix and seasonality impact. So overall, the longer term growth, if I were to talk about for Sipla, is actually a stronger one. But yes, today the stock is under pressure because of the manufacturing issues at partners facility.
Thanks a lot for that, Varsha. Mr. Chokalingam, I'd like to get you on this Sipla. Of course, there is a negative news flow coming in. The stock is down 4% but fundamentally, how you're looking at the entire pharma space, because the entire Nifty Pharma Index, you see, that's on the other hand, it's going really strong. It's the top sectoral gainer also. So you need your views on Sipla and any other important pharma company which should be in focus.
I think Sipla one can consider at current price. I think it is fully priced in. The reason for recommending Sipla at current price is that its exposure to North America is not dominant. It is only about 27% of the total sales, and dominant source of revenue is from India. So therefore, the concern is it will have an impact, but I think it is not going to have a dominant effect. Whatever impact it will have, it is priced in today's correction. So I think it has become quite attractive at current price.
What would be your view on the other pharma stocks as well? I just like to point out the Nifty Pharma Index, where you see all the constituents, all of them are in green. Ipca Labs, Wockhardt Pharma, Torrent Pharma, all of them going up more than 5% in the trade. Any important risk reward ratio where it's favorable right now? Yeah, Shivangi? Pharma picks?
So, talking about the entire pharma space, of course, you've seen that, dent has been seen over here. And talking about the risk reward, we've seen that most of these counters were consolidating. The good ones were, definitely consolidating near its exponential moving averages. But the diagnostic space stocks have comparatively done better than the purely pharma stocks. And now if you look at a DV's lab or Laurus Labs for that matter, these stocks have caught the investors' attention and confidence. So these should be kept on radar. Of course, we're seeing that even after the dent today, Laurus Labs is trading in gains with over 1%. So overall, this stock has showed resilience despite the volatility, and it has actually been outperforming since the last 3 years. So from the pharma pack, if we extend it to the diagnostic space as well, so Laurus Labs would definitely be my pick here, and this should be a portfolio stock.
So that's with regards to where Laurus Lab goes. In fact, the entire pharma pack has been in the limelight as well. But moving on, Kaynes Technologies is back in the turmoil zone after crashing over 50% twice in the past year, and it has hit a fresh 52-week low as well. Let's understand what's happening with them, with all the fundraisers that they've done in the past, and what's the way forward? My colleague Puneet joins us with all the details. Puneet, what is the story looking like with the Kaynes Technologies, though that's mild recovery in trade today?
Well, it's been a tough 2025 for the company, and 2 times is what it's corrected 50% in just a period of 2 months. So when you look at January to March of 2025, the stock crashed at that time, and it has hit a 52-week low yesterday in this trading session of 3,683 as well. It's a level that we almost didn't imagine the company could hit, with a high of almost 7,800 at the start of the year. When you look at the 2 time periods specifically, Jan to March 2025 is where it hit 7,825 as the peak price. The lowest was 3,900. It just took 66 sessions for the company to have the 50% drop. When you look at the second period, which is much more recent, between October and December, 3,711 is what the low was, and then it hit another low of 3,683. So another just 62 sessions where the story completely changed for the company, and this time it seems much more severe based on the cash flow concerns amongst others. Now, when you look at the time period of fundraisers and of the last 3 years, it listed in November 2022, raised 857 crores, out of which the fresh issue component was 530 crores. And you can see that over the last 3 fundraisers, the company has raised funds at almost 10x the IPO price in as early as June of 2025. Post that, the story has, for the sector as a whole, has been changed in terms of valuation as well as concerns for revenue recognition and goodwill as well. And largely that seems to be the play. Now, the reason we are discussing the fundraise is because the company's growth trajectory is quite strong. 61% revenue growth is what's estimated in FY26 alone. But over the next couple of years also, they have some steep targets. Will they need another fundraise? That's the key question we are asking. Over the next 3 years also, the operating cash flow seems to, of course, go 10x from almost 40 to 50 crores in FY26. This is, of course, the average of brokerage estimates, expected to grow to 522 crores. Despite that, with the new ventures in PCB as well as the OSAT and the semiconductor facilities, this will lead to a pressure on the free cash flow, down 860 crores in FY26 itself, but doesn't get in the positive territory at all until FY28, and we're still waiting 29 numbers from brokerages, but that is the picture for the counter as we speak. What do you have to watch for in H2 of FY26? The Q3 results will be critical for the company in terms of reporting, cash flow management as well as working capital. Revenue of 4,500 crores is what's estimated compared to 2,800 crores they did in last year, 25. Second key point is guidance of lowering working capital to 7 to 80 days, and this is the most crucial for Kaynes Technologies, and a $1 billion revenue target that remains in FY28. What is our analysis though? There are investor concerns at the moment on the negative free cash flow which will be generated in the next 3 years, consolidated as well. The company had stated to NDTV Profit in the previous interviews that they will not need another equity fundraise, but with the growth capital as well as the worsening position of receivables, that seems to be one of the key aspects. And finally, if the company doesn't manage its working capital, it will need another fundraise. That will be something that investors will be a little wary of based on the company's current share price performance. So that's the profit intelligence segment on Kaynes Technologies. A lot more questions than answers at this point of time.
Absolutely, you said it, and what a comprehensive analysis that was. Thanks so much, Puneet, for that. I want to go across now, and we're winding down the day's trade. Shivangi, I want to go across to you, just in case you have any ideas for quick trades that someone might want to initiate at the end of trade today.
So for today, of course, we're looking at the financial and the NBFC space stocks. Manappuram Finance is one such space which has seen excellent surge in volume and price in the last couple of hours. So, positions it quite well for a good levels here, for a good momentum. It has surpassed its previous hurdle zones as well, trading at its, life high territory as of now. We are seeing that buying is emerging even at these levels. It did make a lot of attempts previously in the last 10 trading sessions. Twice it did attempt to cross these levels, but today the kind of momentum that we're seeing is positioned to take the stock higher to 333 levels with a support of 315.
Okay, so that's with regards to the BTST calls that we're talking about as we speak. You know, another stock that I want to talk about is even a Camlin Fine Science, and this is on the back of an initiation report that stock is seeing some smart moves today. I mean, you know, Incred is very bullish, 480 is what their target is on the counter, 6% upside coming in on that one. Mr. Chokalingam, any view when it comes to Camlin Fine Science?
I find valuation quite stretched, so I would avoid it.
Sorry to interrupt, but they're talking about vanillin, which is essentially what you put in stuff to get the flavor of vanilla.
Correct.
Which, and you obviously know a lot about that because you know about the beverage space. But then it's an interesting play on that, right? Because their customers would be global, aren't they?
Customers will be global, and sourcing is also very much global when it comes to vanilla, right? Vanillin, and vanillin is one of the most expensive. I mean, we might not even understand the kind of rates that go around when you're talking about, you know, the value of vanillin overall. But this is a very interesting play. In fact, Shivangi, what are charts indicating for this one?
So, of course,
Synthetic.
talking about this stock, we've seen that of lately there has been a lot of recovery that has been attempting from the lower levels. But then again, we've seen that on the monthly basis, this stock has consistently made lower highs, lower bottom from the last 7 months. So clearly there has been momentum that has been lacking here in Camlin. But again, we've seen that, the support levels have been, respected from the last 15 odd trading sessions. So definitely 143 would be an important support to watch out for this one. And upside still remains capped. We are looking at 155. Which it did kind of cross today, but it failed to hold at these levels. So it would be important for this stock to hold above 155 for the next fresh leg of momentum to begin.
Just, correct myself on Camlin Fine as well, because when Alex just mentioned about vanillin, it was vanilla which was in my mind. Vanillin is the synthetic version of vanilla which people have started using, which cost around $32 per kg when you talk about the US market, whereas the cost of vanilla is very high. So that's where the use of vanillin has increased as well. And I think that's the play that you're betting big on, and that's what Incred is betting big on as well. But very quickly, a few of the other names which are buzzing in trade. You have Infoedge on the JobsSpeaks data 2025 that did come in. Two things that caught my eye. Insurance, hospitality, good growth coming in on both these aspects. And it was the non-IT segment that saw good growth. The stock has cooled off slightly, but still trading in the positive. Shivangi, any trade with regards to Infoedge?
So, of course, Infoedge has been in kind of momentum, but, we've seen that it has been a highly volatile stock, consolidating within a very consolidative band. And from the last, 6 months, we've seen that this band has not been able to surpass. It's kind of forming a narrow triangle pattern formation on the monthly basis as well. So highly volatile, I would, recommend to, a little wait and watch and wait for this stock to stabilize. I think we have better stocks in this same pack, which one could focus on this time rather than this one.
Focus on Tata Motors PV, and there has been a kind of a downgrade coming in from the broking houses as well. And in the day's trade also it is down, trying to make a recovery as well. Mr. Chokalingam, need your views on Tata Motors PV. Here, largely we see, there is a kind of a momentum missing just because of the JLR impact, which is there. Weak numbers came in, cybersecurity incident impact was there. How is the, fundamentals looking like to Tata Motors PV? Is there any value emerging right now?
Well, see, ever since both listed after demerger, I have been favoring Tata Motor CV to Tata Motor Passenger. Now numbers also not favorable for Tata Motor PV. So I maintain the same stand. Apart from the core business, even if you look at their investee companies, Tata Motor CV has invested in Tata Capital, which is a domestic play. Tata Motor Passenger Vehicle has invested in a technology company, which is a global play, primarily on the foreign markets. So Therefore, between these two, I continue to prefer Tata Motor CV to Tata Motor passenger vehicle.
Is going for a Tata Motors CV versus a PV, seeing the kind of CV upcycle that everyone is betting big on as well. And it's not only Tata Motors CV, right? Even other companies in the CV space are demanding the same kind of interest.
So, and it's not just, so when you say CV, of course, you generally talk about MHCV, you talk about LCV, you talk about ICV. Right. But you extend that to tractors as well.
Yeah, absolutely.
Because there is a big play there, and which is why Mahindra and Mahindra is something you focus on, right? Because
so
SUV
from Mahindra to your Escorts, Ashok Leyland,
and your financing companies also make it the richer.
Shriram Finance, right, is coming. Chola is coming to play as well, and both of those counters have been buzzing in trade pretty much over the last couple of
days. Let's ask Mr. Chokalingam, quick view. We've asked you about specific companies, but we didn't ask you about M&M. Would you have a positive view on M&M? Because it seems that if that demand for auto, for SUV, plays through in the fourth quarter, heads into FY27 as well, and tractors are firing, then it's firing on all cylinders.
You are absolutely right. You know, one best way to see the merit of M&M is look at its performance in SUV, that is in automobile space. When all the competitors were stagnating or growing very poorly, this company has done phenomenally well. Now with the GST reform, I believe this should do better, continue to do better going forward. And second, unlike other automobile competitors, it has got a tractor segment, which is a dominant one, highly profitable, and which is growing in a strong double digit. And tractor also got a GST, benefit in the recent reform. So I completely agree. It's good to hold, even buy on declines for medium to long term.
Declines, yeah.
Yeah, absolutely. You know, one of the stocks that we haven't yet spoken about today, and we've been speaking about FMCG, but we haven't spoken about Avenue Supermarts, right? Because the stock is up and about 5% higher today. I wonder if Mr. Chokalingam would look at this, because let's face it, Mr. Chokalingam, it's not a stock that has been a favorite in the recent past, and investors have had to have quite a bit of patience. Would you say that now is a good time to start accumulating if that FMCG upcycle is supposed to take place?
I would hold it because the physical stores are not doing that well. The competition from quick commerce and e-commerce is hitting them. Yes, Avenue DMart also started, but I still believe it's a small percentage of the total revenue. So I would give a whole recommendation, probably wait for December results and understand better, and then I would review.
Okay, that Avenue Supermart, strong moves in today's session. Shivangi, a quick view when it comes to Lemon Tree Hotels. That stock is seeing some strong momentum and a spike in trade as well. Would you play the momentum on a Lemon Tree Hotels?
Now, of course, these stocks had been dampened because of the global issues. But then overall, we've seen that on a monthly basis, it is attempting a recovery, even though the longer term structure still remains little dampened. We've seen a good amount of short covering today, and it has recouped the losses of the last 3 trading sessions. But then again, we've seen that this stock is still trading below its 50 exponential moving average. So I would wait for it to cross 158 level, which is the next level. So if it crosses 158, then we could see an upside move towards 165. But this would be an important level to watch out.
All right. Thanks a lot, Shivangi and Mr. Chokalingam, for giving your time and giving your views on both fundamental and technical perspectives. But looking at the markets, a very range-bound move in the markets. But of course, in the last hour of trade, there was some recovery in the Nifty and actually closely defending its 10-day EMA levels as well. Roughly 26,140 are the levels. Nifty Bank also, the down tick is much more. Their recovery was a bit less, down almost 150 points. Let's look at the stocks in the Nifty, what has happened, the constituents, and likely the top gainer has been, you could say, Titan. The stock is up 4%, and the larger IT names, that's where the short covering is coming. HCL Tech, and even you could say like the other larger names as well. But as we move towards the closing, the important selling which has happened in the Nifty index, this of course are the stocks which are seeing a big selling pressure. They are including names such as Power Grid, Tata Motors, Max Health, Maruti, and Sipla. That's where the downtick is coming. Stock is down 4% Sectors also, let's see how the movement has happened. And profit booking coming in, PSU Banking, Realty, as well as in auto space, but IT has been doing really well. We need to check the short covering data today. Consumer durables also doing well. India defense, also some momentum is there, but largely we are seeing a range bound movement with the sentiment turning a bit negative. Let's pull out the advanced decline ratio to see where the markets stand. There were gyrations throughout the day's trade, but eventually it's all even Stevens, 1:1, bulls and bears closing day's trade. And let's pull out, apart from this, the mid cap and the small cap index. We had given you an analysis also. Mid cap index also showing strong recovery. Let's pull up the small cap index. That's where the breadth is increasing for the last 5 sessions. We had told you at 230, and look at that. This has happened today also. That means value buying is coming in the small cap space. It's not a sell on rise market. Also, these are the important developments, but let's see the BSE 500 stocks where the contributions matter a lot. Broking upgrades coming in, Tata Elxsi, KYC Tech, even the IT stocks doing well in trade, most of them they're a very value buy. Embassy Development, some blocks have started coming in. Avenue Supermarts also up almost 5%. Amongst losers, we have having some chemical names. CSB Bank, there's a profit booking in most of the counters. Interestingly, Rain Industries and Euroca, Forbes also make it to the list. So these are the important stocks which were in focus. That's all, folks, for today at India Market Close. Up next is Market Express by Himangshi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and the global cues that could really shape tomorrow's session. Let's get you straight to the top story. So let's see how the markets have fared today first up. So it was a choppy session on Dalal Street, if I may say, as Nifty has tested the 26,100 levels. If we talk about the benchmarks, they have, however, managed to erase most of the day's losses in the last hour recovery. And broader markets have outperformed the benchmarks today as both the mid-cap and small-cap index ended the day with modest gains. Talking about the sectors, so many of the sectors have shut shop in the red with auto and oil and gas leading the losses. Meanwhile, IT and pharma have remained resilient. Now let's kickstart the show by talking about the Nifty's top losers. Sipla's Greece-based partner has come under US FDA scrutiny. So receiving a Form 483 with 9 observations, so the regulator has flagged serious issues, including contamination risk, poor manufacturing practices, and also unusually high particulate, reject limits. So another key concern was inadequate investigation into out of the specification results along with data integrity lapses. Now this development is significant as pharma manufacturers, that is, the arm, the Greece-based arm is, Sipla's biggest drug in the US market, raising questions about potential supply chain impact. Next up, we have Tata Motors passenger vehicle that was under pressure after a tepid set of Q3 numbers, and production has seen mixed trends in December. Output of the Curve and Sierra models have fallen down sharply, 78%, while Safari and Harrier have and in fact Sumo, they have surged 81%. So despite these swings, CLSA remains bullish, maintaining an outperform rating with a target of 450 rupees. The brokerage also flags near-term challenges from a recent ransomware attack and also tariff concerns impacting FY26 free cash flow. However, it expects scale revival to drive the Jaguar Land Rover margin recovery, while the new launches should boost the India business. And JP Morgan is staying positive on the IT sector, maintaining an overweight rating on KPIT Technologies with a target price of 1,400 rupees. So the brokerage is noting that demand in the auto, ER and D segment is improving. And as OEM clients prepare to restart their R&D programs, Europe is leading the recovery, followed by APAC, while the US is also expected to take a couple of more quarters to bounce back. JP Morgan believes that KPIT is well positioned to benefit from this trend. And JP Morgan has upgraded both Tata Technologies and Tata Elxsi to neutral from underweight, signaling improved confidence in the auto, ER and D space. And the brokerage has raised its target price for Tata Tech to 710 rupees and Tata Elxsi to 4,800 rupees. So this comes as demand recovery gains traction, and this is also led by Europe and APAC, while the US is also expected to follow in the coming quarter. So this upgrade reflects optimism around the OEMs restarting R&D programs and also stronger outlook for engineering services. In fact, Titan has sparkled in trade after the company reported a robust business update for the third quarter. and this was driven by strong festive demand and also sustained traction across the key categories. So jewelry growth came in better than expected, aided by higher selling prices and also a healthy uptick in the studded pieces, which has seen mid 20s growth. So domestic business has surged 38% with like-to-like growth in the low 30s. And on the earnings call, Titan has outlined ambitions to lead in both the lab-grown and natural diamonds. So brokerages remain mixed. Morgan Stanley maintains overweight while Citi stays neutral with a target of 4,125 rupees. And Senco Gold is shining bright after reporting a stellar third quarter update. Revenue has surged 51% year-on-year, while growth for the first 9 months stood at 31%. So same-store sales has also jumped 39%, with diamond jewelry up 36%. Gold prices have also seen a sharp 65% rise year-on-year, boosting the overall performance. So management remains confident of achieving over 25% annual growth and also continues its aggressive expansion strategy, launching 4 new franchise showrooms in Q3 and also staying on track to open 20 new outlets in FY26. And white-collar hiring in December 2025 has rose 13% year-on-year, and this is driven largely by non-IT sectors. So insurance led the surge with a 34% jump, and this is supported by a 57% increase in the fresh hiring. So hospitality has posted 29% growth with Mumbai and NCR as key contributors. Banking, however, has seen a 7% decline while the startups continue to hire actively. Hiring of seasoned professionals grew 15%, and this was led by oil and gas and also real estate. So non-metro cities like Kochi and Jaipur have emerged as strong, fresher hiring destinations, and this is signaling broad-based recovery in the employment trends. Let's look at some brokerage notes. Citi has reiterated its buy rating on Apollo Hospitals and also raised the target price to 9,600 rupees, calling it a high conviction pick. So the brokerage believes the near-term challenges, including losses from new hospitals and flat margins, are already priced in. So Citi sees attractive risk reward and also expects a strong ramp up in facilities to drive the margin expansion by FY28. It also highlights, Healthco's transition from being a drag to becoming a value creator, reinforcing confidence in Apollo's long-term growth story. And let's keep it going with the brokerage notes. InCred has maintained its ad rating on Camlin Fine Sciences and has raised the target price to 480 rupees from 425 rupees. So the brokerage also expects the company to benefit from the tight, vanillin markets in the US and also Europe, supported by its high-value blend portfolio. So prices for vanillin are projected to top $32 per kg by the second half of FY27, and this is reinforcing a positive outlook for Camlin Fine. Let's look at more brokerage notes. Morgan Stanley has downgraded Indian hotels to equal weight from overweight, trimming its price target to 780 rupees from 811 rupees. The brokerage says that while Indian hotels remains a well-run business, its current valuation looks fair. It also expects limited upside surprises in the industry's RevPAR cycle and also notes that the FY27 EV versus EBITDA already reflects, the risk-reward balance. And Lodha Group has reported a strong business update for the December quarter. Pre-sales surged 25% year-on-year to 5,620 crores rupees, signaling improved sales momentum. However, the collections have dipped 17% to 3,560 crores. In a major development, the company has announced large project additions worth 33,800 crores in gross development value, further strengthening its growth pipeline. Now, Lodha continues to focus on expanding its portfolio while maintaining robust sales performance. And Inox Clean Energy has raised 3,100 crores through an equity funding round, diluting close to 6% stake to a mix of foreign and domestic investors. Now, the fundraise values the company at a pre-money valuation of about 50,000 crore rupees. So, the company has said that the proceeds will be used to scale the capacity across renewable power generation and also the solar manufacturing. So Inox Clean is targeting 10 gigawatts of installed power capacity by FY28, and the company is also preparing to file draft papers for its IPO for this quarter. Now on to the upcoming budget. Official sources indicate that India's Finance Ministry is finalizing Budget 2026 proposals centered on deregulating and decriminalizing the business rules. Now, this is being done to simplify the operations and also boost the economic efficiency. Now, the key plans include streamlining registration and approval processes, scaling back routine inspections, and also adopting risk-based tech-enabled oversight. Now, the government is aiming to restrict the criminal penalties to serious offences, while procedural lapses will be decriminalised. Now, these reforms are part of a broader strategy to enhance the productivity, ease of doing business, and also India's growth trajectory. Now, the budget will be presented on February 1st with consultations underway with state finance ministers. And general insurance companies has reported healthy premium growth in December, and this was led by both private and public sector players. Now, Go Digit and ICICI Lombard have posted double-digit increases in the gross written premiums, while state-owned New India Assurance has also recorded strong growth. Now, so overall, if we talk about private sector general insurers have seen premiums rise by 15% year-on-year. Now, the data points to steady demand across the motor, health, and other non-life segments towards the end of the year. And Elon Musk's artificial intelligence startup XAI has closed a massive $20 billion funding round with heavyweights like Nvidia, Fidelity, and Qatar's sovereign wealth fund coming on board. So this funding, which has been in the works for months, will fuel XAI's infrastructure built out and also accelerate the rollout of AI products at scale. Now, what's interesting is that the deal structure, a large part of the money will be used to buy Nvidia chips, which XAI plans to rent out over 5 years, offering investors a new way to limit the risk. And it could also well become a template for future big-ticket AI financing. And staying with global expansion stories and Indian aviation first, this afternoon, now Indigo has officially made aviation history, becoming the first Indian airline to induct the Airbus A321XLR. Now, this marks a key milestone in Indigo's international expansion plans. The A321XLR will initially fly long-haul routes from Delhi and Mumbai to Athens, helping the airline tap medium-haul global markets more efficiently. Now, Indigo is planning to induct one more of these aircraft by the end of this financial year, underlining its ambition to significantly scale up its overseas footprint. Now, from expansion to a caution, a major global recall now grabbing attention here. Nestle has announced a precautionary recall of select infant formula products across multiple countries after detecting a bacterial toxin in one of its ingredients. Now, the affected batches contain arachidonic acid, oil contaminated with cerulide, a toxin that can really cause severe vomiting and diarrhea, while Nestle says no illness have been reported so far. Parents are being advised to stop using the recall products immediately, and public recalls have been issued in several countries, including France, Germany, and Hong Kong, with the company working closely with regulators and suppliers to identify the root cause. And back home now, and a big push for domestic manufacturing. Tata Power Renewable Energy set to build India's largest ingot and wafer manufacturing facility in Andhra Pradesh with an investment of over 6,600 crore rupees. So the gigawatt greenfield project at Nellore will support solar cells, modules, and semiconductor manufacturing, aligning with the centre's push to cut the dependence on imports. Now, the state government has cleared the project and also allocated land along with support for a captive green energy plant. Once operational, the facility is expected to generate around 1,000 jobs and also significantly strengthen India's clean tech supply chain. In fact, China's Lenovo, the world's largest personal computer maker, has announced a partnership with US AI chip leader Nvidia to help AI cloud providers rapidly deploy the data centers. So this announcement was made in Las Vegas as Lenovo focuses more into artificial intelligence, and the company also unveiled Kira, which is a personal AI system designed to work across Lenovo and Motorola devices, including PCs and smartphones and also wearables, while running in the background. So Lenovo also showcased concept AI glasses and an AI assistant wearable under Project Maxwell, offering users real-time support. Now turning to capital markets, another tech IPO could be lining up. Popular chat platform Discord has reportedly filed confidentially for an initial public offering, adding momentum to the growing pipeline of tech listings. So the San Francisco-based company, widely used by gamers and developers, has over 200 million monthly users. Discord is said to be working with Goldman Sachs and JP Morgan on the potential listing. Though deliberations are still ongoing, the company says that its focus remains on building sustainable business. Now let's look at some national news. The Supreme Court has raised sharp safety concerns over the presence of stray dogs in public spaces, saying that you simply cannot read an animal's mind when it's in a mood to bite. Hearing a clutch of petitions on rising dog bite incidents, the court has said that prevention is better than cure and stressed that roads, schools and institutional areas must be kept clear of stray dogs, not just because of the bites, but also because they can cause accidents. Now, the bench has rejected arguments that dogs are mostly confined to compounds, calling such information outdated. Now, the centre, meanwhile, has suggested allowing resident welfare associations to decide whether, dogs should be allowed in gated societies, underlining the need to balance animal welfare with human safety. Now, from safety on the streets to travel disruptions in the skies, Air India has issued a travel advisory for passengers flying tomorrow morning, warning that dense fog and poor visibility over Delhi and parts of North India could disrupt the flight operations. So the airline is saying that the weather conditions may have a cascading impact across its network, leading to delays, diversions or cancellations. Air India has assured passengers that ground staff will be available for assistance and also highlighted its Fog Care initiative, under which the travelers are informed in advance and also offered flexible options. Now, passengers are being advised to, check the flight status before heading to the airport. And that, fog is part of a broader winter chill tightening its grip. Winter has firmly set in across North India, with Delhi recording its first cold day of 2026. Snowfall continued in several hill states, while temperatures dropped sharply across the region. The IMD has forecast more light rain and snowfall in Jammu and Kashmir, Himachal Pradesh and Uttarakhand. So in the national capital, maximum temperatures hovered between 13 and 16 degrees Celsius, with cold day conditions likely to persist. So the weather office, says a cold day is declared when maximum temperatures fall significantly below normal, and a trend now clearly visible across northern India. Now, from the cold weather to a worrying public health warning from central data. A stark report by Jal Jeevan Mission has revealed a serious public health concern in rural Madhya Pradesh. Now, more than 1/3 of drinking water samples in villages are unsafe for human consumption. Now, according to the government's own assessment, only 63% of the samples have passed the quality test, well below the national average. Now, the findings are even more alarming in the government hospitals, where nearly 88% of water samples have failed microbiological safety checks. Schools weren't spared either, with over a quarter of samples found contaminated. Now, the report is raising urgent questions about water safety, healthcare risk and accountability at the ground level. And India has voiced genuine concern over the unfolding crisis in Venezuela following the US military operation that led to the capture and detention of deposed President Nicolas Maduro in New York. Now, External Affairs Minister S. Jaishankar, speaking from Luxembourg, said that New Delhi is closely monitoring developments and has urged all the parties to prioritize the well-being and safety of the Venezuelan people. Now, calling for dialogue and a peaceful resolution, he also underscored India's long-standing, warm ties with Venezuela, saying that what matters most now is that Venezuelans come out of this turbulent period safely. Now, Washington's actions have sparked global debate, but India's focus remains on stability, humanitarian concerns, and peaceful engagement. In fact, Prime Minister Narendra Modi has spoken with the Israeli Prime Minister Benjamin Netanyahu, conveying New Year greetings to him and the people of Israel. In a post on X, the Prime Minister has said that two leaders have discussed ways to further strengthen the India-Israel strategic partnership in the year ahead. They also exchanged views on the evolving regional situation and reaffirmed their shared resolve to fight terrorism with greater determination. Now, the conversation underscores the continued strategic convergence between New Delhi and Tel Aviv, particularly on security cooperation and counter-terror efforts. Now, amidst upheaval in Venezuela and the arrest of President Maduro, US President Donald Trump has announced that interim Venezuelan authorities will transfer between 30 and 50 million barrels of sanctioned high-quality oil to the United States at the market price. Now, Trump has said that the proceeds will be controlled by him to ensure benefits flow to both US and Venezuelan people. Now, the oil will arrive in the US via storage ships and be unloaded directly at US docks under Energy Secretary Chris Wright's direction. Now valued at up to $2.8 billion at current benchmark prices, the deal underscores US efforts to leverage Venezuelan energy assets amid political upheaval. Now, more on this evolving story. The US administration has informed Venezuela's interim leader, Delcy Rodriguez, that it must sever economic and strategic relations, with China, Russia, Iran, and also Cuba. Now, Washington also requires Venezuela to partner exclusively with the US on oil production and also prioritize US buyers. Now, the move follows US efforts to control the Venezuelan oil output and also finance without deploying troops. Senior officials are saying that tankers are currently full, adding leverage to US demands, and meetings with American oil companies on investments are expected within the week. And Trump's assertive foreign policy posture isn't limited to Venezuela. The United States has once again raised eyebrows globally by saying that the use of military force to acquire Greenland is always an option. Now, the White House said that the President Trump views control of Greenland as a national security priority to counter Russian and Chinese presence in the Arctic. European leaders and Canada have strongly rejected the idea, stressing that Greenland belongs to its people, and any US attempt to seize the Danish territory would severely strain the NATO ties. Greenland's own leadership has repeatedly said that the island does not want to be part of the United States. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could set the tone for the next trading session. Thanks for watching. I'm Himakshi Bhagna. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today.
Market ends lower for the third straight session after pairing early losses. Sensex recovers over 300 points from the day's low, while Nifty closes above 26,100. Pharma closes as a top sectoral gainer, while broader markets outperform the benchmark. Keynes Technology tells NDTV Profit that tariffs will not have a significant impact on the company, says the semicon major invests in the US to avoid tariff. Budget 2026 will focus on deregulation and decriminalization. Sources say Finance Ministry is examining proposals from multiple ministries and departments to simplify the rules and procedures. Assam President calls for subsidies for the MSMEs to aid the tariff blow during the budget. Stresses on the need for process simplification to reduce imports and increase domestic production. ThyssenKrupp confirms that the company is in confidential talks with Jindal Steel International for the sale of steel business. Spokesperson tells NDTV Profit that both the parties will address all the relevant parameters, including valuation and obligations. President Donald Trump reiterates his good relationship with PM Modi, but underscores that PM Modi is not happy with him over the high tariffs US has imposed on India. Donald Trump also says Venezuela will be turning over 30 to 50 million barrels of oil to America, announces that the Venezuelan oil will be sold at market price and he will control the funds from the oil sales. External Affairs Minister S. Jaishankar says India is concerned about recent developments in Venezuela, urges all the involved parties prioritize the well-being and safety of the Venezuelan people. Prime Minister Modi speaks to his Israeli counterpart Benjamin Netanyahu. Both the leaders discuss ways to strengthen the strategic ties between their countries, reaffirm their shared resolve to fight terrorism with greater determination. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Speaking on the latest, the Ministry of Statistics and Program Implementation, also called MOSPI, has released, in fact, its first advanced estimates of GDP. The government sees FY26 GDP growth at 7.4%. On a year-on-year basis, government sees FY26 GDP growth at 7.4% versus the estimated figure of 7.5%. I, in fact, have my colleague Shrimi Chaudhary joining us to understand the first cut of these numbers. Shrimi. As Shrimi joins us for helping us understand, remember viewers, this is an extremely important data point as it would give us some kind of idea as to how the budget would be planned. The union budget is going to be announced on February 1st. NDTV Profit also reported that to you. The GDP estimates, remember, comes at a time when India's consumption has picked up significantly, also bolstered by key policy reforms that have given it a good jolt. And remember, most economists were also expecting the GDP to be above 7%, and the latest data as released at this point in time shows that the government sees FY26 GDP, that's GDP for this financial year 2026, at 7.4% versus the estimate of 7.5%. So there's a bit of a drop there, but we'll have to see what our experts have to say. We'll soon have our experts joining us as well into this conversation to help us understand the first layers of these numbers. But the big point here is the fact that we have the GDP numbers that have come in. We also have, as I was saying, Gaura Sen Gupta, Chief Economist at IDFC First Bank, and Radhika Rao, Senior Economist, Executive Director at DBS Bank. Thank you so much, ladies, for joining us in this conversation. Let me start with Gaura. Gaura, are these numbers to the tune of what you expected, and what does this mean for the budget?
So you'll have to tell me the nominal GDP. So real GDP has come at 7.4% for FY26. For us, our expectation is higher. We see definite upside risk. We are at a 7.6% in real growth rate terms. If you look at high frequency indicators, there is a broad-based pickup of growth in Q3 for both urban, rural, thanks to the GST cut. Rural, in fact, had begun to pick up in Q2 itself. We are also seeing quite a pickup in consumption, in production activity. You look at production indicators, freight movement. Also, there's a whole combination of monetary policy stimulus, fiscal support is showing signs, and especially in the Q3, and we expect Q4 also to be on the higher side. As per our estimates, you will also get the transient support of the deflator. The GDP deflator growth will turn negative in Q3 because WPI is negative, so that will further boost real growth rates. So we see upside risk to the 7.4 real GDP growth. For us, it's tracking at 7.6 versus the 7.4. For the union budget, the budget had penciled in an 8% nominal GDP growth. I'm not sure what the advanced estimate nominal GDP growth is, but we see some upside risk there also. Our estimate for nominal GDP growth is tracking at around 8.2 versus the budgeted growth of around 8.
Okay. Notice. So nominal GDP growth was seen at 8% versus 9.8%, and the GDP growth is being seen at 7.4% versus 6.5% on a year-on-year basis. Some other key data points that are kind of emerging at the moment is also the fact that FY26 agriculture sector growth was seen at 3.1% versus 4.6% in FY25. So there's been a bit of a drop on those metrics. I'd like to get in Radhika Rao on this. How do you see this particular drop, Mr. Rao?
Hi, Malika. I think certainly what we were looking for, obviously, the farm sector is very important in terms of where the overall growth grows, and it seems to show around the 3% mark. But if you look at the other breakdown, it's along what was the momentum, I think, in the first 2-3 quarters of the year. Of course, we have official data only for the first 2 quarters of fiscal 26. But the third quarter also, just like Gaura mentioned, is going to see quite a strong upside. In fact, our own estimate for growth is much stronger. It's at about 7.7% for fiscal 26 because it's taking in a strong Q3 and slightly sub 7% Q4, which, overall average is giving us a quite high number. In terms of the drivers, I think investment and consumption would both be quite important. And I think both of them, at least the breakdown initially available, seems to suggest that that's what MOSPI is also factoring in. And insofar as the nominal GDP is concerned, it seems to be showing at 8%. I think the actual number will be a bit higher than that. But there's still a gap between what the budget number set at 10.1 and what the prevailing nominal GDP seems to suggest. But let me also add here that the pace of nominal GDP is one thing, but if you see the nominal size of the economy, truth be told, fiscal 25 was actually bigger than what was budgeted. So fiscal 26 need not be that much bigger. Even with that about 8.2, I think we will be quite safe in terms of the fiscal deficit numbers. So overall, I think the numbers for first advance estimate are more or less where the markets expected. But I think when the second advance estimate comes out late February, it will be affected by a couple of things. Firstly, of course, it's going to be a rebased data. So we will be talking about completely different set of, breakdown and numbers when we speak again on this. But even apart from that, if you had seen in the past as well, there usually is an upside bias to this first advance estimates, because this captures data from about November, a bit of December numbers, and there is still more, nearly a quarter to go. So routinely seems to usually has an upside bias to the actual or revised numbers.
All right. But you did mention that investment and consumption would be key influencing factors on this number. We have my colleague Shrimi Chaudhary also joining us to help us understand the first cut. Shrimi, what are you gathering from these numbers? What kind of a story do they tell?
Yeah, very clearly, if you see, there are two important headline numbers. One is, of course, the real GDP, which is more or less on the expected line, which is 7.4%. And the nominal GDP, which is 8%, market expected around 8.3 to 8.4%. Now, nominal GDP is, of course, very important, and that's the number to actually watch out. government, how they're looking at the revenue, the spending and overall fiscal deficit. So that's the key number we need to watch out, and that is coming at 8%. Now at 8%, if you compare that with the previous assumption, previous budget assumption for the current financial year, it was 10.1. So is it a kind of risk somewhere on the growth? Clearly no, because with 8% of nominal GDP, it's pretty clear that government is on the, is on the track as far as fiscal numbers are concerned. However, there could be some changes you could perhaps see in the revision of the tax numbers, the revenue numbers in the upcoming budget. The another important factor which need to be watched out, that what is government going to have projection for the next financial year in terms of nominal GDP growth, because 8% is giving you that much of cushioning because of the broad base in the FY25, which is around 9.9%. So clearly that sort of cushioning is coming, but definitely the government will take a call on how they're going about their targets, the budgetary targets in terms of the revenue projection, in terms of their expenditure, as well as whether they are able to keep the fiscal deficit target at 4.4%. Is this first estimate which is going to decide? Malika?
Yes. As you mentioned, the fiscal deficit, and in fact, Radhika Rao was also talking about it. Ms. Sengupta, I'll get you in on the fiscal deficit number, because, the GDP figures is a very important factor when it comes to managing the fiscal deficit. How do you think, now that the numbers have come out, will the fiscal deficit for FY26 be impacted, and what direction is it going to take?
I just want to give one caveat. So the 10.1% nominal GDP growth that was budgeted, that was based on FY25 RE of GDP. So what happened was FY25 nominal GDP turned out higher than the RE. So if you put the implied budgeted growth rate of nominal GDP on FY25 actuals, the growth rate, budgeted growth rate is actually 8%, not 10.1%. So if the advance estimate is indicating the nominal GDP growth is at 8%, which is on top of FY25 actuals, then it's in line with the union budget. It doesn't add or reduce. From a fiscal perspective, this has been a very challenging year for the centre as well as state governments in terms of tax collection. For the centre, we see quite a shortfall in tax collection. Our shortfall in gross terms is tracking at around 2.5 to 2.8 trillion in gross terms from the budgeted target. And this is reflecting the substantial income tax cut, the substantial GST cut. On top of that, slowdown in nominal GDP growth from a 9.8 in FY25 to an 8% growth estimate for FY26. As per us, nominal GDP might be slightly better. So we are building it maybe at an 8.2. Versus the advance estimate of an 8%, or the budgeted estimate also of an 8%. So there is a challenge that has happened on the revenue collection front, but we still expect the centre to meet the 4.4 target. Reason being, non-tax collections have been very robust. You have an RBI dividend, which is higher than budget estimate. The centre is also earning more on excise duty collections because they had hiked petrol diesel tariffs in the month of April. They had hiked the duty on petrol and diesel. The other support is PSU dividends, especially oil PSU, coal PSU dividend. That will be higher than what is budgeted. So, and on the expenditure side, especially revenue expenditure side, we see sources of saving. One is the just-in-time cash management on the funds that the centre provides to states for expenditure on schemes. There, every year, over the last few years, the government, the centre has been saving money because of just-in-time cash management. The other source of savings is that interest cost for the centre is tracking lower than the budget estimate. Plus, there are various other areas where the certain ministries are tracking lower than the full year budgeted number, and now we are entering Q4, so they cannot spend, the full budgeted amount because there's restrictions that are placed in Q4. So overall, even though the tax collection will be weaker than target, the fiscal deficit is still met at 4.4.
Thanks for that clarity, Gaura. This is Shrimi from Delhi. I wanted to understand that with the nominal GDP coming at 8% for the current financial year, what's your expectation on the next financial year, that is FY27? Because clearly this will going to be the base for government to decide on the nominal GDP for the next financial year. So what's your estimation?
So as Radhika mentioned, we'll be getting the new base GDP. So our estimate is still on the old base, but it shouldn't make too much of a difference. Our estimate for FY27 nominal GDP is tracking at around 8%, is around 10%. So from an 8.8% around FY26, it picks up to 10%. The pickup is led by the deflator growth picking up, because next year you will have a base effect which will lift both CPI as well as WPI inflation. So we do expect the nominal side to pick up to around 10% in FY27, which should be a little helpful in terms of tax collections. In real terms, we expect real GDP growth next year to be around 7%. It actually could be higher, but for now we are sticking to a 7% for FY27.
Okay. Radhika, I want to come to you just for understanding, because as we all know that from February 27th, when you will have the second advance estimate along with your Q3 numbers, the base year will change. The base year will be now 22-23. So all these numbers, we have seen Q1, Q2 with 7.8% and 8.2%, and now this first advance estimates of GDP. All these numbers are set to change anyway. So what's your sort of view on that, where these numbers stand?
Thanks, Shrimi. Certainly, I think for all of us, I think there's going to be a big bunch of changes coming. GDP, inflation numbers are also going to look different. Of course, the base year for inflation will be, will be 24. And then you've got IIP, which perhaps will be released later in the year, April, May, where we're going to see another set of change because of the base year. Now, going with the past revision, I mean, if I were to look at the 2015 revision, of course, it's hard to pen at this point where exactly the number would be. But I would think there would be a slight upside bias rather than a downside bias to the numbers that have been released. In 2015, we also had the GVA series that was introduced. We moved from factor prices to market prices. So quite a bit of methodology changes also that happened back in 2015. And I think there would be more such at this point, because you will have more granular data, you will have more sectoral data that will be introduced as well based on what Mosby has been telling us in the past few weeks. So putting all these things together, I would say that fiscal deficit for FY26, to our mind, is safe to the extent that we do think that the 4.4% of GDP target will be met. But fiscal 27, the focus is going to change. Your nominal anchor or target for fiscal 27 is going to be debt levels and deficit levels, right? So the finance minister had mentioned in last year's budget that you're not going to be looking at just the deficit point target anymore. It could be a range, and you will be looking at in cohort with where the debt levels are. So from that point of view, I think with a 10% nominal GDP assumption, I think a 4.3 or 4.2% of GDP sounds doable. But I also add here that from here on, I don't think the space of consolidation is going to be very aggressive. I think from pandemic, we already at less than half. But I don't think in the next 4-5 years, the idea is to pursue very strong fiscal consolidation. I think there is a very clear agenda, at least to our mind, that the government wants to back all its new and strategic priorities. So which means that we want to get a bigger piece of the supply chain pie. We want to focus more on infrastructure outlays. It's already been mentioned about, deregulation and decriminalization. So I think the focus is more on supply side and demand side pressures, because truth be told, the global environment is extremely challenging at this point, from the trade front, from policy front, from security apparatus front, all of that, right? So I think the agenda will be to strengthen the domestic economy as much as possible. So on defense, on infrastructure, on support to states, as well as the supply chain bit. These are some of the priorities we think will come out of the budget. So coming back to your question, I think the rebase numbers, if anything, based on past experience at least, could be similar or have a slight upside bias, which essentially again plays back to the fact that the fiscal deficit targets, at least that will be set for fiscal, which have been set for 26 and might be set for 27. We don't expect a big overshoot or undershoot based on the kind of trend growth that we see.
So both of you actually, Radhika and Gaura, you're saying that the fiscal deficit target will be on track, and that is 4.4% for the current financial year. But one thing I wanted to ask, since we have seen the impact of income tax cut on the tax collection, we have reached around 73 trillion so far, and we have 1 quarter left. Do you see some sort of downward revision in the tax collection target for the current fiscal, and government would also sort of decide its next year target based on the nominal GDP?
Sure. Who's this question for?
Gaura, you
this
can answer
that. This question
is
for whom? All right. Thanks.
Gaura,
as I mentioned, we've seen, we are seeing quite a significant shortfall in tax collection. For us, gross tax collection is tracking at around 2.5 to around 2.8 trillion lower than the target. And this is spread over income tax as well as the GST collections. Income tax collections there are two reasons for the miss. One is the target of the income tax collection in the budget was very ambitious to begin with. So if you look at the budget growth rate implied of income tax in FY26 based on actuals of FY25, it's a growth rate of almost 22% in a year where you're having a substantial income tax cut. Secondly, because of the nominal GDP growth slowdown, that further adds to the slowdown in income tax. Plus, last year, the income tax got a little bit of support from the equity market performance. That's missing in FY26. So that's another drag. So yes, definitely we expect that the target for tax collection has to be revised down in the RE number for FY26, which will get presented in the union budget. We see a shortfall in both income tax as well as shortfall in GST tax collection for the centre.
Right. Thanks so much, ladies. Gaura Sengupta, Chief Economist, IDFC First Bank, as well as Radhika Rao, Senior Economist, Executive Director at DBS Bank, and as well as our Delhi Bureau Chief, Shrimi Chaudhary, for joining us in this conversation and helping us understand the various levers of the first advanced estimates of the GDP of FY26. Remember, viewers, it has come in at 7.4%. versus what was expected before. But let's move on and talk about how Indian markets fare today. The markets closed lower today as the Nifty ended in the red for the third straight session. Benchmarks underperformed the broader market indices, and Nifty Auto emerged as a top, in fact, the worst performing sectoral index, snapping its 6-day gaining streak. Most sectors ended lower except IT and Pharma. They had a good day. But let's get in my colleague Mahima for all the key highlights from today's market action. Mahima.
Well, overall for a market, it's been a topsy-turvy day in terms of where the benchmarks are concerned. They underperformed the broader markets, but well above the 26,100 is where we found the comfort zone. With regards to the broader indices, overall it was a good session. Both the mid-cap 150 and the small-cap 250 closed in the green. Nifty closed lower for third straight session. Sipla and Maruti were the top losers on the Nifty versus Titan, the top gainer on the Nifty today. Sectoral indices closed on a mixed note largely. Nifty IT was the top sectoral gainer, closed around 2% higher on the back of, ahead of its Q3 earnings. The Nifty Auto fell the most, saw the most profit booking, emerged as the top losing sector for the day. Tata Elxsi, KPIT Tech gained over 6% as JP Morgan upgraded its rating. You have Tata Elxsi and KPIT as the top gainers for the mid-cap 150. Elecon Engineering gained again 8% ahead of its Q3 earnings, and Elecon Engineering and Saregama were the top gainers in the Nifty small-cap 250 space. The advance decline ratio also indicated, almost even Stevens when it closed, because throughout the day there was topsy-turviness with regards to where the advance decline ratio stands. So this is the overall view as to how markets have fared in trade today.
So a topsy-turvy trade today, but viewers, that's all the time we had on this edition of Profit 360. Do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
For decades, Punjab has been celebrated as the food basket of India. But today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure and a skilled workforce.
इंडस्ट्री लग जाऊगी, साढ़े नौजवान मुंडे कुड़े नूं काम मिल जाऊगा। इंडस्ट्री तो ही असीं सुझाव लए ने सारे, बहुत सारे इंडस्ट्रीज बैठे ने। इंडस्ट्री तो इसी पुछिया भी की करिए, सरकारां तंग करन वास्ते जां सरकारां कोई मुश्किलां पैदा करने वास्ते नहीं बनदियां। सरकारां हमेशा सहूलतां देण वास्ते और लोकां दी तरक्की, लोकां दा जीवन पद्धर उच्चा चुੱਕਣ वास्ते बनदियां। सरकारां दा काम ही ਇਹ ਹੁੰਦਾ, जिवें लोग कहण उवें सरकारां नूं ਚੱਲਣਾ ਪੈਂਦਾ और ਚੱਲਣਾ ਚਾਹੀਦਾ भी, क्योंकि सरकारां लोकां ने चुणीਆਂ ने।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
किसान से NRIs तक, Gen A से Gen Z तक, SBI सबके लिए है।
Very good.
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
राइट टू बिजनेस हर एक कह दिंदा, बट ईज ऑफ डूइंग बिजनेस ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ। ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ।
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast track Punjab portal with priority.
पहले के जमाने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर, ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently they won the GUVNL project as well. Now let's give you the company's name. You know, what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which we are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here, and any kind of execution of B2G risk. That's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the director and CEO of Rajesh Power. He will be answering all of our queries as well, which will be putting it up. But apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. Let's understand more about this company going ahead. EPC solutions player. Apart from this EPC solutions player, the company is established in 1971 and specializes in power transmission and the distribution segment as well. And largely we see momentum coming in the stock. The stock made its debut in December 2024, and since then the stock has tripled. But last 1 year or so, the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space, and also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark in some time? So order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the distribution segment, and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Power. If you could just show the important projects. Yes, going ahead. One is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well. And large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Bari's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is of course the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I'd like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There's always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent. That's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say almost September 2024 onwards, or just before that the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, and that's the way where the concern is coming in. And because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you could expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move, but the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I've given a neutral rating when it comes to the return ratios. But come I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. In September also, this ratio was around 73%. But my concern starts coming is, even if there's a very, very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and almost you could say virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this the shareholding pattern I have given a thumbs down. Street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the 7th one is the valuations, and the company itself is having different peers, because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there, and institutional selling also seen in the counters. So valuations front, because of that, I have given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline, that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown, that's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratios, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction. And outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is of course Utsav Panchal. He's the director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very, very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space, as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour. And the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems, and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to, the new underground, the new type of conductor, which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But the competition is still there, because in Q2 you had mentioned about it. So till now that competitive pressure is coming in the distribution space for you?
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company specific to you. But Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming, and what would be your budget expectations?
So what I would like to, give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is, the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment. Just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as, the government has set up some very huge projects of substation, transmission lines and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, so that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned, so give me what are the key top 2 metrics to track, and what are that 40% growth and why you're stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1. Up to September 26. So we are seeing a very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in. And, investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is. So operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large sized projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right, let's just revise the numbers which we have given in our KYC segment, and of course, Utsav, stay tuned. I have one last question for you, but overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you as an industry spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have associate company called HKRP Innovations comes into play, where we are providing IoT based smart monitoring systems and solutions to the utilities.
All right, can you just give in some more details about this HRKP, because everybody is talking about it, and the future outlay, when the incremental benefits will start coming in from this arm, could you give us a timeline?
So basically, in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters, including substations, transformers, and everything. So we have hardware as well as software solution. And the growth outlook of HKRP is also very promising in the sense the government focus on modernizing the grid. So that is where we come in, and in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in. But they are still bullish on the budget expectations for the power industries, and net they're looking at the rating parameters, removing the financials. The outlook definitely seems like, you know, the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there, but nevertheless company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company, for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city, the BMC.